Good morning, everyone. Good morning, Hong Kong. My name is Yao Yao. I'll be the MC for today, and I work for Solana Foundation and leading the growth in APAC region. And this is one of my best friends in the space, and this is Kiko.
Hi, everyone. Welcome, everyone, coming to the stage in IRL. And we're streaming today, so 屏幕后面的朋友大家好. And my name is Kiko. I'm a builder. I've been building on Solana since May of 21. First as the COO of a DEX called Orca, and now as the co-founder and CEO of Chomp.
Yeah, Kiko is one of the OG of Solana ecosystem. 5 years, that's kind of crazy.
Longer than most relationships.
I know. Yeah, and I joined Solana like about 3 years ago, and basically witnessed how the community thrive in APAC, specifically in the Great China. And last year in Hong Kong, we hosted our first Solana summit in Hong Kong during Consensus as well. We had about like 2,000 participants last year, and this year I was looking at the Luma. We had over 3,000. That was so crazy.
3,000 is crazy, but I'm also not surprised because your team has done a tremendous job. I remember us meeting 3 years ago. There were just a budding ecosystem in Asia, and now there's a lot of people that you'll be meeting who are building and supporting the ecosystem here in Asia. We have people in Hong Kong, in Greater China, in all pockets of Asia. Because for a decentralized ecosystem like Solana, we do need those champions in every single pocket of the world. And here in Hong Kong, where it's a global centerpiece for finance, this is where a new type of decentralized financial ecosystem is celebrated and is recognized, which is why for later today, we have over 90 speakers that will be coming.
98, that's crazy.
98.
Half a great point.
Yeah, 很吉利的数字哦, 98.
That is, yeah.
So great number, a number of speakers coming on stage, and they'll be talking to you about payments, retail accessibility, institutional finance, infra, and also asset issuance. All of these are propelling the global financial system right here in Asia and Hong Kong.
And that's called Internet Capital Market. That's what we are building right now, and what Solana is leading. Especially, I think last year we have seen a lot of changes globally and also in Asia. We had more institution partners here, and we had like a broader retail user base. And I'm very excited to dive into those topics with the audience here in Hong Kong as the financial hub of Asia and of the world.
Yeah, 100%. 换中文吧。
那我们今天也非常开心，能够把 Solana Accelerate 带到香港。我们去年5月份在纽约办了我们第一场 Accelerate 的活动。那如果伙伴们熟悉的话，我们去年也在中国大陆的4个城市进行了小规模的 Accelerate 的活动。今天是我们在香港的第一场大型的活动。那我们也很高兴能够在这里跟我们的传统的 Solana 生态的 Builder 伙伴们，以及我们的很多的 Institution 和机构的伙伴们一起团聚在这里，甚至我们今天还有一些监管的伙伴们一起来讨论亚太金融的未来，以及 Solana 是如何打造互联网资本市场的。那现在也是一个非常特别的时间，因为马上春节将至，我其实非常感谢大家能够在这样子一个特别的时间来到香港，跟我们一起团聚，让我们一起为2025做一个好的收尾，同时呢，也为2026的马年做一个好的开头。那在马年到来之际，也想跟 Kiko 一起，我们祝大家新春快乐，马年大吉。Okay, as I'm very excited to welcome my colleagues from Solana Foundation to be on the stage with me and share a little bit more about what we are doing here. So welcome Lou and welcome Jenny. Hi.
Hi everyone.
Yeah, I already gave myself introduction, so I'll pass the mic to you guys.
Hi everyone, my name is Gianni. I'm usually based in New York. I'm very excited to be here today. At the foundation, I work a lot with capital and allocators, trying to tell folks about Solana, the asset ecosystem, the builder system, and help companies raise venture capital funding and also try to sell the asset.
Hi everyone, my name is Lou. I'm based in Singapore, and my job is to really help the Solana ecosystem grow in Asia. So I spend a lot of time with regulators, financial institutions, and large corporations and payment companies. It's very exciting to be here in Hong Kong. We're here almost every year, and we look forward to continuing supporting the ecosystem in Hong Kong. And super excited to see everyone. And we'd love to spend more and more time getting to know all the different projects, investors, corporations here, and see how we can all work together to push this industry forward. Thank you.
Yeah, and today, just as we say, we're going to share perspectives from the global side and also from the APAC side. And at the very end, should we say something or greetings in Chinese to the audience here? OK， 那我先来，我来祝大家马年大展宏图。
祝大家马年万事如意。
要给大家拜年了，所以说呢，新年快乐，大家。
希望我们马年继续一起加油。Okay, then we are very excited to have our first fireside chat today. But please wait a little bit, like a few minutes. We are going to set up the stage and welcome our best Lily and Tom from Bullish. Thank you all.
Thank you.
Thank you.
So, hello, hi. For the first set of speakers, I'm really honored to introduce to you Lily, the president of Solana Foundation, and Tom, the CEO of Bullish. Welcome.
Hello, everyone.
Good morning.
I'm very excited to share the stage with Lily. As I said to her last night, one of my pastimes is, we have to switch seats? Yeah, we're going to switch seats every minute or two. It's a little game we play. A pastime of mine is I'll look up Lily Lou videos because everything she says sounds so much more bright and articulate. Some of the thoughts I feel like are in my head, and then I pass them off as my own, and people say, wow, that's really smart. So I'm giving full credit here to Lily.
Yeah, I'm going to take that down, and I'm going to save it and send it to my kids repeatedly for probably the next decade, okay?
So here, let's get started. And Lily and I intentionally didn't prepare a Q&A script because wanted to kind of make it entertaining, and feel free to make it interactive if you'd like as well. Let me just start here, Lily. From a financial perspective, if you know the sophistication of investing in crypto, I'm going to start in a different place than you were expecting, I bet, is getting more and more sophisticated, and increasingly people are saying, wait, there's a differentiation between high quality crypto investments like Solana and more speculative investments, and I'll leave it at that. And in order for people to make investment decisions, they're building financial models. So help us think conceptually. If I'm building a financial model for Solana and I want to build an NPV model and I want to put in the revenue line item that goes out 10 years into the future, 8 years into the future, what are going to be the big drivers for Solana?
Well, I think that part is pretty easy to model, actually. There's a base fee that the network, or I should say the validators in the network own, and increasingly they are passing more and more of base fees and also block rewards back to stakers. And then, but you know, like gross revenue, let's call it, for the network is base fees plus priority fees. And then the share of that to validators versus stakers is then, that's kind of the next economic thing that's being equilibrated right now. And so actually the more complex things get, the simpler they also become. It's not that different from any other platform out there. Usage, people pay transaction fees. In this case, we call them base fees and priority fees. You use something, you pay for it, someone gets paid.
And what's going to drive the growth? What are the trends right now that you think will be the key drivers going out 5, 6, 7, 8 years in the future?
Sure. So the base fee is purely a function of transaction count. And then priority fee is where people pay to prioritize a transaction. And the reasons people might want to do that is because they want to get better trade execution, right? Because they care for some reason about where their transaction is ordered and and that they have certainty that that transaction is going to get executed or land, and oftentimes in a certain order. And that implies that when people are most likely to pay, priority fees in a trading environment where there's price and time sensitivity, right, and on a very sort of micro basis. So it's transaction count, and then a certain type of transaction, especially during sort of volatile times in the market, and that is essentially the basis for revenue. So the way to, how do you up transaction count, and then also how do you have these high margin transactions? And not every transaction is going to be a high margin transaction. And so on one hand, yes, you got to be really great at trading because that is the engineering and development frontier. But then in the same way that, if you run a grocery store, you can't look at it and say, okay, I'm going to stop selling milk and eggs because they don't have the same profit margin as like your dry-aged beef. And yes, there are folks out there that can be specialists on a certain part of the supermarket, but then the whole concept of a supermarket is that you are, call it general purpose food purveyor, and people go to one place, and and the value proposition is you go to one place and you have everything that you need. And so similarly, there's a lot of discussion, I feel like, around, is this good for payments or is this good for trading? You're like, well, when you think about money, you're building an economy. You're not just building a payments application. I just feel like a number of folks that come into this space, they have an application-specific version of the world because they come from the startup world. And when you come from the startup world, you're supposed to be building, focus on one thing, right? Land and expand. Like there's the whole very well sort of practiced wisdom around how you become successful building a startup. And because many of the, I would say almost all of the folks that came into this industry at the very beginning come from a startup background. I mean, there's crazy risk that people took to even think that this might be a thing. But then inherent in that is a mindset around application builders. When actually at the network level, what we're building is a network where you win through horizontal integration, and you win through public tooling, making it usable for the greatest number of people. And so there's actually kind of like an orthogonal instinct that I think people have in this space, and especially has become more and more applied over time. What I found to be very interesting is when you say the word product, you actually have completely different interpretations of the word product. So tech people, they hear product and they think, oh, obviously code base. It's an application. And when you talk to finance people and they hear the word product, they, oh, that's an asset with price, time, risk, different parameters. And so because we as blockchain are at that intersection of tech and finance, I find increasingly so, you're in these mixed rooms where some people, they hear product, they think everything's an app, and then other people think everything's an asset. And our job is to bring that together, because the way I kind of think about it is we as Solana are one network for all assets and all apps.
I completely agree, and this was such a good answer. Like, and I'm kind of wondering, you're convincing me in real time, but in one world, layer ones evolve to be more niche, which is kind of what you're describing, right? I don't know. Solana's the winner. I'm making this up. But Solana's the winner in payments, and some other platform is the winner in trading, and some other layer one is the winner for some sort of store of value, or so on and so forth. And I think what I'm hearing you say, which doesn't surprise me at all, knowing you, actually the goal is Solana is going to be the home of all of that, really horizontal and a broad-based financial economy.
Yeah, it's infrastructure for finance. And so what sort of finance? Well, definitely all the things you might want to do with money. And the most common thing you want to do with money, which generates transaction count, by the way, is moving it. And the most sort of high margin thing you're going to do with money is to trade it and try to get better price execution. And there's no reason to make a choice between these two, because if you're building an economy, you need one for the other. If you don't have payments on chain, you're never going to have stablecoin liquidity in sort of the depth that like real markets require. And there's no extent of micro markets, microstructure, new mechanism design, which is going to compensate for just raw depth. And where does depth come? Well, because people are using you to using this infrastructure to move money, and then that's where there's no reason why we shouldn't be moving hundreds of millions, billions of dollars B2B transactions on Solana. Just because it doesn't pay priority fees doesn't mean that we don't want that activity.
I hosted a prior panel with Anthony Scaramucci, and I asked him the question, as tokenization, which I believe is going to be a 20, 25-year trend of just slowly big markets moving onto public blockchains, as tokenization really gains steam, and it's started, but gains steam, who will be the winning layer 1 blockchains? And Anthony said Solana. And he said it could be others as well, and there could be a second place. But he did say Solana in front of an audience. Why? Let's assume he's right. Let's stipulate he's right. Why? Why Solana? Why not any of the competing layer 1s?
I think that I might even go one step further. And Anthony has been an incredible supporter of ours for many years now. And so credit to Anthony for seeing it, I think, when it wasn't obvious to everyone, 2022 and 2023, and really sticking with us. I think that I would even go a step further and say that Solana is, I think, the only L1 right now that has a fighting chance to be that peer-to-peer electronic cash system. And I think if Solana doesn't do it, just nobody will. And there's a couple of reasons for that. If you think, so first of all, what are the objective criteria you have to fulfill in order to be possibly that financial infrastructure usable by 5.5 billion people on the internet? Well, obviously you've got to be performant. And I cannot explain to you why people have debated the need for usability and just debated the importance of fast and cheap. Obviously, if you want to move money, no one wants to spend, people want to spend asymptotically zero time and money to move your money from point A to point B. That's obvious. It's basic usability. And the fact that we've spent a decade over-intellectualizing this and talking about this on every dimension, security, I couldn't even, it's so much to sort of weed through over 10 years when it's just so obvious that if you want to move money, you want to do that as close to zero time and cost you possibly can. Because that's the sort of like, this like the milk and eggs of using money. So one is usability and performance. The second is you have to have a developer community. The whole purpose of people call them Gen 2 blockchains, essentially everything that got started in 2018 and afterwards, and people used to call them Ethereum killers because of CryptoKitties in 2017 and revealing some of the scalability issues, is this idea that it would be a platform for applications, so then you can enable a global community of developers to build financial applications that would add utility to these assets. And instead of top-down deciding what those are, which is essentially what happens in a lot of financial institutions, you would empower people around the world, creativity, innovation, to build these applications, which is pretty awesome. So that's the second, you've got to have a developer community, and that's actually the hardest thing to do. Building a blockchain that has infinite TPS is an engineering problem, but then building a developer community is you're essentially building a new society, and you have to build a culture, attract people to that culture, and what you're actually trying to do is fairly crazy, I think, because what you need to do is you need to attract some of the most talented people in the world who have infinite opportunity cost to go leave that behind and come into crypto to do what exactly? To build on a blockchain? It's a very strange proposition. And to be able to attract and activate a large community of people around the world with a shared sense of purpose and culture, and to really believe in that and do that, that to me is actually the most magical part of what I've experienced in blockchain. And it's like that kind of shared purpose and optimism in what I think is increasingly actually a more and more cynical world that is really a bright spot. So the first one is usability. The second one is
let me just ask you a question about usability. So as Solana brings on these big girl markets, U.S. equities, global equities, fixed income, as part of usability, there's reliability. Is Solana ready for 100% uptime or 99.99999, whatever the right number of nines is?
Yeah. Well, every time a large financial institution goes down, I calculate their nines, and we have more nines than...
Just quick anecdote. When I was running the New York Stock Exchange, our system went down for 3 hours, and I was the New York Post loser of the week. So I've been there.
We've been there as well. And the last time we had an outage was February of 2023. And in that time since, people talk about TPS, but it's not just TPS, it's also doing this at scale in a live environment, which is entirely different. Because typically the TPS numbers that people post are theoretical because it hasn't been tested in the wild across a whole ecosystem of permissionless applications. And so about 1 year ago when the Trump meme coin dropped, nobody knew about it, and it dropped on a Friday night at 9:44 p.m., and that was the surprise trading event of the year everywhere, right? And when all traditional markets were closed, can you imagine Friday at 9:44 p.m. all the way through the weekend? And actually, the infrastructure that melted down was centralized exchanges. It was not Solana. So Solana, the network, actually performed extremely well. And then similarly, on 1010, you had these liquidation cascades, and everything on Solana happened just fine. And I think that there was a minor fee spike that went from a fraction of a cent to the peak of it, maybe like a few dollars up to maybe $10. But that was really, really the height of it. So it's not just about TPS, it's not just about uptime, of course, those are sort of base metrics, but it's also stress testing in the wild when you have this very complex ecosystem and people with permissionless apps all over the world and able to, between all of them, be able to handle that load is like, it's pretty cool. Yeah.
We're sitting here in Hong Kong. We were together last year in Hong Kong. Can you tell us a little bit about the importance of Asia, if indeed it is important, to the larger Solana community? You know, builders, holders of the token. Like, how do you think about Asia?
So I think that there are two major language communities in the world. Independent of crypto. There are about 1.5 billion native speakers of English and 1.5 billion native speakers of Chinese in the world. Now, of course, there's many more secondary speakers of English than secondary speakers of Chinese. So as a whole, you sort of have more intelligibility within the English language region. But still, those are the two large ones in terms of native speakers. And I think you also see that reflected partially as a result in terms of where talent and capital formation happen. These are also mapped onto the two largest countries that have, I would say the only two that really have talent and capital formation at scale. And also then if you look at the history of crypto, in many ways, China was the home market for crypto. Bitcoin mining, the miners that drove the vast majority of Bitcoin infrastructures created just across the border over here. And a lot of the early holders and a lot of the early investors in pick any cryptocurrency actually came out of Asia. So in many ways, I might even consider Asia to be the home market for crypto. Now, the dynamics are quite different, but I think that what's interesting to me is that APAC is clearly the largest market, but also a lot less talked about for various reasons. And so its importance to me is obvious. It's actually where I discovered crypto to begin with back in 2013, 2014. So it's not just important, I think it's really essential. And actually even internally when we were talking about sort of strategy for 2026, one of the things I posited is that you have these parallel worlds. And you have the English-speaking world and you have the Chinese-speaking world. And they're actually fairly independent of one another. There's a little bit of crossover, but they're actually fairly independent. And the interesting thing about it is that there isn't a lot of awareness, I think, in the Western world, how large and independent the Eastern world actually is, and how much happens in a different language. Whereas I think there is a reverse, there's more awareness in one direction versus the other. And so the Eastern world very much understands, sees the importance of the Western world. and I would think has like probably 60% awareness, but I would say it's maybe 15-20% awareness in the other direction. Yeah.
This is a kind of a personal question for me to learn. Bullish is a public company, and so the stock's constantly moving, and we own 24,000 Bitcoin, and the price of Bitcoin is moving. And I look at it because I do think it's important. The markets are delivering a message, and you want to be somewhat responsive to it. But at the same time, if you look at it too much, it's very emotional and stress-inducing. Solana too, the price, has gone down dramatically as Bitcoin went down and bullish stock went down. And how do you deal with that? Like, where was your mindset last week when it felt like crypto was never coming back?
We talked about this yesterday. You asked me how many times a day I look at price, and I said probably about every 10 minutes. You said maybe once a day. I think I've just become accustomed to it. I think this is the fifth sort of like shocking drawdown. And I would say on day 8 of 9 consistent down days, and I was like, okay, I really need to break from this. What's going on, guys? But I think that that is being able.
Did you have any like dark thoughts, like, oh my gosh, this is it? It's crypto's never coming back,
No, I'm so far in.
Catastrophizing.
I'm so far in from that. And I just remember I bought and then I sold Bitcoin. I think I bought at like 800 at one point, and I sold at 1,300, and I thought I did a good job. And so I just always remind myself of that. And then there was another time I bought at 375 and I sold at 750, and I congratulated myself for that as well. But then you don't later. So I think I've just gotten used to it. And this time I'm just happy that in past cycles, my husband would call me like within hours, what's going on with the markets, Lily? And this time, he waited until day 8. So we've all gotten a little bit more used to it.
What do you do to blow off steam in a situation like that? What's your outlet?
Actually, every time things go into the gutter, I actually get more excited. And this time in particular, because I feel like we are in such a strong position as an ecosystem. And so yes, the entire market went down, but we have a really unique just strength and position, and this is an opportunity for us. Bear markets is when the real building starts, and this is when you kind of set the table for winning in the next cycle. So in 2022, in November of 2022, when everything went to hell in a handbasket, there was certainly sort of crisis demeanor, but really for us, I was in particular actually pretty excited. I thought this is going to be an incredible opportunity, and we never lost conviction. I would say quite the opposite. We all doubled down and thought this is going to be great. Now, I think that's kind of an irrational reaction to have, but that's just the way we thought about it. And so then that $8 SOL, everyone thought like completely done. But we actually thought, okay, time to get started, and it's going to be fine.
Yeah, that's called a winning mindset. I hope you can all see why I was so excited. I think Lily is just utterly brilliant and a great spokesperson for our industry. I live with 3 teenage women, and the highest compliment is Queen. So great job, Queen. It was awesome to be here on stage, and please give her an extra loud round of applause.
Thank you, Tom, for being such a great partner.
Thank you, Lily and Tom, for this first exciting fireside chat. And last year, we had built a lot of institutional partnerships here. And one of the most important partnership we had was with Futu. And we are very excited to welcome Steve from Futu to give us sharing about from trading to the ecosystem. Welcome, Steve.
Hey, good morning, everyone. It's fantastic to be here at the Solana Accelerate. My name is Steve. I lead the Web3 initiatives at a Futu group. So for those who you guys actually don't know Futu. I guess actually everybody knows Futu now, like in Hong Kong. So we actually service nearly 30 million users globally, and with trillions of assets as AUM. But you know what? Actually, I have been to quite a few sites and side events and gathering so far this week because it's a super heavy crypto week here in Hong Kong. But honestly, I still keep having a lot of funny interaction. When I introduce myself, a lot of people actually see Futu on my page, and then they kind of give me a little bit like a slightly awkward and a confused look, and then they usually lean in, and then go like, "Hey, Steve, isn't Futu the traditional finance stock market guys? Do you guys actually do like crypto at all?" So I know this is still like a perception among some of the crypto native that Futu is purely TradFi. But here, when I actually sort of tell people that Futu is not just watching the Web3 industry grow and evolve, actually we're already part of it. So people usually get surprised. So today, actually, I just want to reintroduce Futu. So we are actually building the next generation financial infrastructure for both Web2 and the Web3 ecosystem. Speaking of our Web3 journey, so back in July 2024, Futu Security Hong Kong reached a transformative milestone event. We successfully upgraded our SFC Type 1 security license, which enables us to offer crypto trading to retail clients here in Hong Kong. So today our clients can not only trade more than a dozen coins on our platform, but more importantly, I think we integrated a lot of very cool features from what we good at from our security trading, such as AI tools, analytical sort of pattern tools, chart tools, and then paper trading, for example, across markets, to ensure that we streamline the traditional finance user experience and a Web3 user experience. So that means trading is just a starting point. More importantly, I think we lower the entire entry barrier for an entire generation of investors. So that's actually what we have been doing here. We are more than a broker, right? So we can go beyond sort of the trading. So together, actually, we work with a lot of leading institutions. Solana is one of them, and also we have been working with a lot of renowned fund houses, exchanges, stock exchanges, to build what we call so-called ecosystem. So here on our platform, you cannot actually only trade the crypto now. You can also invest it in ETFs. And then for ETFs, now you can participate in ETF IOP. Also, we are building the in-kind subscription and then contribution to ETF as well. And also for treasury, digital asset treasury companies, we also provided a suite of services that help them not only sort of raise capital from our clients, but also manage a roadshow and then PR stuff on our platform as well. So that means actually we're connecting a lot of people together. We're not just working in silos. So we are actually sort of solving and fixing, I think, the two most important pain points in this industry, digital industry. One, which I call island effect, which means digital assets are still largely disconnected from traditional finance. Second is a security gap. That means actually people, especially for people who are not familiar with the digital assets, they still think they are unprotected when it comes to trading crypto. So as the largest retail broker here in Hong Kong, we have a very long history of a tracking record, and then we are NASDAQ listed, and then we are completely regulated and compliant. So that actually gave people not only the convenience, but also compliance and the safety, the sense of comfort, sense of safety. So that's actually what we want to achieve. Speaking of Solana, I think the partnership with Solana is actually a very good testimony to our vision, which I just mentioned. So working with the Solana, we are focusing on three strategic pillars. One is investor education, which is very, very important, especially for those traditional investors. So they need to build investor education and also confidence before they can actually tip the toe into the water. So that's the first thing. Second thing is actually infrastructure. This is actually what I'm talking about today, right? So working with the Solana, working with the leading financial institutions, so we can build or we can connect the off-chain liquidity with on-chain applications. So that's actually what actually Fudu can really do, right? So that's the second thing. Third thing is actually product innovation. I mentioned ETF, right? So people may know that working with Solana, we successfully distributed the first Solana ETF in Asia. So as a principal distributor of Solana's ETF, so we actually successfully make SOL a household name in Hong Kong. So we are, again, we are providing infrastructure capabilities. So that means actually we cannot actually offer one thing. So here we connecting or integrating different asset classes, different markets, different exchanges. Think about this, right? So you can deposit your crypto into Futu, and you can instantly trade it for fiat. And with the fiat, you can instantly move it to stock and bonds, and then money market funds, structured products. So that's actually really kind of cool. So this is actually what we're trying to do, right? So we're not just combining everything together. Definitely, we provide the convenience. But more importantly, I think that's what I call unification of finance. So that's you can see here. We provide trading function for sure, and also Money Plus is our wealth management capability. We provide layer 2 quotes for stocks, and no delay for example, Solana's price as well. And we build a very a vibrant community. We call it a new trend here in Hong Kong. We call it a Moo community globally. So our DAU is actually millions. So that's actually what we're trying to do. Speaking of future, as I mentioned, in July 2024, we successfully upgraded our brokerage license, and then last year, January last year, we actually secured VATP license. For those actually who are not very familiar with the acronym, it's actually the crypto exchange license here in Hong Kong. We're actually in the final stage of assessing with finalizing the assessment with the SFC. Hopefully, we can launch our full crypto operations very soon. So that actually will be a game changer not only for Futu but also for Hong Kong crypto industry as well, because that will position Futu very uniquely. So by the time we will have both brokerage capability and the crypto exchange capability. Brokerage, right? So it's a gateway to global markets, to different asset classes. Crypto exchange, that provides actually very deep front end to back end crypto exchange capability. So actually, the combination of the two actually position Futu in a very unique, position. So actually, that actually, makes us very, excited about. So for Hong Kong, the whole industry, I think, crypto industry in Hong Kong is still in very early build-up phase, right? So we're the largest broker in Hong Kong, tech broker, retail broker in Hong Kong. So we know actually providing such a great infrastructure cannot work in silos. So that's why actually we open our door to invite, again, Solana and fund houses, protocols, developers to work together to advance, this industry. I think in Hong Kong, the future finance is not, there shouldn't be a debate about traditional versus digital. I think it is integrated, compliant, one account, one app. So that's actually also Futu's mission. So actually, I invite everybody to join us and build the digital future for Hong Kong. So thank you. That's all my sharing today. So enjoying your day.
Thank you, Steve, for this amazing sharing. And next, we are going to invite Sherry to moderate this panel, talking about ETF from west to the east. Thank you.
Hello. So good morning, ladies and gentlemen. Today, this is the first panel of Solana Accelerator, and we have a fantastic lineup today here. So a quick introduction. We have Jupiter from eFund, my boss, Steve, and Sia from Hash, as well as Dom from China AMC. I named this panel as Futu and their friends because we have long been very, very good strategic partnership in all senses. And today we are going to talk about ETF from west to east. So before we jump into our first question, let me give you a very brief background on how the ETF landscapes involved in Hong Kong, especially for crypto. So zooming out to the timeline back to 2022, Hong Kong was actually among the first region in Asia to launch crypto futures ETF. And then later to 2024, we launched 6 crypto spot ETF managed by 3 asset managers, and one of which is China AMC. Actually, I'd like to highlight here is that we authorized the first batch of Ethereum ETF in April 2024, and US was only able to authorize the first batch in July for the same year. So, and last year in October, Hong Kong launched the Solana spot ETF. So I think looking from this angle, Hong Kong is definitely ahead of the ETF race globally. So my first question is, for investors, why should they pick crypto ETFs instead of investing in spot crypto? Probably Jupiter, start from you.
Thank you, Sherry. Thank you for inviting me in this stage. I think a lot of benefits will bring by the ETF rather than direct holding the crypto itself. And the first is you don't have to worry about the custodian solutions. You don't have to worry about how you transfer the tokens in and out, and everything can be held by the ETFs. And also, especially in the US, there are also some another benefits from, for example, especially from the tax perspective, US investors can putting their ETF holdings into their tax benefit account, which will be catch the tax benefit in longer term. And also, the US have a very complicated tax reporting system. If you are holding crypto directly, you need to trace every transaction by your wallet and report to IRA. So a lot of things to do. But if you holding the crypto ETFs in your broker account, all things be done by your broker system, automatic reporting by the IRA system. So I think for the traditional investors, if you are not quite familiar with the wallet and you just want to have the longer visions, investment visions for the crypto in the longer term and don't want to tackle with the complexity of the holding cryptos, you can just choose a crypto ETF. I think that is a benefit that can bring for the investors as a whole. Thank you.
Thanks, Jupiter. So Don, what's your view?
Yeah, sure. I mean, we just like to echo what Jupiter said as well. I think the crypto ETFs really help to bridge the traditional side of investors with the crypto world. So I mean, I definitely echo on how by buying an ETF, it really helps retail traditional investors not needing to go through the hurdle of learning about cold wallets. I mean, all sorts of private keys and stuff. I mean, I remember I had a big nightmare trying to teach my parents how to buy their first Bitcoin. It was horrible. So I think it really gives traditional investors a very familiar way in purchasing a new product, right? So they can use their same bank account through the same platform, the same way in subscribing, just like new asset class. So I think that's a pretty cool thing. And on the other hand, I think it also allows institutional, traditional corporates to get into the market in an easier and more compliant manner. Given that I think a lot of them, due to auditing reasons or accounting reasons, they may not be able to, let's say, open an account and then purchase crypto directly. And then on the other hand, I would also like to raise, like, when it comes to crypto natives, right? Like, why would they may want to think about buying an ETF instead? So I think, from what we observed so far is that a lot of them may due to auditing or accounting purposes, or sometimes it may be more for like a short-term trading and arbitrage reasons that they may be more attracted to buying a crypto ETF as well.
Yeah, thanks for the insights. So we did talk about all the advantages of having crypto ETF as a vehicle and how Hong Kong has been advancing in the markets. But as we see the data, I mean, the Hong Kong ETF market, in regards of its AUM as well as growth, is relatively slower than our counterparty in the US. So what do you think is the biggest factor that sort of prevented larger institution adoption here in Hong Kong, and like why Hong Kong is still like a bit lagging behind? So I will pass this challenging question to Sia.
I think the conclusion is like two-part for me. The primary hurdle we can see now is still the mindset. So if you're asking a lot of institutions and family offices and then the big corps, they're considering about like building up their portfolios and also in what we say is like a new asset class choice. So they still see Bitcoin also Ethereum as a very high risk and speculative bet. So the narrative has to be involved from the digital gold speculator to the new infrastructure for the new era of finance. So we haven't seen that transaction happen yet, and it's happening more slower than we expected as of right now. And the second part is the infrastructure. So if you need the infrastructure part, there is an infrastructure gap in the market right now. So if the institutions are thinking about like acquiring these crypto assets, the first one is the regulatory harmonization across different regions for the regional firms to provide their service and products to different to their customers in different regions across in Asia. And the second part is like the custody service and the insurance service and the rounding like services about this product to the retail investor. So I think the education about the underlying technology and also about the value proposition of Bitcoin, not just like very high appealing assets with a very like fast growth, the price trust, the appealing part on that. So I think it's just a start. The volume we can see now is very limited, but it's only the beginning of the journey. Yeah.
Thanks, Sia, for the sharing. So the next question would be for Steve. How does Futu help along the way to accelerate the mass adoption, and how Futu help to bridge TradFi as well as Web3 assets?
Yeah, that's a very good question. I think I already answered some of them actually in my previous keynote speech. So one thing here is actually ETF is still very important for crypto assets as well, right? So like Jupiter and Sia or just mentioned, it's actually a compliant wrapper, to be easily integrated into traditional finance platform. In the investor perspective, from the compliance officer perspective. So actually, Futu actually is very well positioned to sort of capture that trend, right? So we already a one-stop platform to provide services in terms of stock trading, option trading, and ETF trading as well. So that's actually a whole big picture, from Futu's standpoint of view. Particularly for ETF, right? So if you only hold like crypto, right, and then put that crypto in your cold wallet, and then you want to sort of borrow against that cold wallet, coins, and then it's really hard to do, right? But if you wanted to sort of deposit that into Futu, and then have a crypto ETF as your holding, and then you can easily get a margin loan, and then you can basically use that actually to buy stocks and then ETFs, other ETFs and the bonds, and then so on and so forth. So actually, we can provide that functionality very, very easy with a very, very seamless sort of experience for our investors as well. And also, Jupiter just touched upon like a tax issue again, right? So it's really hard for like auditor to sort of come into sort of audit your personal sort of P&L of your crypto holding in your wallet. But for Futu, it's just like a 1/9 on our sort of monthly or annual sort of statement. So it actually will make your like a tax reporting very, very easy. Probably not a very big issue in Hong Kong, but globally in the US and in other jurisdictions, I think that's a big headache. So again, so Futu is the largest sort of financial or fintech broker in Hong Kong, with the one-stop, one-account sort of approach. With the ETF, crypto ETF, you can do a lot more than just holding the crypto or ETF itself.
Thanks, Steve. And one more question is about, there are so many crypto-related vehicles nowadays in the market. We have spot, futures, DATs, digital asset treasury companies, ETFs. So when investors try to pick one of the vehicles to get certain exposure, like how should they choose from one to the other? So probably starting from Jupiter.
Oh, thank you for the questions. I think if you look at the full scope of the investment into the cryptos, if you play with the spot ETF, it's more on the investment side. If you play with the DAT, it's more on the trading side. Because if you invest into the cryptos, you're just seeing the long-term growth of Bitcoin, Ethereum, or Solana. But if you play with a DAT, the thing will be more complicated because you're not only dealing with the crypto asset, you're dealing with the more like a company investment. You need to analyze the fundamentals of these companies. Also, some corporate actions, some debt issuing, or you need to analyze the board members of the company. They have the full resources to support such as DAT strategies. Also, many people seeing DAT companies as a high leverage vehicles for the cryptos. That means you may have potentials to gain higher return by investing to DAT, but you also have the possibilities to lose your money. So I think DAT is more for the short-term trading. You need to analyze all the things, all the information flows, and also trace the risk premium and also the sentiment of the whole market to play well in the DAT scheme. But for ETF, it's more, I think would be, comparatively speaking, it's more simpler and easy to understand a vehicle to the DATs. And also the DATs, the last year, this year is also different. Last year is more like a basket of tokens. You just buy BTC, ETH, or Solana. But this year, a lot of DATs will be transforming from just holding the crypto assets to more like running a business. For example, they are running some ecosystem or ETH or Solana, they can just staking their tokens. So they were generating some cash flows to the company. So adding the more dimension to analyze this company or investment opportunities. So I think if you want to choose simple, you can choose ETF. If you want to play hard, multi-dimensional chess, you can choose the DATs. That's the different choices. Thank you.
Thanks, Jupiter. And what about Dong?
Yeah, I just want to, just add a little bit. I think like Jupiter covered majority of it already. Not much I could add. But just wanted to raise. I think Apple, if it's for someone that wants like full control, and you don't mind learning all about, the private keys, cold wallets, and you're happy to get up in the midnight to trade and stuff. Probably like spot crypto is the best, right? Go to an exchange, buy crypto directly. But of course, if you're more for like a retail first time getting into crypto. Institutions, right? Maybe crypto ETF would be easier for you to just to get a start, right? Because you can trade at the familiar time frame, very familiar interface. You don't need to care about on-off ramp, right? You can go use the same banking account. You can same platform as well these days. So it makes it a lot easier. And then when it comes to your other instruments, such as perps, then I think these are for people who want more leverage, etc. And I think, really like Jupiter's point on DAT as well. I think one thing that perhaps a lot of investors have not been really paying attention to is like when you're investing into DATs, you're not just investing into the token that they put in their treasuries, because when you invest, like the stock actually represents the whole company as well. So I think, everyone should be very careful when they do that, right? I think it's also important to not only care about what that company, which token that company is buying, but also try to see if potentially if there may be any synergies in like what the company is doing, or is this simply just a shell, etc. But yeah, so I think at the end of the day, the different instruments will have fit for different risk appetite and different purposes as well. So I think really depends on you as an investor what you want to do, right? Then you can pick the most appropriate one.
Yeah. So somebody described DAT as an option, a crypto option without a margin call. So I think which sort of very well describe the natures. What about Sia?
For me, there are a lot of different vehicles, virus vehicles on the market right now. So the core question you need to ask yourself is like, what's your objective in this investment? So do you want like extra earning and also want to leverage on the deal? Then probably like future-based ETFs or maybe structured products are your goal. And if you want like more, if you're like conviction-driven trader, then probably you want to do some staking and DeFi. So you can go just like on-chain or maybe on CEX to buy tokens itself, and then to do like some multiple, like to engage with multiple protocols and also like DeFi projects to get extra gains on that. Or maybe like you want more active like management strategies, so probably can look into like active crypto funds. So it just like depends on what's your goal on the investment itself, like your risk appetite, like my colleague just said. So there are a lot of like traditional, I think it's starting from last year, a lot of like traditional people, a lot of the tools that traditional people can understand, approach, and appreciate actually appears to the market. Like before that, it's just like pure either or like your CX, either or spot or maybe like on futures. But like now there are a lot of like things you cannot, you can probably not to buy crypto, but still like hold the crypto like ETFs. So that's kind of like the most easier and ultimate simple way for you to hold like ETF without actually owning the ETF, without actually owning the tokens yourself. You don't need to worry about like the private keys, the wallet, the security, maybe hackers some days just like coming and steal your money. You don't need to worry about that. And also it's the same like UI experience that you have been dealing with all day. So things has been easier for traders to get into the crypto world and also to actually get a taste of the crypto trading from the first start. Yeah.
So Steve, on Futu's platform basically have everything from ETF to DAT to spot crypto. So what's your observations like for the user behavior on our platform? Like do they overlap a lot versus like spot traders and ETF traders, or they show different patterns?
Yeah, I think that's a very good question. Definitely one thing actually I just want to emphasize, I can't emphasize more, is actually you can trade everything pretty much like on Futu, right? So we are not just like one pure play. So in terms of investor behavior, so I see a lot more convergence and then marriage together. That means actually definitely Futu, because we have millions of traditional investors. Actually, they trade stocks a lot, and then they trade like options a lot. They started to sort of trade crypto as well. So you can see actually on the platform, the penetration rate of crypto trading is actually goes up and up day by day. But it's natural, right? Because crypto itself actually becomes emerge as a increasingly more important asset class for the financial markets. So no brainer. But also here, like we have seen a lot of like crypto natives people actually they kind of like deposit their crypto from their self custody wallet and then or exchange wallet to Futu, and then off-ramp it, convert it to fiat, and then trade stocks. That actually sort of trend has been more noticeable in the past 6 months. That's because the performance of stocks, Hong Kong stocks, US stocks, and then crypto price actually have seen some sort of divergence. So people actually kind of become like what I call like a reverse FOMO. A lot of people in the past, the FOMO kind of like a fear of missing out opportunity of crypto world, but now actually vice versa. So that's basically what I observe. So again, so back to the previous question, I think that's kind of like related as well, is actually different asset classes or different forms of digital assets actually gives you different sort of flexibility, right? If you want like full control and then you want to trade like 24/7, definitely go for spot crypto. If you wanted to sort of hold it for long term and then for easy access and then don't worry about like private key, don't need to worry about private key, and then definitely go for ETF, right? That's a better play, right? If you want to sort of short term like hedge a little bit like volatility, you can do like a future, not perpetual future, but like a traditional future. And then if you wanted to sort of have someone more sophisticated to manage your portfolio in a more active way, and DAT is actually good choice as well. Or if you want to structure some strange payoff and structured products, go for it. Go for you. So you can do everything actually on Futu. So we don't particularly sort of suggest that you just pick one, but you just make your own portfolio on Futu's platform. So I think again, back to this question, I think convergence and marriage. That's what I call what I sort of see as the major trend. And also even in the past, a lot of traditional financial professionals actually go from traditional institutions to digital crypto firms. But I just know Jupiter and John actually just recently vice versa and joined traditional institutions from crypto shops. So I think that's also happening in real life as well.
Yeah, so we see asset convergence and talent convergence at the same time. We are seeing more and more TradFi people entering into the crypto space, helping them build reliable products that can be used for more institutions. So I think last question is for Jupiter and Dong, because at the backstage we did discuss about institutions adoption. And obviously you see some big trends about institutions' appetite changing from one end to the other. And so what's the change like? And what do you think, from an infrastructure or regulatory perspective, how the Hong Kong infra or the regulatory framework sort of help you to encourage institutions' adoptions?
Yeah, sure. I guess from our end, right? I mean, since we were one of the first ones in getting the approvals, launching these crypto ETFs, especially for the Solana one, we even managed to issue it before the US. I think overall, we feel we are in a very fast-moving environment in the market as well. I mean, from regulatory reasons as well as market reasons as well. And I think I think overall, the Hong Kong market, sometimes it maybe take a bit longer for the education purpose, as Sia have mentioned earlier. But I think we are seeing some very encouraging trend. I mean, lately we have been from our conversations with a lot of the insurance companies and institution authority as well. We are seeing greater adoption. I think there has been increasing number of insurance companies that may be adding crypto ETFs into part of their greater product portfolio, so that it gives more traditional crowd and people from probably more regions and getting exposure into crypto through this route. So I think it's very encouraging, and I do agree. We're just at the start, and hopefully there will be more flow in the future.
Yeah, Jupiter, your
I think U.S. and Hong Kong regulatory clarity will be bring more institution adoptions into this world. Not only regarding the ETF, the investment vehicle, but also if you look at the tokenization, the regulatory is more clear. This means you can bring tons of traditional assets from off-chain to on-chain. And the people from the institution will see the blockchain technology will actually bring the efficiency, the cost saving, all the benefits to bring assets into the crypto setup. So in the longer versions, maybe the traditional asset and the crypto assets will be meet on chains. So everybody can be tokenized or trading on chains. That's the longer versions. And also this has been highlighted by the ICC's new chairman. They have a very clear structure of the tokenization assets in the futures. And we see a lot of infrastructures have been accelerating their tokenization process in different ways, either in very fundamental layers or on the product layers. So this thing will be happening in the next few years, and more people will be from institutions will be adopting crypto and also the blockchain technology as well.
Yeah, so thank you so much for your insights today, and we are very bullish for the future because we're seeing obviously there's a convergence for TradFi securities being put on chain and security native assets being wrapped by some TradFi vehicles, and we see convergence of talents, capital, etc. And Futu as the platform sitting in the middle. We are more than happy to serve every kinds of assets for all kinds of investors, no matter it's TradFi investors, institutions, or crypto native investors. So thank you so much again for your participation, and let's give them a round of applause. Thank you so much.
Roma.
imagine a world where TradFi and DeFi are not separated concepts and are not separated in capitals. How can we make that happen where capital is flowing fluidly? So here to talk about what does it really take to bridge that gap, allow me to welcome Cheyenne, partner at Multicoin Capital.
All right, good morning. Thanks for making the time. My name is Cheyenne. I'm a partner on the investment team at Multicoin Capital. I'm going to run through a bunch of slides here, but what I want to talk about is how do we start bridging the gap, and the gap that I'm referring to is this gap. This is a comp of spot and derivatives notional across traditional markets like FX, rates, equities, commodities, and then you have crypto at the bottom over there. And so there's a few orders of magnitude in difference here. And what I want to try and do is work backwards from the state of the world where everything at the top is trading on crypto rails. And so it's worth kind of examining some of the antecedent behaviors here. We have stablecoins today, $300 billion in supply, daily trading volume around that much, equity perps on certain decentralized exchanges, which we will not mention here, and you've got Figure creating HELOCs natively on chain through Dart. There's a bunch of this stuff already happening, but it's also worth examining, why these things happened. And the reality is it was a function of opt-in and standards alignment across a bunch of different stakeholders. And these are a handful of those stakeholders. But the thing that I want to sort of open the conversation on is what makes trade work and what broadly makes asset microstructure durable is that there is some notion of shared coordination across all of these different stakeholders. And so it's worth trying to reason from first principles about what those vectors of coordination actually are. And I think it breaks down into 5 broad categories. You have reference price, ownership registry, delivery, financing and netting, and compliance and identity. And so we'll go over each of these very quickly, and then my goal is going to be to try and walk through all of these through specific instruments, so equities, FX, commodities, and go from there. And so anyone who's traded a perp knows that the reference price, the index price, is the base of all derivatives. And so getting a reliable, not manipulable price feed is pretty table stakes if you're trying to build an instrument to replicate that kind of risk. And if you don't have that reliable price feed, if you're trading something like a private equity instrument or something of that sort, you kind of have to rethink the market structure from first principles around that. The second is the ownership registry, which is basically what I think of as a system of record for financial state. And so this is the kind of stuff that is sitting in these COBOL servers and mainframes across the world. And that's the stuff that we're putting on our chains, right? Like this is the opt-in that you need from issuers, owners, clearinghouses. These are the people who are doing what we call consensus in meat space to move these assets around. So having this as a concept is important to keep in the back of your head. The third is delivery, which is a little more complex because most of the times if you're trading some sort of synthetic derivative, it's a cash-settled bilateral contract. And crypto is very good out of the box for stuff like that. But if you're trading something that requires physical delivery, like oil or oil futures or something of that sort, getting that ownership registry equation sorted is much more, it's a much harder open question. And so there's a bunch of regulatory questions here, so we can come back to this and talk through it a little more when we have examples. And the next is financing and default management, and I think of this more as just like the exchange slide. So the folks who are trading huge amounts of size and things like FX or credit derivatives, they're usually doing that through layers of infrastructure and financial intermediaries who are willing to provide margin and give a ton of guarantees around counterparty health, collateral health. DeFi, again, gives you a lot of this stuff out of the box, but it requires some degree of capital efficiency, some degree of high touch, and really bespokeness to cater to the markets that you're trying to achieve here. And the last is kind of like table stakes, which is if people are going to trade size, they're going to want to know, they're going to have guarantees around privacy, KYC, AML, and generally regulatory cover, because that's the kind of thing that is required for these institutions to show up. And so with these sort of elements in one side, we can try and break down what this risk exposure is going to look like on chain. And so if you look at equities, People are already trading equity perps on chain today because they can. You can construct a very simple synthetic derivative with a reference price and then modify the behavior on weekends or off hours. You already are seeing tokenized stock wrappers like X stocks. So literally, someone takes physical shares, mints a token, and then that becomes a part of DeFi. And look, over time, the end state is direct issuance, which is, the chain is the system of record. Forex is a little more interesting. You're seeing stablecoins in a bunch of different currencies. That's sort of not where the notional risk is actually getting traded. The vast majority of the notional you see comes from desks around the world who are hedging currency exposure. There's no reason why that shouldn't be able to exist on chain. But you'll need, again, very sophisticated bilateral credit and netting. And so we see an opportunity for teams to kind of build things around that universe. Commodities, this looks very similar to equities. The only difference is, like, if you're hoping to get physical delivery, again, you need to sort out the system of record stuff. But that doesn't strike me as something that's going to get solved very quickly. What I do think is interesting is tokenizing individual receivables and then building some sort of credit or inventory financing around those things. I think there's a super rich design space for that. Credit and rates and credit more broadly are just much larger. We can skip this for now. And private equity and credit, this is, again, you'll end up seeing synthetics, so bilateral contracts. You're already seeing kind of fund shares tokenized on chains. But really, the end state here is direct cap table issuance. So I know we kind of ran through a bunch of different concepts. All I wanted to do is lay out, work backwards from the state of the world, which we think we are going to achieve in the next 5 or 10 years, and wanted to really highlight this notion that, as a trader, what you want is organizing standards and principles so that you can trust your counterparty. And this idea of credible neutrality is going to become increasingly important as more people show up on chain, because coordination is sort of a necessity across all of these things. And so, as we think about investing across all of this, we're excited about custom margin and risk engines, new exchanges that are purpose-built for these assets, and compliance rails that institutions are going to actually adopt. That's all I have for you today. Thank you.
These three concepts truly come together in the next talk. So we're really excited to welcome Zhao Qingyun, who is the head of fintech solutions at Alibaba Cloud. 接下来我们有请赵庆元先生，从阿里云，谢谢。
Okay, good morning, everyone. I'm Qingyuan from Alibaba Cloud. AI is rapidly migrating with Web3. And this is Alpha Arena, which was very hot recently. And Alibaba's cloud model, herein, has got a quite good result. And I haven't updated the slides yet, but I think another very good use of AI is to build on the blockchain, like Solana. Just this weekend, I spent 2 days. I have migrated the Solana archive node from Google Big Table implementation to Alibaba Cloud's in-house database implementation. I haven't even learned Rust before, and I just used the vibe coding to do this in 2 days, and it will download the data from Hugging Face for the historical slots, and it will synchronize the data with the mainnet, and it can provide the RPC service. So I think it's very good for the Solana builders. You don't need to worry how to implement it. You just to know what you want to build, and you will get it by AI. And then let's go back to the AI trading. Because, personally, I think AI trading maybe is better than for the most retail users because it has a lot of pre-existing experience. So the retail users, it will have information overload, limited research capabilities, insufficient risk awareness, and globalization barriers. So AI trading can help them on that. And we also have our POC solution, and we also build our open source solution for the AI trading chatbot. It will have multi-agents to do different tasks, and they will debate with each other and get the trading decision for the customer. Sorry. Oh, okay. Okay, let's go back to our Alibaba Cloud. I want to introduce a little bit to you about Alibaba Cloud. As you can see, Alibaba Cloud has expanded our footprint to all over the world. For example, especially for the Solana areas, for example, for the Frankfurt and the United States, and mostly in APAC, Tokyo, Singapore, and Hong Kong. And it's I think it's a perfect match with the Solana. And we have already collaborated with a lot of Web3 customers. And we can provide different solutions with our with our customers to provide the service to the Web3 industry. And we also can provide our RPC nodes. We can host the RPC nodes on Alibaba Cloud. We have already a lot of experience to do this. And with this is an example. We have collaborated with Zen, which was also a partner of Alibaba Cloud. On the bottom, there is a table. We can collaborate, we can communicate with the RPC nodes via Alibaba Cloud backbone network. That is intranet, you can think. So comparing with the public access from the internet, you can see for the RPC call get slot, the latency has been reduced from 25 milliseconds to 10 milliseconds. It's a huge reduction. And for the get block, it's a 4 megabytes block. It can reduce from more than 200 milliseconds to less than 200 milliseconds. It will be very, you can take advantage of the low latency. You can do the trading and do the other jobs, and you can get very stable and low latency connection. And we can also do the co-location for the high frequency trading on Alibaba Cloud. As you can see on the left side, it's a match engine maybe for sex, and on the right, it's HFT customer. They can do the co-location with each other in the Alibaba Cloud's local network. And we can combine this with the last page. We can also have a placement group to put all these instances in a single cluster to reduce the latency. We can also put the RPC nodes in this placement group. So you can do the arbitrage between SEX and DEX, and you can have a very low latency solution on Alibaba Cloud. And at last, I want to go back to our AI. You can see Alibaba Cloud QN. Alibaba Cloud can have all the total solution. We can provide the PPU chips, and we can have the cloud infrastructure. We can also have our large language models. We can have a full stack AI solution on Alibaba Cloud. That's why a lot of customers are building their AI solution on Alibaba Cloud. You can build your own in-house large language model, and also you can use our API. And most importantly, I think QA is an open weight model. That's why it can combine with Web3 industry very well, because Web3 we have a lot of distributed computing power and AI power, and we can use them to do the inference work for our open weight QA model. So that's why QA model, I think, is the best fit of the Web3 industry. And also, you can build your own model on Alibaba Cloud, maybe in 10 minutes. Okay, this is my presentation. Thanks a lot.
Thanks, Ali Cloud, for the support for Solana Accelerate APAC. And next, I would like to welcome Sean from SGB, the CEO of SGB, to share the next generation of payment. 那接下来我们邀请我们一位非常重要的合作伙伴，来自 SGB 的 Sean， 为我们分享下一代的支付系统。Welcome.
Hi, good morning, everyone. I'm Sean Chan, CEO of Singapore Gulf Bank. We are a new digital bank based in the Middle East, backed by Bompo Group from Singapore and Mumtalakat, the sovereign wealth fund of Bahrain. We are a new digital bank, and our mission is to bring the best of TradFi and the best of crypto under one house. And in short, we are a friend of crypto. We're here to enable crypto. So today, we want to talk about the next generation of payments, right? So something that is obvious to all of us in this room and beyond, stablecoins, right? That is the biggest innovation in the crypto space and payment space for the last 10 years. So let's take a look at the market as it is. Currently, cross-border payments amount to about 200 trillion annually, right? And this is set to grow very rapidly to 290 trillion, perhaps in about another 5 years' time. The market is staggering. Stablecoins, it's a fraction, right? In 2024, it's about 6 trillion. It's growing fast, but it's really, really a fraction of what traditional banking rails settle. And this is set to grow very quickly. Why? I think that's obvious, right? The value proposition is simple. It promises reduction in transaction cost and better capital efficiency. It promises settlement speeds and settlement certainty. But that is very much a promise. There is still a lot of friction in the market, right? The market is still very much fractured. Why? Again, very simple. Traditional banks, TradFi, not willing to do so initially for the fear of the unknown. They don't know what it is. Now that they know what it is, they're even more afraid, right? Because it could seriously disrupt their business, right? The more efficient payments is, the less they make. So it's no wonder that there hasn't been good interaction between crypto and fiat rails. In a world where we only use stables, that's fine, right? Everything can be settled instantly, well, near instant, right? But that's not the world we live in today. And for the foreseeable future, we still need fiat in many, many channels. So what good is it if, to get stable coins, you still need to transfer money to your on-ramper, your liquidity provider issuer, and it takes T+2. That completely mitigates and undercuts the efficiency, and the purpose of stablecoin. So we need a new infrastructure. We need a new ecosystem. And how are we doing our part to solve this? Our solution to this problem is what we call SGBnet. It's our core product of SGB. It is what we're building, and this is the key enabler for the industry. How are we doing so? We're integrating the open-loop stablecoin ecosystem with traditional banking and closed-loop payment rails, and we're creating a platform to support greater capital efficiency. For stablecoins to scale, we really need to bridge this gap. That's why we're aggregating, in SGBnet, we're aggregating the largest network of crypto players, stablecoin issuers, and payment companies. Let's look at how this works in practice. When we have both parties on SGBnet, they can experience our instant settlement, regardless of location, 24/7, 365. And this is just fiat transfers. Yeah? And that means you can transact and can settle all through weekends, all through bank holidays. And this matches the cadence of crypto. Crypto doesn't sleep, stablecoin doesn't sleep. So then how are we going to solve the part about getting in and out of stablecoins? One of the key propositions is to bring the stablecoin issuers ecosystem into SGB and also all the LPs into SGB. And what that means is that if you are a user, you are a merchant, or you are just a trader, if you have an SGB account, if you're within SGB network, you would be able to get stablecoins through either directly through the issuer or through an LP instantly through SGBnet. Again, 24/7, 365. And this is tremendous. And a case in point, a client success story. We had a client who came to tell us that this has worked tremendously for him. How? Within the deposit of token to his LP transferring US dollars from SGB account to the trader's SGB account, and for the trader to send it back to his domestic bank, that take all of 20 minutes. All of 20 minutes. So we managed to combine the best of stablecoin rails and traditional payment rails all under 20 minutes. That's only possible because we've brought together everyone as an ecosystem. So for those that are within SGBnet, we can clear it instantly, but not everyone is on the SGBnet today. There will be others outside of our network. We love to bank everybody in the world, but that's not possible. But for those that are outside of our network, stablecoins makes the most sense. And the way we're bridging that is building another correspondent banking relationship, another TradFi network that works best. So today we're happy to report that we've garnered JP Morgan, Standard Chartered, Bank of New York, DBS, and MBB, which are all respectively the largest clearing banks in their currencies in their region. And with that, we're able to move dollars interbank basis on a 365 basis. So within intra-bank, that's real time. Within interbank, if you're within certain correspondent network, that is also on a 24/7, 365 basis. Again, all through bank holidays and weekends, no cutoff times. So that really collapses the friction in terms of time, risk, and capital efficiency between TradFi and crypto. And we layer on top of that, right, all the best rails to move stablecoins. And of course, in this regard, Solana is our key partner. So in short, this is what we offer. And if this is of use to you, and if you find it something compelling, please reach out to us. We'd love to engage with you. Thank you.
Thanks, Sean, for their sharing about their next generation of payments. And next, I'm very excited to welcome our Brian from our ANSA team to talking about how we're engineering the internet capital markets. Welcome, Brian.
Okay. All right. Hi, everyone. I'm Brian. I help lead developer relations here at ANSA. For those of you that aren't familiar, ANSA spun out of Solana Labs, and they're primarily responsible for the Solana validator client called Agave, which is what most of the network runs on today. And so in today's talk, I'll go over our 2026 roadmap and kind of how it directly enables internet capital markets. So for the first quarter of 2026, the team has a goal to hit or upgrade block limits to 100 million CUs. And a key unlock that would help get us there is XDP. This is a kernel bypass to stream data directly from the network interface card. The team also wants to decrease rent by 10x and increase transaction sizes to 4 kilobytes. This will allow more applications to support more users and also have those same applications touch more on-chain accounts. And then lastly, we haven't forgot about our validator operators. In SIMD 123, we have a new feature that will allow you to share block revenue with stakers, and you can build something like a Jito tip router. Now onto Alpenglow. Alpenglow is our new consensus protocol, meant to lower finality with Tower BFT from 12 seconds to 150 milliseconds. We're also removing things like proof of history and moving voting off-chain, which will help eliminate vote transaction fees, which has been a large cost overhead to validators today. And so in terms of real-world performance, we've been running an Alpenglow testnet cluster for the past 8 months. In this cluster, we're measuring finality at 120 milliseconds. And the team is working really hard at getting this feature upstream into the Agave repo. We're aiming for a feature activation sometime in early Q3 with Agave version 4.1. And so with all these improvements to the core protocol, this sets the foundation for much better market structure. And a core concept for good market structure is that market makers need the ability to be constantly updating prices so they don't get picked off by informed traders. And so on something like a centralized exchange like a Binance, updating prices are essentially free by calling an API call. However, on-chain, every update incurs a transaction fee. And that's why we've seen workarounds early on, like traditional AMMs that use the constant product model, but they don't really solve the issue where LPs can still lose money to inform flow. And really the primary bottleneck preventing competitive on-chain market making is this inability to efficiently update prices. And so this is where prop AMMs come out. This is this new form of market making that emerged on Solana last year. And essentially the idea is you can run this predictive price model off-chain and send an Oracle update to your smart contract. This Oracle update's only 8 bytes. So there's a way to structure these updates where they're very CU efficient, and you're able to, which allows the scheduler to prioritize them, and you're able to have many of these updates in a single slot. And so once your smart contract receives this Oracle update, it can now dynamically quote a spread based off things like the trade size, the counterparty, and the Oracle staleness. And kind of what makes this unique is the market-making logic is encoded within the smart contract. And Solana directly enables this because the SVM isn't expressive enough and cheap enough to do this at speed. And so that's why we've seen some Solana prop AMMs like a BisonFi or Humidify quote spreads as tight as 5 bips, which make them competitive with centralized exchanges. However, all prop AMMs suffer from this single leader problem, where if you're a prop AMM and you're a leader in a slot, you have an incentive to censor these updates coming from competing prop AMMs. And let's say you're not outright censoring transactions. Let's say you're a MEV-optimized validator. You have an incentive to late pack these price updates at the end of a slot to make these quotes as stale as possible. So the team at ANSA has been thinking of how to fix this issue. I think the first step is involving a 50 millisecond market tick, so you can allow for more price updates and kind of close this information gap. The second step is in-protocol ordering, where a proposer still batches transactions, but the ordering rule of highest LAMP ports per CU is enforced during replay and not by the proposer. And then finally, multiple concurrent proposers. which this is the full MCP architecture. Essentially how it works is a client can submit a transaction to any one of these proposers. The proposer will then erasure code the transaction into shreds and send them to relayers. Relayers will sign an attestation that they seen this data, and the leader can no longer selectively exclude transactions, allowing the protocol to have full censorship resistance. So connecting everything together with all the performance improvements with XDP, 100 million CUs, it will help make the protocol fast and reliable. At the consensus layer, you have Alpenglow, you have MCP that will help make the protocol fair. And then finally, applications, where you have prop AMMs, DEXs, and trading infrastructure that can all thrive on Solana. So really, everything that Anza ships in 2026 is built around this vision of a fast and fair network that can facilitate internet capital markets. And this has always been the vision for Solana from day one. The founders have been very clear at wanting to support infrastructure that can compete with NASDAQ, and that is what the team at Anza is building towards. So with all that said, we have an event later tonight for market makers and trading desk. If you'd like to come, feel free to reach out to me. You can find me on Twitter. Make sure to check out our Anza blog, check out our GitHub, and thank you, everyone.
Now you'll be able to invest in real-world assets through 2WA, a Singapore-licensed RWA platform. And here to tell you a lot more about it is their head of growth, Andrea Chang.
Hey, everyone. Thank you for being here and to hear about 2WA's presentation. And as you can see from the cover, our slogan is from Wall Street to your wallet. That means in the past that actually Wall Street assets, the premium assets were not very accessible to many people. So that's our mission, to bring these premium assets to your wallet. That means it's very accessible in your own wallet, that it's tradable in a very low barrier. Because we know in the past, oftentimes, these assets are not really accessible to the mass majority. That means you have a really high entry barrier. It oftentimes starts with $1 million US. But now at our 2WA, we're able to make it down to really low barriers such as $1. And you can also offer other investment options. So we are an emerging RWA platform on Solana. I think among the audience, there are potential Solana products and also the other projects who want to build on Solana. We chose Solana because it's the most efficient chain, and also it offers the institutions the most trustworthy experiences. And also, in the past, we're making sure that for the high-growth private markets to be accessible to the mass majority, and it's liquid enough and also borderless. That means you can trade 24 hours in a day. And the most important thing that we're presenting here that what differentiates us with most of the RWA platform is that we are Singapore license backed. We are in strategic partnership with the leading fund management company, Alpha Lighter Finance, and we have 10 licenses that ensuring us to make these solutions grounded in Singapore. That means in a legal framework, that's regulatory compliance. So that means all these kind of solutions are actually accessible in the real world. And moving on, our mission is quite simple, as we have stated for multiple times. We're empowering everyone with top-tier tokenized opportunities with a really low entry barrier and also high premium assets with real good quality. And as you can see, here are the core reasons to partner with us and also to invest in the platform. Firstly, not only limit to private market offerings, we also have the other pre-IPO deals with really good discounted prices that's only accessible on 2WA. because we're such a team with a mixed background. There will be people from Web3 background, PE background, and we're trying to source the best deal globally and to make it accessible to the general public. So such a mixed background ensuring us that we can utilize resources from multiple perspectives and try to bring these kind of benefits to the mass majority, to the audiences. And second thing, also the demand-driven liquidity flywheel, because as we are sorting out the problems from legal perspective and also from these great assets from all over the world, we're ensuring that these kind of assets can actually be seen in this kind of flywheel and then also going to the consumers. And also third thing, we have a really strong tech team. They are working really hard, and although they are not here at the event, but trying to ensure that all these kind of assets are in safe custody. So that's why we have potential private equity fund trusting us, allowing us to do such activities. And also we have the determination to deeply integrate into Solana ecosystem. I believe that people who are here, you have a deep connection with Solana ecosystem, that we also have the substantial growth in user base that ensure that most of the traders can access these assets in the ecosystem. And also here is a glance of the category-leading assets primitives that we will have these assets traded in the platform, already released in the first batch, such as XAI, 1X, the leading robotic company, AirWallex, the fast-growing fintech companies. These are all tradable on the platform in a short period of time. And also here, we want to give a special shout out to Alpha Ladder Finance to ensure that how the PE shares are turning into the 2WA tokens and to be tradable in the platform and to be accessible through our distribution partners from the exchanges. So here is a brief mechanism. And also special shout out to Solana and Alpha Ladder Finance all together as a strategic partners of ours, because we believe that in Solana, everybody is pretty grounded to have these support to us. So as you can see, here's our product highlights. We have the fractional investing hub, assets transparency dashboard, and the incentive and achievements, making sure that the traders are really incentivized, and also to making these kind of informed decisions while they're trading the assets, so they know what they are trading, what kind of decision they are making. At the end of the day, we want to make these premium assets only limited to private equity in the past can be accessible to the general public. So thank you for your time, and feel free to reach out to us if you have any questions or any interest in the platform. Thank you so much.
There's one team that's been working for years tirelessly behind the scenes to make assets accessible as possible for you to trade on Solana. Allow me to welcome an old friend, the CEO of Wormhole Labs, telling you about their latest product, Sunrise. Let's give your hands up for Saeed.
Thanks. Thank you. Hey. Good afternoon, everyone. I think I want to start out by just kind of talking a little bit about where the industry's at right now. I think we do have a couple of tipping points or inflection points in crypto. Despite the volatility in the market, despite the price of Bitcoin, despite maybe a lot of the macro risks that are out there, when you look at some of the fundamentals about the space, they really are unprecedented. When you look at what governments are doing, what regulatory bodies are doing, when you look at what financial institutions are doing in this space, traditional legacy companies that are in the financial space investing billions of dollars into modernizing their tech stack And a cornerstone of that is crypto and cryptographic technologies. I think you kind of have to pause and really understand where are we in the cycle, where are we in terms of this technology being adopted. And again, it's not just fintech, it's technology, it's legacy standards that have been in place for 50, 100 years. The conversations have completely opened the door, and we've seen that increased investment. So me at Wormhole Labs have had the privileged position of talking to a lot of these institutions, a lot of these RWAs. And in those conversations, what they are trying to do is they are trying to build gateways or bridges or issue assets on chain or bring the financial products that exist in the traditional financial world on chain, and then take it to, and then make sure it's available to this new user base, and make sure that it actually decreases the costs of their business for their existing user bases. So in these conversations, we've really dug deep and understood what are the pain points for these asset issuers, not just crypto native token projects, but also, investment banks, asset managers, commodity traders, traditional commodities exchanges. And a lot of this first kind of foray into crypto has to do with how do I take what I have today, tokenize it, and then issue it on chain, and make sure it's distributed, make sure it's available to all crypto users, make sure it's available on all blockchains, and make sure I am going to the places where where demand can meet supply, right? So that's kind of where Sunrise comes in. Sunrise is really born as a platform that, like an asset gateway that allows for different asset issuers to come in and issue their assets on Solana, list on Solana, find new token holders, find new communities, and then find new distribution on this chain. And to do it in a way that actually provided healthy liquid markets. We've done several asset listings in the last few months, and they've all been slightly different. Some have been existing tokens, some have been brand new tokens where you kind of see the Solana ecosystem shine and compete with centralized exchanges in terms of liquidity on day one, minute one. If you look at the Monad listing on Solana, if you took that listing on Solana and compared it to the entire SEX universe in crypto, it would have been ranked 5 globally. That's pretty substantial. When we launched Hype, we did over 100 million in volume in the first 7 days. Hype was an existing token, Monad was a brand new token. Both have very different mechanics around them. But we can clearly see that there's some product market fit here. There's a lot of inbound coming from not only crypto token holders, but now from the institutional side as well. So other tokens that have done really well on these listings are Infinex and Lit, the Lighter token. 113,000 wallets have engaged in these asset listings. This is kind of a big deal because when you're deciding as an asset issuer, where do I want my assets to live? Where is the opportunity for healthy liquid markets to be created around these financial products? It really comes down to, are there real users? Are there people who are willing to engage with the products that are launching? And on Solana, you really can't beat the Solana ecosystem when it comes to that. When you compare Sunrise launches to some other launches that happen at the same time, there's a clear difference. So first impressions matter. The way that you approach bringing your asset over from Ethereum to Solana or from another chain to Solana really does matter. And you can kind of see that in the data. And then just to wrap up, Sunrise helps everyone, really. If you're an asset issuer, if you're in crypto or in TradFi or building something completely brand new, and you want to access a wider distribution, a wider network, please reach out. It doesn't matter if you already have a token or if your TGE is in next month. Sunrise can really help. And it doesn't matter which framework you're using, which bridging partner you have, the underlying technology can support all token standards. So that's it. Thanks, guys. Appreciate it.
Thank you, Sunrise, to make this vision of internet capital market become a reality. Our vision for internet capital market is all the assets, all the market in one place, Solana. And today we're very excited to welcome a major player in South Korea to share some good news with us in Hong Kong. And next, let's welcome Jay from Mirai Security Assets from Korea to share some new updates. Welcome.
Good afternoon, everyone. My name is Jay Kim. I represent the digital asset division at Mirai Asset. Our division drives global strategy and business development of digital assets in our group. Today, I would like to briefly touch you on our overall vision for tokenization. So just for the background of our firm, our firm, Mirai Asset, is one of the largest independent financial group in Korea. We manage around 750 billion US dollars in assets globally. We operate from investment banking to asset management, brokerage, venture capital, and so on. In global stage, we operate in 19 markets. In Asia, we have presence in Hong Kong, Singapore, Vietnam, India. We also have one of the largest ETF brand in the United States called Global X, which specializes in artificial intelligence investing and blockchain and so on. So as a traditional securities firms, we have decades of experience in delivering high-quality investment opportunities to our investors. We are now applying blockchain to leverage what has been very successful for us for the past decade. Our vision is very clear. Our vision is to tokenize premium assets on-chain through our platform with 24/7 trading, which supports instant settlement, and also programmability features, which allows innovations like collateralized lending. And this will be all distributed through our digital assets. So digital asset will play a key role in connecting our clients worldwide through a stablecoin and tokenized assets. So we believe that tokenization is very important when it comes to regulation. Tokenization without regulatory compliance is not effective in practice. We believe that security tokens are securities before they are tokens. So you need to, if you want to issue and distribute these security tokens on platform, the platform needs to be designed in line with regulations in each jurisdictions. So I would like to emphasize here that Mirai Asset is one of the is a fully regulatory compliant institution. It's one of the most trusted in Korea and globally. So as for South Korea regulatory compliance, we are following a two-track approach. So basically, in step one, we are preempting the market with compliant tokenization engine, including tokenization middleware, which reflects the local regulations. Built on top of that, as we see the changes in regulatory stances, we would like to expand towards more public blockchain like Solana, and extend our tokenization product to more traditional securities like equity, debt, funds. And also, as for the distribution channel, we would like to extend our distributions from locally to on a global scale through public blockchains. So our collaboration with Solana is that we believe that we are in alignment with the ambition that Solana has, which is to be the internet capital market. In that regard, we believe that we are fully on board. In the context of companies raising funds through blockchain, we would like to also onboard our client companies and help them tokenize and secure funding through Solana. And our investors will be able to subscribe this type of investment opportunities through our wallets. So with that being said, our wallets is very core to our business. It is, as a traditional brokerage firm, we want to help our clients transition from Web 2 to Web 3 by leveraging digital wallet as a foundation. So through this wallet, we will enable our customers, our clients to experience on-chain financial services, which I believe in the future, all of the traditional financial services will be on-chain. And Solana is at the center of this, of building this ecosystem, and they're very fast pace. So also, additionally, I want to mention that there's a permission chain built in Korea, which is very compliant with regulatory standard, but we would like to build an interoperability between Solana and permission chain. And we think that this will help security tokens in Korea to enter into Solana and integrate liquidity on a public blockchain. And for instance, we could explore ways to tokenize public equities, like from Samsung Electronics or SK Hynix. These equities have high demands overseas nowadays. This could be distributed in Solana through our platform. So that's all for me. Thank you for listening. We are open for discussion and open for collaboration, so please feel free to reach out to us. Thank you.
Thank you, Jay, for the sharing. And in this year, except of the institution topic, what most talked most is about the prediction market. And today, we are very excited to welcome Dan from DFlow to talk about the prediction market on Solana and how they bring Kalshi to Solana. Welcome, Dan.
Hey, awesome. Thank you very much. Super happy to be here. So if there's one takeaway that I'd like to leave you all with, it's that even though token prices are down right now, prediction markets are in a bull market on Solana. So let's dive in. 400 plus apps on Solana's prediction market stack. So for some context, DFlow builds low latency trading infrastructure on Solana. Today, this is expressed both via prediction markets, which I'm here to talk about, and our spot trading API, which acts as an aggregator across all liquidity sources on the Solana network. Currently, the DFlow spot trading API, which went live 10 months ago, has done 45 billion in volume, has over 1 million monthly active traders, 47 million in fees paid out to integration partners, and 1.5x average month-over-month growth just on spot crypto trading on Solana. In December 2025, just 2 short months ago, we released the DFlow Prediction Markets API, powered by Kalshi Liquidity. DFlow here essentially acts as the tokenization layer that rests between the Solana network and Kalshi's off-chain prediction markets order book. And here, the beneficial trade-off is that Solana users receive market access to one of the most liquid prediction markets exchanges in the world. Kalshi is also currently CFTC regulated, so they're one of the safest prediction markets exchanges in the world. And of course, Kalshi receives all of us access to the world's most active and opinionated traders that live on-chain on Solana. And here, tokenization is really a key building block that we've focused on at DFlow. This is not simply just another wrapper of Kalshi's front end. This is a brand new primitive for tokenizing prediction market positions and bringing them onto Solana. And what this allows for is borrowing and lending of these token positions, liquidity formation in launchpad mechanisms, and then prop AMMs to begin quoting these prediction markets tokens. And of course, this all leads to the overarching serendipity of what builders want to build on top of this API, expressed here with the party emoji, because you never really know what it'll be. So we've kind of talked about the D-Flow tokenization as a building block here, represented between Solana and Calci. On top of this, applications are building embedded wallets. They have cross-chain enabled because many applications want to aggregate both Polymarket and Calci, and Solana is seeing a large flow of funds from Polygon onto Solana. And then, of course, fiat on and off ramping for everybody to be able to deposit quickly into Solana or USDC. At the very top of this pyramid, developers are building real-time data, which is incredibly important, especially within prediction markets trading. AI-focused co-pilots and trading strategies for things like vaults. And of course, social feeds for trading with friends. So far, the D-Flow Prediction Markets API, in just about a month and a half, 2 months, has done 15 million in cumulative volume, about 5,000 active traders per week, 233,000 in fees paid, and then, of course, 2x average week-over-week growth. With this, we also saw a record day just 2 short days ago for the Super Bowl. So Super Bowl 60 was one to remember, and the D-Flow Prediction Markets API did about 820K in volume in that single day. These are all small numbers right now, but as more events, more adoption happens, we are very bullish that this will grow quite large on the Solana network. Last Friday, we announced D-Flow Proof, which is a brand new feature for prediction markets, allowing users to verify their on-chain identity. And very soon, we'll be rolling out a P&L endpoint, as well as limit orders for prediction markets. So here's the meat of it. Who is building on the Solana prediction markets stack? Well, I'm happy to announce that as of February 2026, we've distributed over 400 API keys. And this includes things like centralized exchanges that are now offering prediction markets, some of the largest Solana wallets that exist today, like Phantom and Solflare, and then many large trading applications, cross-chain applications, terminals, et cetera, that live on Solana and want to service prediction markets for their users. And really, a very key part of this is the fact that many of these teams are now touching Solana for the first time. And I want to emphasize this because this does not happen often in the ecosystem. In fact, the last time that you saw something of a large influx of brand new applications come over and touch Solana and start transacting on chain actually hasn't been for a couple of years. And so we're also really excited to announce today that 200 plus new applications have now been brought onto the Solana network, are transacting on Solana, are touching Solana, and of course, that means that they're adding liquidity and their infrastructure to bolster the ecosystem. This also kind of further cements Solana as, if not the best chain for prediction markets right now, then definitely one of the best here. And so builders are excited, and we're excited as well too. It's our goal internally in 2026, this year, to have over 1,000 applications built on D-Flow. And from this, we're really excited about a bunch of key initiatives within prediction markets. Things like professional terminals for really low latency trading and real-time data. Things like niche markets for culture, for music, for celebrities, things that are very popular within like pop culture today, even weather for prediction markets. Many apps are kind of building on this like core focus. Data vendors for surfacing a ton of data that rests in prediction markets today and applies those to real-world events such as elections, as we're kind of all familiar with. And then, of course, like social trading apps for friends. Things like copy trading, things like trading within group chats, shared wallets, et cetera. And these will all be massive primitives for retail adoption of prediction markets, and especially prediction markets on chain on Solana. And then lastly, yield products. This one is really important because there's a certain cost of capital that goes within placing a prediction markets bet that happens over the course of like 2 or 3 years. That capital is locked up, and currently, there is no way to get yield on that capital on chain. This is something that we're kind of focused very heavily on so that you can make a prediction markets position that will rest for a couple of years and then receive yield on your USDC. Thank you all very much for having me. Excited to be here and excited for you all to build with D-Flow. Thank you.
SafePal is the most long-standing and trustworthy brand for both cold wallet and hot wallet in the ecosystem right now. And one of the reasons that they've been so strong is because they never stopped innovating and pushing for excellence. But here, I'm very excited to welcome one of my oldest friends in the ecosystem, Veronica, who is the CEO of SafePal. She's here to tell you something really exciting, and I can't wait to hear it with you. Veronica, welcome.
Hello, everyone. It's great to be here. I've been spending my time at the booth earlier this morning. It's great to see a lot of familiar faces in Hong Kong, and especially at the beginning of the Lunar New Year. So a little bit about SafePal for those who might not know yet. So SafePal is a wallet that was founded in 2018, so it's the 9th year that we're serving the markets and serving the retail and crypto investors since then. And currently, about 30 million retail customers, investors, crypto holders, big whales are using SafePal wallets to manage their assets up to $40 billion worth. Of course, volatile, depending on the market situation. And we've been covering 16 languages and also more than 200 countries globally already. But what is most notable and something that we are very proud of ourselves is that we have established partnership with a lot of ecosystems. So we have supported more than 200 blockchains. We have built successful, sustainable, fruitful, meaningful connections with the builders in the ecosystem. And Solana is definitely one of it that we have been supporting since 2021. Not just about supporting the full assets and the mainnet, we have also supported some of the leading assets such as RWAs, XStocks, and also other trending vectors on Solana ecosystem. And also we have the native integration to allow source holders to stake, to swap, to grow, and to manage their Solana assets. So today, we want to bring this step even further. So today, we are announcing a builders grant for Solana builders for the ecosystem to support the long-term growth and sustainable growth of the Solana ecosystem. So the grant comes in two parts. With the grant recipients would be able to enjoy the go-to-market package that we provide, including a hardware wallet that is co-branded and limited edition for Solana ecosystem. And participants and grant applicants can use this opportunity to onboard users with enhanced security. And we can drop these hardware wallets into your community as one of the most advanced and security step to connect with the meaningful communities. And the second part of it is that we would like to introduce Solana ecosystems and builders to the 30 million, the most active and large communities that we have built over the years. Something that we notice is that it's not just about introducing token airdrops. Token is a neutral thing, but what matters is that how we introduce it to incentivize the proper usage and to boost the process of user retention. And we have noticed that the pain point of a lot of project builders is that they cannot find attraction. They cannot find a touching point with the target customers that they are serving. So we would like to provide this launchpad. We would like to provide this program to support the early stage startups and builders in Solana ecosystem so that they can build connection, build engagement, and build conversion and retention through this growth pack that we provide. So that is a main goal, and also as a further step in supporting the growth of the Solana ecosystem. And today, to celebrate this launch of the grant program, we have a very limited amount of Solana limited edition of hardware wallets being distributed to all of you, the ticket holders and participants and VIPs and speakers, etc., at our booth. So you can meet the whole team, including myself, at our booth at the Japanese theme, right at the corner across the venue. So hope to see you there. If you are ever building something on Solana ecosystem, welcome to talk to us. You can scan this QR code to talk to our representative, leave your information, leave notes regarding how we can support your growth, and I'm sure we can definitely find something customized to support that. So that's a very brief sharing of what we're doing and where we're heading for. So we'd like to take the last few seconds to congrats everyone of standing here, even through the market the volatility and through the uncertainty. Definitely would wish to see you in the new year to come and wish you a very prosperous new year to come. Happy New Year. Thank you so much.
Thank you, Veronica, for this sharing. And next one, I'm very excited for this again. But this one will be moderated by Paul from Cumberland, talking about their liquidity and digital asset trading in 2026. Welcome.
Shall we?
Yep.
Oh, how cute.
Hey, everyone. Can everyone hear me okay? Amazing. So, nice to meet everyone. My name is Paul Kremski. I run business development at Cumberland. Cumberland is a trading firm and a market maker. I am incredibly excited to be sitting up with these two individuals. I think it's a very interesting group we've got in here because I think that it could be argued that Fireblocks and CME have actually brought more institutions into the crypto space than any other companies. Before we dive into it, I do want to give our panelists here a chance to introduce themselves.
Great. Good morning, everyone. My name is Amy. I lead the Fireblocks business in APAC. Very briefly, Fireblocks support many institutions, going from your 2 man in a garage trading crypto all the way to some of the largest financial institutions, banks in the world, really enabling them to have a wallet, have them connectivity, and allow them to manage their digital assets in a very secure way.
Hi all, I'm Giovanni Vicioso, Global Head of Cryptocurrency Products for CME Group. For those of you unfamiliar with CME Group, we are a 180-year-old institution that has really been at the center of developing derivative products. We entered the crypto space in 2016 with the introduction of a reference rate, providing price transparency. And in 2017, we introduced cash-settled Bitcoin futures. Fast forward to where we are today. We now offer futures and options on futures on Bitcoin, Ether, most recently Solana, XRP, and just on Monday, we introduced futures on Chainlink, Cardano, and Stellar Lumens.
So guys, I know that you both want to talk about how and what your platforms bring, but I want to talk about why first. And we're talking here not just about liquidity, but institutional liquidity. Why do institutions want to come into crypto?
It depends, actually. I think for a lot of them, it's a revenue opportunity, right? If you look at institutions for trading firms, crypto presents a really exciting dislocations for them. There are a lot of opportunities here that are risk-adjusted and have really great returns. So on one hand, for the trading firms, that's what they really care about. I also would include institutions like payments firms. And I talk a lot about this historically, but really for the first time ever, payments companies and PSPs are no longer fighting over tiny basis point spreads, and money actually can be moved on chain, when historically all the payments firms are doing was just doing API inputs into a bank's infrastructure. So that changing business model also drives a lot of reasons why institutions come to this space as well.
Yeah, and I'd say it's been an interesting space, right? Because when you look at the development of crypto, it kind of really started almost kind of like person to person, right? It started with retail individuals speaking about initially Bitcoin and then carrying out to other cryptos. So it's almost like institutions are playing almost like a catch-up game. But I'd say that with some of the regulatory clarity that you're seeing in the US and globally, with some of the more crypto-friendly administrations, you're beginning to see more and more institutions enter the space. There's more conversations. We go back to 2017, there was a lot of speculation in the marketplace. There was curiosity. But now you hear more and more institutions talking about the tech, deploying the tech, but you also see more and more institutions now trading the actual cryptocurrencies.
And I remember, 3 or 4 years ago, if I would come to a panel like this and you would talk about what the hurdles are, it was a very easy point to say institutions will come into crypto as soon as the infrastructure is there.
Right, yeah.
Amy, this one's for you. Have we gotten to a point yet where the infrastructure is sufficient for institutions?
I've been in space now almost 8 years. And I say this every single year, that yes, we are getting there, but still a lot of things remain quite challenging, right? First and foremost, I think institutions have to think about security. The reality is digital assets, if you're trading spot, is a bearing instrument. You have to figure out how to manage it. And I really thought at this point, 8 years in the industry, I'll stop talking about hacks. But last year was one of the biggest years in terms of cybersecurity concerns. That's still top of mind for a lot of institutions as they wrap their head around, what do I do with the bearing instruments and how do I ultimately get access to those? But also on the flip side, if you look at what some payments companies are thinking about, yes, previously they can just API into a bank to help them facilitate transfers. Now, if they want to deal with stablecoins, they themselves need to figure out how to do AML. They got to figure out how to comply to travel rule. And all the nuance that comes with that is a hurdle that they have to overcome. But I also think that many folks in the industry have made that relatively easy for them to overcome those hurdles so they can get into the space.
Yeah, and these are all, I think the infrastructure is there, but it still needs to be patched in, and these companies need to get used to who are the service providers, who they need to be talking to, and then they have to actually do it. And then you have this beautiful product at the CME where they're probably already hooked in. They're probably already set up. They're probably already trading on the CME. So what role do the CME futures play in the go-to-market for entities coming in?
Yeah, so great question, right? As I mentioned earlier, CME has been doing this for a long time, right? And you don't survive that long if you don't innovate, if you don't adapt, right? So our decision and the role that we play in the marketplace is, in order for these institutions to want to enter the space, they want regulation, they're going to want familiarity in terms of products, right? They're going to want liquidity, right? And those are all things that CME has been able to provide for the marketplace. So we are the leading marketplace for derivatives across 6 major asset classes, and adding crypto to that, let's call it 7 asset classes. But we've been helping market participants really manage the associated volatility and risk around these different cryptocurrencies. And when you consider, say, what happened, say, October of last year, what just happened recently, what we've seen in the marketplace is that as these stress events occur, we are seeing more gravity toward the CME products, because we're bringing legitimacy to the space. We're providing like a trusted exchange where buyers and sellers can meet. So when these events occur, we tend to see an upswing in terms of volumes. After the October 11th event, our open interest across all 4 cryptocurrencies or futures that we list went to number 1, compared even to the likes of some of the unregulated perpetual platforms, right? And something, again, that we saw just last week when we had another crash, and we once again saw we had our second best volume day just last week, and we're seeing, say, more open interest or more institutions as well as retail clients really adapting to our products.
And is that a function of open interest disappearing from some of the the crypto native exchanges, or is it people saying, actually, I want to move it over actively to?
I think it's a combination of both, right? Because when you consider like some of the issues I think in the space, perpetuals, for example, are quite popular, right? But perpetuals carry a lot of risk because there's like maybe too much leverage in the system. So when you have these events, perpetuals kind of like make that more of a cascade. So it's like a snowball effect where it just becomes a bigger issue. So you do see open interest decline on some of those platforms, and you're seeing those entities that are risk managing open interest grow on our platform.
And so I think over the years, liquidity has flowed to different parts of the ecosystem, whether it's regulated exchanges, these global crypto exchanges, on-chain, and bearing in mind that we are at a Solana conference here. It's 2026. Could you give us, and this is a question for both of you, could you give us kind of an overlay of like what liquidity looks like in general, and maybe where it's going as well?
Yeah, so I think an interesting development in the crypto markets, right, was really the introduction of spot ETFs that occurred in 2024. So now there's spot ETFs for Bitcoin, Ether, Solana XRP, for example. And that has been a bit of a game changer, because what happened is that it allowed different market participants to enter this space. So participants that didn't want to deal with wallets, potentially didn't want to deal with any potential risk with some of the centralized exchanges, the ETF really provided a familiar product where now they could more safely, if you will, enter the space. So what we saw, and you consider, say, CME products, we are sort of at the benchmark. In addition to futures, we also have benchmark products covering now over 30 different coins. So the majority of the ETFs are based on one of our benchmarks. So that's really helped to create further gravity around our products. And all these markets are essentially interrelated. So as you see more participants trading and getting access through the ETF, it means that there's more volume on the centralized exchanges. It also means that there's more volumes on our exchange as some of the liquidity providers the creates and the redeems are relying on the liquidity of our products to support ETFs. So it's very much a very interrelated marketplace where volume really begets volume across all these different platforms.
I would say maybe the contrarian to that is there's a bifurcation where liquidity historically have lived in the crypto exchanges. Now there's a pocket of liquidity that I call the crypto world, which essentially makes up from the crypto exchanges and the DeFi platforms. And there's pockets of liquidity in the TradFi world, which is byproduct of ETFs, and then trading spot on places like Coinbase, and then the subsequent product me. There is some overlap in between, but actually I'm seeing more and more of those things separating because folks are trading on different platforms, they're tackling different things.
Mm-hmm. Yeah. And then for Amy, how does Fireblocks help their customers access this liquidity?
Yeah, I mean, there are a few ways, right? Number one, for a lot of our clients who need to get access to exchanges, they can use us to connect various different exchanges, but more importantly, actually, our clients are getting liquidity through our partners. So I used to give you an example. I use stablecoins as an example because it seems like a hot topic these days in Hong Kong. Majority of stablecoins are still ultimately being traded to facilitate crypto trading. And the largest crypto trading firms are using stablecoins to settle. So for us, a lot of times it's plugging in our clients to partners like Cumberland, like many others, to get them access to those liquidity, not just for crypto trading, but actually for TradFi folks who are coming to this space, doing payments use cases, doing corporate payment use cases, and so on and so forth. So that's actually where we're seeing a lot of the connectivity happen as well. And the other point of view I see quite frequently now is this concept for institutions to get access to DeFi, right? I think we talk about DeFi always. Now I feel like DeFi is back on again, where clients and customers are getting access to a lot of DeFi flows and doing lending and borrowing through DeFi platforms in a pretty decent size than a few years ago.
Yeah. One thing at Cumberland that we find on the OTC side is that folks will do a trade with us and they'll say, when can you settle? And we'll say, we can settle tomorrow when the bank opens.
Right.
And then they'll say, well, can you do better? Yeah, we can. Let's do this trade against USDC or USDT, and then we can settle it, in 30 seconds. Let's highlight some of the differences because we've talked a lot about, okay, this is what the TradFi world looks like. This is what the crypto native world looks like. What are some of the key differences, and is the gap going to close or is the gap going to persist?
I think there's a convergence happening. What I mean by that is essentially you've got the TradFi folks trading crypto product in a crypto wrapper, and then you got the crypto guys trading TradFi products wrapped in a blockchain wrapper as well. And if you go and talk to some of the biggest crypto native firms, and you see their last round funding and what they spoke to their investors, it's 100% about taking their expertise, their pipes, and their structure when it comes to blockchain access, and then ultimately trading traditional products. So that convergence is already happening. I would think that if you look at what TradFi firms are used to, not many of them are used to trading 24/7 industries, right? If you look at what happened recently, where some of the U.S. stock exchange settled into T+0, and all the Asia guys just completely panicked. Like, what do you mean you're gonna come in on a Saturday to settle trades, right? So that the reality is most of the TradFi world don't really run on 24/7. So there's that big learning curve that we see happening right now, where the two things are converging.
But I'd say, when you look at 24/7, obviously crypto markets are already 24/7. And I think that TradFi just has to get there, right? And I think that it's inevitable that TradFi markets will move to 24/7. In the case of CME products, we have already announced that we are going to offer, say, our crypto futures and options. We are going to be extending those to 24/7 trading. We anticipate that to go live sometime in early Q2.
I mean, I would say be careful what you wish for.
Yeah.
I used to trade commodities, and I traded Eurodollars in the CME, and I also used to have weekends, and that disappeared when I joined the crypto industry.
I hear you. But it is a way of the world now, right? And initially, for us, it's crypto initially, and we'll see how clients want if clients say want to trade other asset classes 24/7. It's something that we'll keep our eyes open to.
And this is for both of you, how do you decide what products to build for your clients? Gio, you mentioned you just added several new coins. Amy, I know that your products team is amazing.
Yeah.
How do you guys prioritize, like, okay, this is the thing that people are asking for that we have to build?
A few ways, right? I think number one, customer demand is definitely the most important thing. Like, we don't really build anything unless there's sufficient customer demand. But also, we think a lot about engaging with our customers, which are very innovators, and asking them like, what do you guys need 12 months, 16 months? Like, what do you see the trend is happening to make sure we're future-proofing a lot of our product stack to support them as this journey goes on? And I give you an example. Back in 2020, we actually were one of the first platforms to launch like DeFi access. And nobody cared, honestly. Like, it was like the volume was so little. We told guys like, hey, listen, you can access the DeFi with this Uniswap thing, it's amazing. And our clients were just like, yeah, I'm not making any money on it, I don't really care. And then somehow in 2021, everyone cared about it, right? So there's that element of figuring out like what's next, and what do people really care about? But at the end of the day, I think it helps that we have lots of customers spanning across the whole entire industry, and many of them are actually giving us ideas on what they're seeing as next and what they expect their wallet infrastructure to be able to support as they continue to tackle revenue opportunities for themselves.
And I agree with what Amy says, right? For us, we're always listening to clients and really trying to introduce products where there is that client demand. But being a regulated entity, we also need that regulatory clarity, right? And if you consider, we launched Bitcoin in 2017. There was certainly clarity there from both regulators in the US, but it took us another 4 years to launch Ether, another 4 years to launch Solana and XRP, and then, recently launched 3 additional. So we need to have that comfort. So it's regulatory comfort first, client demand second, in terms of how we decide to launch these additional cryptocurrencies.
And I noticed recently that, you have 7 products that are listed on the exchange, but 3 of them just came this week. So you've almost doubled the product set just this week. That's an acceleration. Is there something in the water? Is it the market's getting bigger? How did you guys come to this point?
Yeah, I think what we've noticed in the marketplace is that, institutions in particular, right, you still see a lot of gravity toward Bitcoin. Bitcoin, in terms of market capitalization, is, between 50-60% of the market. But what we started seeing last year, particularly after the passage of the Genius Act in the US, we started seeing more interest in platforms and coins such as Ether, Solana, as those platforms help to facilitate, say, stablecoin issuance, for example, right? So we really started seeing more interest beyond Bitcoin and into some of these other coins. In fact, Solana and XRP were our most successful crypto launches, where those products, in a matter of months, went from 0 open interest to over $1 billion in open interest. And they did that much faster than Bitcoin, much faster than Ether. And I think that's a trend that's going to continue, where we are seeing institutions as well as individuals really look to diversify across the crypto space.
And I think we've talked mostly about futures here, but you guys also have options products. And how are your customers using those options products?
Yeah, so great question. So we introduced options on Bitcoin in 2020. I think when you look at the options market for crypto, it does tend to be a small market. And I think part of the reason for that is because of the existence of perpetuals, where a typical retail investor who's looking, say, for that leverage would trade an option. But now you've got a perpetual that could offer you, in some cases, 100x leverage. I'm going to trade that product versus an option. But we are beginning, options are a tool that make a lot of sense, particularly when you consider, how volatile the asset class is. So we are beginning to see institutions now begin to show interest in options, right? We're doing about $200–300 million a day across our options suite. And just this past week, with the rise in volatility, I think we saw like a 3x increase in options activity compared to where we were last month.
Okay, and you mentioned stablecoins here, and Amy, I'm going to do this is for me, this is my live market research. What are your customers looking for when it comes to connecting with the market and utilizing stablecoins? And frankly, how can a service provider like Cumberland make a better product? And I'm doing market research as well.
I think stablecoins for a lot of our banks or payments customers or corporate customers, for them, I think they talk a lot about trust, but actually not about trust, it's about liquidity. Because ultimately, if you can use stablecoins and you can spend it immediately 24/7 all the time, you actually can adjust the counterparty risk quite efficiently for these payments customers. So for them, they need to figure out, how can I get access to stablecoins? How can I sell it? How can I sell it 24/7? How can I sell it in size? So a lot of times, what I'm seeing from some of our payments customers, when they first started off, they may be happy working with other PSPs to enter into a new market, because maybe they don't have a license to operate at that point. They're doing small volume, and really the basis point doesn't really kill them in the end. But the second they start doing something like $100 million a month in volume, then they're really getting into the basis point game, and they need to find liquidity providers that can do those sizes to them consistently in the market that they can get access to. The other thing I would say also, there is a bit of debate right now for stablecoins around people doing third-party payment, right? Like right now, everyone can do first-party. Like if you and I buying stablecoins, no problem. But more and more these use cases, clients are asking, can I do third-party payment? And how do I facilitate those? How can I get local banking relationships? How can I get access on and off stablecoins to a fiat rail that is in my jurisdiction so that I can ultimately finally settle? Because the stablecoin industry right now is very like half, call it access. There's usually one leg that needs to be off-ramped or on-ramped somehow for them to utilize this. So those are the kind of the two things that a lot of institutions are asking for.
It's good food for thought.
Yeah.
Guys, I really wanted to thank you both for taking your time to come here to participate in this panel. This has been a lot of fun. And for the crowd and for Solana Accelerate team, I wanted to thank you guys for spending time with us as well. So, thank you very much, guys.
Thank you.
Wow, have you guys had a lunch yet? Well, we are about to having our very last sharing of this morning, and we already had a lot of talks from the institution. And next, I would love to welcome our favorite Mabel, the founder of Trends.Fun, to share more voice from their community. Welcome, Mabel.
Thank you, Yao. Well, this is like the last thing before lunch. I'll make this exciting for people, and I have something really, really fun to show you guys. I literally edited this like at the backstage because there's like something happened this morning I wanted to share with you all. So my topic today is about Trends being a venue for people to trade high-value driven events. So before that, let's dive in and talk about, what is consensus? So the formula of consensus basically have 4 steps. One is the original event, which is like you have something happening on social media and caught your attention. And then later on, you have subsequent milestones. For example, like if we use the example of Labubu, like you have the Labubu created first, and then like you see someone, people like Rihanna, like Blackpink, they wear it on Instagram. And later on, there are a few other people who are celebrities and NBA, they're just like walking on the street and they got spotted that they have Labubu. So that's how an event turned into a cultural phenomena. And then a cultural phenomena, that is consensus. So trading on Trends, we're trying to turn these events into a token. And then for the ones that actually reach a lot of people, a lot of key person interaction, people can trade it and then reach higher consensus. I'll give you the example that I was going to share with you all. So this morning, totally retweeted, someone created a short drama. I'm not sure if you guys follow Seed Dance by ByteDance. It's a video, short video clip AI that recently launched. They were quite viral. I wasn't sure if someone doesn't have a Douyin, which is a Chinese TikTok, could create it, but like people in mainland China and also a lot of other like Chinese-speaking region, people are using it, and then they're generating 50-second quick short clip. So there's this guy like Drop TV, I don't know who they are, created a Seeker ads that's like a short drama, and then totally saw it, and he's like, this is our Super Bowl, so let's watch it, what it is.
你拍的爽剧收视率每个月都是垫底，你被炒鱿鱼了。谢谢你，你看起来愁眉苦脸的，是遇到什么事情了吗？我被开除了，没了收入。看你人不错，送你一台 Seeker 手机吧。只要你输入你想要的任何物品代码，它就能变出真实的物品在你面前。真的吗？我试试。 我想要一个能穿越到游戏人生的时光机。我去，真的穿越了！你在这儿干嘛呢？看起来像是新来的。
All right, this is 50-second, really. So what is this? This is like a beginning of the event, right? And then after this launched, this become a token on Trends.fun. And right now it's sitting at 30K, but then it's been traded for like 200K already since this morning. It generated close to $2,000 worth of creator fee. And then everybody in the community who are supporting this coin is asking Drop TV to adopt this because Totally actually retweeted it. So like, what is the creator fee here? It's basically allowing people to bribe the non-existent social graph to form. Like, you don't need to wait the social graph with someone who you don't know to form like, until someone introduces you. Now you have the money and you can bribe that to happen. So it's turning the social capital into market liquidity. This was another example. I think if you're going around and you probably would see like a bunch of guys like wearing like the small figure. That's a small, what should I call it? Like almost like a character for Solana, representing all the developers on Solana. That was because like we initially run a Chinese name for Solana like event like a few months ago. And then actually someone who lives in LA, like he picked that, you know, the name that Lily was creating for Solana. And then later on created this whole character and then representing every single developer of Solana. This actually got very viral because Lily turned her profile picture into this thing. So then the creator of this, he's the community token lead. Like he initially verified his Trends account. And then like he claimed his rewards on top of us. And then he used that later on to launch a bunch of NFT as well as some other community related stuff. And obviously this got really viral because like later on a lot of other developers on communities, including like Totally and also Solana account and a bunch of other people were retweeting and engaging with this character. So like really what we were trying to do here is like we're trying to track the high signaling, high value signals for people to know about, you know, what is something that worth their attention, because we are in a world where all the information and attention is commoditized and you really could use the asset to help people crystallize their attention. So like there are a few things that are important, right? Some of them are the important milestones and key posts pinned by the developer of the token as well as the key creator, and also some of the on-chain activities of the deployer and key person. So this is another example on top of us. We recently ran a vibe coding hackathon for Solana, and then someone tokenized their own vibe coding projects. And then the guy literally posted every single milestones within his vibe coding updates. As well as like there's another project, I don't have to go into the detail, but basically you can see like the on-chain activities that he had here, including claiming the fee, as well as buying back some of the token. So the TLDR for Trends is that we're trying to help people really tokenize the key events that they think that matter, and help people who care about the event to know about like what are some of the milestones that's related to the asset. So we're launching our dynamic curve very soon, where like we would have a balance between the high fee and the trading friction, because as you know, like as the market cap become larger, you want to lower the fee so that like people trading don't feel like they're making too much, like getting too much cut. And that's my last slide. Thank you very much. The trend is good.
Thank you. Thank you, Mabel, for this exciting sharing. And I think this is an even more exciting moment. So yeah, you guys are free to have a lunch right now. And we'll be back at the stage at 1:30. That's more insights and more like your amazing speakers to be on the stage. So I will see you guys in the afternoon and enjoy the lunch.
Good afternoon, everyone. I hope you're enjoying lunch and coffee and your conversation and connections. I'd love to invite you back into the general session space over here on the stage. We have a fun little announcement and possibly a giveaway that you'll want to be in the space for, because if you're not in your seats, you're not eligible. See you in a moment. Good afternoon and welcome back from lunch. I'm Melly Platisse with Solana Foundation, head of events. Really excited to have you here in Hong Kong. Really excited to kick off our first Accelerate of the Accelerate series this year. The next one up is Miami in May. A quick show of hands for those of you that maybe were in Abu Dhabi with us at Breakpoint. Awesome. quick show of hands, do you have your tickets for Breakpoint this year? If you don't, I'm gonna roll a quick video to give a little sneak peek if you're unfamiliar with Breakpoint, where it's gonna be and when it's gonna be. Let's take the video. So see you in London in November. I hope you'll join us. Tickets are actually closed on the website, but for the next 48 hours, we're gonna open these up. We have a special ticket for folks that are here. Again, it's for 48 hours. It's for $300 for your tickets, so I highly recommend if you don't have those, grab those now. And then I always like to do a little fun giveaway to bring the energy back up from lunch. So for those of you that are in the audience, we have 6 free tickets to Breakpoint London. So if you want to look under your chair, you might be one of the lucky 6 that got a ticket. If you do, just follow the instructions on there and we'll see you in London. We're going to get started with our programming in just a short moment. Thank you so much for joining us.
Hello, everyone. Welcome back to the stage. And this year, what we talk most is about the tokenization. And today, I'm very excited to welcome Anthony, a very famous celebrity, to talk about how Solana wins the tokenization race. Welcome, Anthony.
Go with the handheld. No, he's only handheld. Go. It's okay. Sorry, guys, I'm making a mic adjustment. All right, so I've got only like 5 minutes, so I thought what I would do is instead of just talking about Solana, I wanted to provide some historical context to the last 25 years of technology investing, because I think we're in a bear market, right? Everybody knows we're in a bear market, and I've lived through 9 bear markets, so I want to take you guys back to March of 2000. I was actually here in Hong Kong. This is 2 years after the Thai baht crisis led to the Korean won implosion. But the US technology market was going crazy, and the NASDAQ at that time was at 5,400. And in about 6 weeks, it went from 5,400 to 2,200. And all of the pundits, all the journalists were calling for the end of Web 1, the end of technology, and the end of the internet. In fact, Barron's, which is a news magazine published in New York, had a picture of Jeff Bezos on the front of the cover, and they had him inside of a bomb, and the title was Amazon.bomb, the age of this internet retailer is over. And Jeff actually took it and framed it and put it in his office. And the stock went down 91% in a 6-month period of time. And I just want to take you through this for a second. If you were an Amazon investor on the IPO, and the IPO was in May of 1997, let's say you put $10,000 into Amazon. In the first 10 years, Amazon went down 9 times 50%, 2 times 80%, 1 time 91%. And if you stayed in it, if you stayed in that investment, that $10,000 is worth $28 million today. And if you look at the chart, there's a tremendous amount of volatility for the first 15 years. And then the story starts to consolidate as people start to adopt the story. And by the way, if I had given this speech 10 days ago before they announced they were making this big investment in AI, that number, the $10,000 number, would have been 41 million. So I want to start out with that because of what's going on in the industry and what I see going on in the industry. And if you can weather it and you can stay in these positions, I think you're going to be incredibly well rewarded. You're here for a reason because you know the technology, you know how fast it is, you know how cheap it is, you know how easy it is to use. And you know that the people that are my age in this industry, 40 years of experience on Wall Street, are going to be using Solana for the backbone of real-world asset tokenization. And Tom Farley and I were on stage earlier today, and we were just talking about our careers. He was the president of the New York Stock Exchange. I worked at Goldman. When I started in the business, it was T plus 5. So trade date plus 5 days. And if, let's say, I was buying a stock from your account, it was coming into my account, it had to go through 7 different intermediaries, including the Depository Trust Corporation, before it landed in my account. And so, yes, I bought it at that price, but I had to wait 5 trading days, or literally a week, before it landed in my account. Today, it's T plus 1. But with this technology, it can be T plus a minute, T plus 5 minutes, T plus an hour. And I think people need to take a step back and look at the utility of the technology and recognize that if you can see through the FUD and see through the doubters, this is going to be a phenomenal asset for you and your family over the next 25 years. Okay, that's my speech, guys. Thank you very much for having me. I appreciate it. We'll see you soon.
Did you guys enjoy the tokenization talk? And next topic is also our favorite topic about stablecoin. And I'm very excited to welcome Kim from Arkin to give us sharing about how Solana gonna win the cards. Welcome.
Hi, everyone. My name is Patrick. I'm part of the Artemis team. And today I figured I'd take a little bit of time to talk to everyone about how Solana can win payments. So, as I'm sure everyone here knows, everyone is starting to care about stablecoins and payments. Firms like McKinsey, Goldman Sachs, and even Federal Reserve banks in the United States are all talking about stablecoins and payments following a lot of the regulatory frameworks that are happening across the world. And just recently, we at the Artemis team published a report alongside McKinsey Financial Services talking a little bit about stablecoins and payments. By our estimates, at about $390 billion volume annualized, stablecoin-based payments still only make up roughly 0.02% of global payments volume. So, how can Solana be at the next frontier of this next phase and capture the multiples of billions and trillions that can happen on-chain for payments? Lucky for Solana, Solana now leads all payment platforms across Web 2 and Web 3 in total payment volume growth, growing at over 750%. And if we scope out a little bit into the broader crypto industry, stablecoin payments volume increased just over 137% year over year, as of August in 2025. And if you take a look at the graphic here, what you can see is that B2B is by far and away the largest payments sector across all stablecoins and growing at an tremendous rate. Again, lucky for Solana, Solana B2B payments volume grew just almost 9x in 16 months to $3.84 billion annualized, growing at over 410% CAGR from 2024 to 2026. And another huge part of payments, as of recently, are crypto cards. If you remember back to the previous few slides, cards were one of the biggest and now fastest growing by far payments sector in all of stablecoins, growing at over 106% CAGR, rivaling P2P entirely that has stayed flat. But currently, cards only make up 2% of all retail payment volume on Solana. And this is a really big key for Solana to win payments as retail grows, as stablecoin regulation grows, and as comfort with stablecoins grows for a lot of retail users. Solana now is actually the only major L1 with a majority USDC supply and above 1 billion USD supply in USDC, sitting at over 10.5 billion USDC supply. USDT, PiUSD, USDG, all these other stablecoins are a relatively smaller chunk of the pie on Solana. This is really key as Visa and MasterCard now locally and natively support USDC as a settlement payment solution for all of their cards partners. Visa, as of December of 2025, now it does over 4.5 billion annualized volume in stablecoin native settlements, most of that coming in USDC. MasterCard also, with their MasterCard token network, supports USDC natively for settlement. And they have recently partnered with Fiserv to bring programmable payments and stablecoin native settlement to banks all across the world. And building and investing in payments on Solana is still a very, very nascent sector, especially with all of the volatility in markets. Payments is a very, very sticky use case for a lot of users and a lot of institutions. And there is so much left to be won for payments on Solana. I encourage a lot of builders and investors to continue looking further into payments and stablecoins. And we at Artemis are more than happy to help Solana win. Thank you.
Thank you. Thank you, Patrick, for the sharing. And next, I would love to invite Patrick back to moderate the next panel of today. So we are going to invite some major stablecoin players from West and the East to be on the stage
left side,
to sharing about how we can build up a compliant but scalable stablecoin on Solana. Welcome.
Right. Oh, sure. Did they ask us to lean back or to stand up?
Yeah. Hi, everyone. I hope you're happy to see me again after a brief 10 seconds of being up here. We're now doing a panel on Beyond the Hype, building compliant and scalable stablecoin rails for the future. I'm joined here by a few wonderful folks from across the industry talking about this sector, and so maybe I'll give them a little bit of time first to introduce themselves and then get into some questions right after.
Fantastic. My name is Ben Nadarewski. I'm the co-founder and CEO of Solstice. We are a stablecoin provider on Solana, as well as a yield-bearing solution offering a delta-neutral strategy to all USX stablecoin holders. We've amassed about 300+ million in TVL since our launch in September, and we're working with a lot of the faces and names around the Solana Accelerate here today.
Hi. I'm Sergio Mello, and I'm the global head of stablecoins at Anchorage Digital, which is the home to the first and best digital asset bank in the US, regulated by the bank regulator, the OCC. We're a stablecoin issuer as a service for clients like Tether, Western Union, OSL, and Athena.
Hi, everyone. I'm Rita, CEO of RD Technologies Group. We do two things. We run under two brands of the company. One is a stablecoin payment platform focused on B2B flow under the brand of Oyster Pay. And we also have a stablecoin issuance business called RD Innotech, which is in the stablecoin issuer sandbox in Hong Kong.
Hi, this is Milton. I'm Chief Commercial Officer and co-founder for Anchorpoint. We are a company that focuses on regulated low currency tokenized money, but we're currently not live yet, so hopefully we have more to share next time.
Yeah, thank you all for the intros. Now, just going right into it, over the past few years, I think we've all seen a really big shift towards emphasis on institutions and just broader acceptance across the world, and shifting a little bit away from the sort of initial use cases of crypto, or maybe not use cases, but sort of understanding of crypto being a little bit more degen, perhaps, a little bit more emphasis on trading. Why do you think there's been such a big sort of shift towards institutions and TradFi, and what does this mean for the original ethos of the cypherpunk ethos and decentralization and all of these things? How do you see this sort of happening in the world now?
I can start. The bottom line is I think that there's a lot of realism being implemented across the crypto ecosystem in general. And what that means is there's no longer the story of incentivized hype through fake yields and token allocations that don't have real value accrual behind them is something that we've left in the past. The meme coin cycle was fantastic for a lot of the volume testing across the different exchanges and platforms, but now we're at a point where everybody that's looking at crypto is looking for real sustainable yields, and you're looking for real sustainable use cases. And so there's a much deeper emphasis on due diligence. And that driving function has allowed for all platforms and companies to really up their game in getting to that next stage of institutional growth, which has now attracted quite a lot of players on the institutional side over to the crypto side. And we've seen a huge amount of that institutional exposure here on the Solana side.
It is my alignment with the cypherpunk ethos that drove me to crypto in the first place. I've always been a big fan of privacy and encryption, and so in 2014, 15, I started getting deeper in it, and then eventually now I'm here doing stablecoins and other more centralized stuff. But what we have to understand is that the optionality of self-custody and ownership of assets, indiscriminate ownership, uncontrolled and unlimited ownership is really the key to provide a system for checks and balances for regulators and traditional finance to empower digital assets. As an analogy, in modern society, we have freedom of speech as a way for people to exercise their right to protest and to have their views listened to by regulators. This is the same thing that is happening in finance today. Digital assets are showing the way with systems of check and balances that puts traditional finance on pressure to deliver better, faster services.
Yeah, I think for me, ultimately people love blockchain or Web3 for different reasons because it creates value. And in my sort of area, like for example in payment, we love blockchain or Web3 because of its 24/7 openness, disintermediation, take out the middleman, and all that value it creates for financial services. And I think in this cycle, the theme of this cycle, as I see, is convergence. Between TradFi and Web3, or between Web2 and Web3, I think due to two reasons. One is the maturity of regulation around the world, and second is understanding from all walks of life, towards this technology. What can, for example, stablecoin do for me if I'm an exporter, if I'm a bank? What does it mean? How can I use it? So I think with that, convergence, there's that's the theme we see in this cycle.
Yeah, I personally think it's not necessarily taking away a lot of the core ethos about Web3 in general. It's just that there's always things with a very idealistic version, but when it comes to real life implementation, there has to be certain compromises. But I think what we're seeing here right now is that if it's being done properly, we're able to find a middle ground where we're able to push and implement things on, let's say, public blockchain rail, retaining the spirit of Web3, for example, lowering barrier of access, facilitating information and capital liquidity, but at the same time, fulfilling the regulatory requirement or concern for user protection, right? Because ultimately, those things are also there for the purpose of creating good and protecting the general public. So I think it doesn't necessarily take away the core ethos of what the industry is trying to do, but it's just merely manifesting in a way that fits to the practicality of real world.
Yeah, for sure. And I think going a little bit deeper into this institutional sort of focus here, what's something that sounded right about institutional crypto adoption maybe back in 2022, 2021, that clearly sounded right back then, but now is maybe very wrong, and there's something that we have shifted away from? CBDCs. That's one topic right off the bat that I think a lot of the crypto ecosystem is kind of strayed away from in a lot of form and fashion. And that comes from, I used to be at R3 back in the day as well, working on a lot of great projects. And one of the things we worked with a lot of the central banks back in the time frame was looking at that piece. But I think the ethos that all of us just kind of talked about of keeping those permissionless principles, we're here for a reason in crypto. There's no reason to build the exact same system that we did, that it exists today. And so in order to do that, you need to build on permissionless principles, have permissionless access, the Anchorage point about owning self-custody and the assets. These are the type of things that drive real value products on the crypto ecosystem side, not just saying, hey, guys, we've replicated a TradFi function over here on DeFi, so now it's valuable. That's not the game that we're going after.
One thing that was considered to be the winning strategy a few years ago by institutions and now obviously turned out not to be is the choice to develop and build and use only layer 1 permission blockchains. It is obvious now that permissionless open networks are necessary to build a network effect. If you don't get that critical mass to have participants in a network, then you're as good as a piece of software without utility. So blockchains like Solana with confidential transactions solve for institutional adoption where confidentiality is needed. And the solution is not to lock everything into a small little closed bucket.
I think, one thing that's happening is also, like what I was saying just now, diversification of the use base of crypto, right? Like I said, like people are here probably for different reasons. Some are here for idealism. Some are here just for convenience. Some are here because they have to. For example, if I can't, get access to a stable currency in my country, I have to turn to stablecoin, right? So I think with the diversification of use cases or user base, I think the technology does different things, create different value for different type of customers. So I'm more like about like what part of the technology we use to solve the pain points with certain use bases.
Yeah, for me, I think I would echo the point around use of public blockchain network, which I think, obviously the landscape looks very different right now.
Yeah, and double-clicking a little bit about the permissionless open network sort of principles that we've been talking about. Outside of that, do you think there's any parts of the crypto stack now that you think are maybe a little bit underbuilt or perhaps even overbuilt, and there's other things that we should be focusing on instead?
One major point, I think, is so when people trade on DEXs today, there's a lot of amazing DEXs that we work with at Solstice in a lot of great ways. Shout out to Radium and Orca. There's a lot of these major DEXs that are pumping lots of major volumes through the ecosystem, which is fantastic. A lot of people go into trading on the DEX with the mindset that it is the same as a sex exchange in a lot of ways, where there's things like circuit breakers or back-end support, or there's a lot of things that you don't quite grasp the full permissionless aspect. And so as we institutionalize, I think continuously highlighting user risks and just basic best practices for a lot of the permissionless access, I think is an education step that is still growing for a lot of the new user base. Because a lot of us that have been in the industry for years, this is second nature to us to go onto a DEX, swap into another coin, get access out into the markets. But for someone that's never heard of a DEX before, you're going to assume you're going to have a lot of baseline assumptions going into those access points that are different in DeFi. And so it's important to be aware and increase the education.
I absolutely agree on the need to improve UX at the retail level. So DeFi, as I said earlier, is this beautiful thing that keeps everything else in check by providing a better alternative and solution that is for the people. But without a good UX, clearly, we can't really distribute it. On a more institutional layer, I would say that what's underbuilt today is the interface between fiat and stablecoins or digital assets in general. We are working hard on solving that problem at Anchorage. Of course, being a bank and having fiat rails and having stablecoin issuance within the ecosystem, we can really plug the two systems together. So in the next few months, we'll announce more ways to merge the two systems and make that interface fluid so that the traditional finance and DeFi no longer have to be considered two separate buckets.
Yeah, totally agree. I think while they were talking, I thought about three things. One is local stablecoin that's underbuilt. Local regulated stablecoin for mainstream currencies. I think that's that would create a bigger space for stablecoin, for example, for on-chain FX to really happen and make the FX market really more efficient than current one. That's one. And second, I think in terms of the linking fiat and stablecoin world, I think what's underbuilt is also risk control on all aspects of risk, right, including AML and all that. And third one, I was thinking about the third one, but I forgot. Yeah, so I think local stablecoin and risk control. Yeah.
I'm not sure if it counts as like crypto native rail, but if it's one thing that I think it's a little kind of underbuilt across the space, especially I think this side of the world across Asia would be a really quality service provider, especially on digital asset custody solution. So if you look at, obviously there are a lot of amazing products on self-custodial wallet, consumer apps that are free to use. But if we look at, in the context of so-called mass adoption, if we think about the profile of very traditional enterprise and institution who historically have their money saved with very major reputable financial institution, and they're not going to all of a sudden move into a self-custodial or MetaMask, right? So I think there's a severe lack of service provider that's actually up to their standard. These major enterprise and institutions requirement that they have the comfort of putting meaningful amount of money in digital asset and safely in custody with these institutions. And I think that's often the point that's a little overlooked by people within the space because they're so used to the fact that I have self-custodial wallet and it's not really a pain point. But if you think about it from a corporate perspective, having that actually is really the starting point of being able to do and orchestrate digital asset for everything else. Mm-hmm. So I think that would be something that was quite obvious from a lot of the conversation that we had.
Yeah, and we touched on a few different points here, some that are within the sort of bounds of, that are controlled by the companies themselves building, right? Companies like Solana and other applications. And a lot of it can't really be controlled by these companies, right? Regulation, certain institutions and what they're looking for are sort of out of the scope of what we can control as an industry directly. And so a little bit of a question here for everyone that's wanting to answer. If you were to sort of build the industry again from the ground up, let's say we took a time machine back 10 years, how would you do it now? And what are some core changes you would make knowing what you know now today?
I think it comes down to the vertical stack. One of the major benefits of the Solana ecosystem is that there's a completely composable ecosystem. You invest in entry point A and you can get access to B through Z right away. And a lot of other ecosystems on an L1 basis, as well as a lot of permission blockchains that was mentioned as well in the past, you had these fragmentations of liquidity constantly, and we took years to be able to compose those into one seamless ecosystem. Now in Solana, and one of the benefits of Solstice, for example, when you enter in with USX, you now have access, whether you want to invest in our yield-bearing solutions or go off and go into Camino, Exponent, Loopscale markets, whatever it might be, you have this immediate access point across the ecosystem. So building for full-stack integration from day one, I think would have accelerated us by probably 5 years if we didn't go down the permissioned, siphoning off, this is ours, you guys get that, and if you want to swap, you have to do a whole bridge overhaul in order to get there. That full-stack composability remains as one of the major benefits of the Solana ecosystem.
A great piece of history of crypto is the ICOs, which ended up without much fun. But what they taught us is that tokenomics can really drive incentives to create real-world applications and products and solutions. I would like those dynamics of tokenomics to be used more in the real financial industry. I constantly am exposed to bank consortiums of all kinds, at least a dozen on a daily basis. If only the tokenomics that were possible with crypto composabilities were embedded in their system for governance, for incentive distribution, everything would work a lot better. So that's one part of crypto that will eventually trickle into the rest of the world, really, but should have been framed as a very important learning experience rather than just being discarded as a money grab.
Yeah, I think I don't know how we go back in history, but I think it's fair, it's normal that on the path to Rome there's ugliness. It's just how humans always are. So I think what we could probably from now on, I think what we could do better and better as the industry is to educate more, to speak the language of different audience, so that we can proliferate the technology better and get more people to understand it. I think that's what we can do more, and this is where we already talked about a lot at this panel, which is linking the TradFi and crypto.
Well, might be a bit of non-answer, but I suppose I kind of wouldn't have it in any other way, mostly because I suppose for an industry in general, the best way to iterate and improve is actually from all these mistakes and paths that we tried but didn't work out. I think private or permission chain is actually a great example. Without actually spending the few years of effort and resources on that and seeing how it seems to be not working out in general when it comes to commercialization and adoption, people wouldn't come back to the focus on public blockchain with that level of commitment and focus. So I'd say most of these so-called mistakes or things that the industry have tried have its long-term value one way or another. Yeah.
And we talked a lot about just now about tokenomics-based incentives, about how we're having a diverse ecosystem across major L1s like Solana. And obviously, as of recently, there's been a lot of chatter about these other chains that are sort of coming up, chains like Tempo, chains like Canton, et cetera, which maybe don't have a lot of the incentives via tokenomics or maybe the more diverse ecosystem that we have on Solana. Why do you think that is such a big topic nowadays, having a stablecoin-focused layer 1 or whatever, when maybe Solana can also offer a lot of these benefits?
On an L1 basis, if you don't have a core, really good stablecoin network and layer, access point, liquidity, DEX liquidity, all of those check marks, how else are you going to get new users into the ecosystem? People are not just going to come into an L1 with bespoke DeFi solutions and start allocating capital into things that they just got introduced to yesterday. You need that entry level, which allows for that gateway access. And so, yes, a lot of these other L1s are going to continue to grow, and there's going to be more to launch consistently for years to come. But what Solana's done really right is allow for that smooth entry point of gateway access for stablecoins of entry, and then allowing this whole ecosystem of composability for access points. There's no permission gateways, there's no high barriers to entry. This is something that's permissionable to everybody. So it's a call to action for a lot of the other L1s as well to look at this and say, what is Solana doing right, and why are they the #1 revenue generating chain in the world right now? And it's because of the fact that there's real value being created because you get a lot of new users, institutions coming into that gateway point. So that foundation layer is paramount to everything else that happens in the L1.
Yeah, given all the other parameters equal, and this is of course not an apples to apples comparison, but the newer participants you mentioned that are coming onto the layer 1 competition landscape, are realizing that not only you need to provide the liquidity to the stablecoins, the pieces and the components, but also you need that option. And whereas the past 10 years of layer 1 growth was mostly driven by retail, the next 5 years are mostly driven by institution. So the distribution and business development game is totally different, and it's something that Solana has practiced successfully already for a while, so it has a tremendous head start. how institutions participate as design partners with Solana is impressive, and it's testament to their focus to making this new category of players comfortable to come on chain to the transactions and bring their assets there.
Yeah, I think to answer your question, I think why there are so many new chains is because it's always the hottest area in crypto. Actually, to your question, what's overbuilt? I think definitely infrastructure. Too many chains, and I think we always say something faster, stronger, and but when we talk about TPS, right? We don't have so many use cases in crypto that needs that much higher TPS yet, right? So I think, but when it comes to blockchain, I think keep the openness is very key, right? Like I said, why in my area, for example, in payment, why we like blockchain or why we like the idea of a stablecoin is because of the openness, right? 24/7, no walled garden. So openness of the chain is quite important. So I think, whatever layer one we're talking about, I think keeping that openness and no walled garden is very key.
Maybe to tie it all into a neat little bow, I know we're coming up on our time here. If you had to pick one of the three of tech, regulation, and incentives, what do you think is the next big unlock for the next 5 years that we talked about for institutions or even new retail users? Which of the three do you think is the most important to emphasize on and to keep building in?
I'm going to say incentives. And the reason being is because there's a lot of protocols that are just now getting on the wave of designing the right incentive model. In the past, it was way overdone on the tokenomics side. This was something that took years to really refine. And I'll give a lot of credit to Hyperliquid with the tokenomics model. When they came out, this was a fantastic tokenomics kind of breakthrough for the industry when they realized it works at scale if you really put the faith in the community. Getting that right on the institutional level is, I think, the next stage. So I think we've started to get to a point of maturity with retail incentive-based distribution. And now it's figuring out how incentive capital or institutional capital that's getting involved, what that right incentive model is, because obviously at scale with hundreds of millions of capital and certain protocols, you really need to design it well or else you end up blowing out your incentives just favoring the institutions.
I would say regulation is the next big unlock. We've witnessed firsthand how Genius passing in summer last year has completely changed the landscape of stablecoins overnight. Now, like 6 months later, we have 4 federally regulated stablecoins issued by Anchorage Digital, others that are aligning very quickly in the US, and a plethora of global regulators that are looking at Genius to align and also have reciprocity ready by the end of the year. This means that in 2026, end of 2026 and beginning of 2027, most of the world will be aligned on what is a stablecoin, what is accepted from country to country, and then you can really use it as bank capital, you can use it as a cash equivalent, you can use it for interbanking settlements, you can use it for FX, you can use it everywhere. This is where, so the next 12 months will be the total unlock, and it's driven by regulation.
Yeah, I would say regulation for sure. Not saying the other two doesn't matter, but we're looking to onboard the next billion user to stablecoin, right? And for that to happen, legitimacy is key, and regulation is the fastest way to gain legitimacy.
I think technology, but not in the sense of there's a need to develop more advanced technology, so to speak, but more about, again, the implementation of it, how that translates into products and offerings in an intuitive way for a large audience base that includes, again, very traditional enterprise and institution in that sense.
Yeah, well, that's just about our time here. So thank you all for sharing the stage with me here, and thank you all for taking the time to listen. It's great hearing about all the different things being built at Solana, Solstice, Anchorage, et cetera. And I'm excited to see what we do over the next few months and years. So thank you all.
Thank you.
Happy New Year.
Thank you. Yeah.
Thank you everyone for this very insightful sharing. And next I would love to welcome my best friend, Emily, the CEO of BuyRail, to share about transforming the liquidity of the internet capital era. Welcome, Emily.
Okay. Hello, everyone. Yeah, it's really nice to see you all in Hong Kong again. 大家好. I'm Emily, the head of sport at Bybit, and also founder and CEO of Burial, and also I'm the key advisor to Mental Network. Yes. So this is the first Solana APAC events of this year. It's very exciting to be here and share with you about the updates of Burial and a little bit about Mental Networks as well. Okay. We see last year, sorry, I forgot my key, my clicker, sorry. Yeah, so last year was a convergence game. It's finally we see the real-world assets meet the crypto-native infrastructure. And this year we saw it's all about acceleration, about the speed. So since 4 months since the Burial public launch, we already crossed the $2 billion accumulated trading volume by doing the 3 right things. The first, of course, is what we call full house listing, because we see the crypto assets are born on chain and validated by DeFi and scaled by CeFi. So maybe you know, like for past few months, we saw some assets first list on Burial, and they got listed on Bybit Alpha, and then go to Bybit Spot. So this is what we call the full house listing. So we started this program with Liability, and then followed by Ammonite, White, Matte, and I think the most recent ones are Wet Whale, Seeker, and Moonbird. Yeah, so we are doing more and more this full house listing program. And the second is the Mental Super Portal. It's kudos to the both Mental team and Burial team. Mental and Burial co-launched this Super Portal bridge solution recently, where we unlocking the assets and liquidity flow from Mental Network to Solana and from Solana to Mental Network frictionlessly. And I think last, we also launched the first Solana copy farming products on Burial. Yes, so you don't need to be the professional market maker to provide the liquidities on Burial. You can just copy the others' LP strategies. And now, more than thousands of LP strategies have been copied on Burial. I hope you like it and feel like you trade like pro. So setting foundations are not enough. This year is all about the speed. The speed of execution, the speed of the capital rotation, the speed of opportunity capture. So now I'm gonna show you how we're gonna accelerate the next 10 billion trades on Burial. Okay, I think it's the 3 critical transformations. The first is we furthering lowering the barrier of LPs. For very, very soon, you can just provide single assets to provide the liquidity on Burial. Yes, we're gonna launch this auto swap feature. You don't need manual swap, the manual transfer of the 2 assets. You can just show up with 1 single asset. We will just do the rest. We will handling the execution with the optimal routing. Right, yeah, we will just do the rest of the things for you. And on top of this, we also leveled up with AI-powered LP strategies, which means auto-rebalancing, auto-compounding, and also optimal ranges based on the real trading flows. And the second is, next. Yeah, the second is about efficiency liquidity. Yes, so Burial, we also joined this Prom AMM battle. We just, the Burial Prom AMM just went live yesterday officially. Yes, so what does it mean to us? For the users on Burial, for the traders on Burial, it means better prices, faster execution, and tighter spreads. And for the LPs on Burial, it means, of course, higher fee capture and also less wasted capital. And last, which is also the most important, is we doubling down RWA assets and also the attention markets. So last year, because we believe the real markets means the real attention will bring the real volume. Last year, Burial and Bybit, we are proud to be the first launch partner of X stocks, bringing the capital markets onto Solana. And I think the results is very clear. I think last week, the on-chain trading volume of tokenized assets just hit all-time high on Solana chain. And most of this volume were driven from like stocks. And if you look at this, the majority of the trades are settled on burial. And this year, we're gonna doubling down on this RWA. So very soon, on burial, you can trade RWA perpetuals, prediction markets, and attention markets as well. What is very clear and very important is that Solana is not just a fast. Solana is becoming the execution layer of the capital markets and RWAs. And on burial, we want to be the unified exchange layer for all these traditional capitals and also the real-world assets and also the attention markets. So let me close like this. The next 10 billion trades are moving faster, smarter, and even savvier on burial. Thank you, Solana. Thank you, Hong Kong. See you next time.
Thank you, Emily. Thank you, Bybit and Burial, for supporting Solana from day one. And next, I'm very excited to welcome Seiji from GSR to share about institution finance accelerating tokenization. Welcome, Seiji.
Very good afternoon, everybody. My name is CJ. I'm the APAC General Manager at GSR. Today, I'm not going to talk to you about the company. I'm not going to pitch to you about market making. I'm not here to sell you a product. I'm here to give you food for thought, a state of the union where we are right now when it comes to the world of tokenization. So tokenization is a really interesting thing. I'm going to try and move these slides forward a little bit. Here we go. So RWAs are the things that are on everybody's, first and foremost on everybody's mind. If you look at every single brand up there on this slide, you will know these brands. These are the brands that if you look at the average building in Wall Street, in London, near the Shard, even in Hong Kong, in Central, these are the sorts of brands you come across and what they've done in the space. However, we have a problem. The problem right now is we are creating so much product and none of this product has anywhere to go. The problem we have right now, and I guess you can ask yourselves these, how many of you own Biddle? How many of you own Benji? How many of you own Yumin? The problem right now in the RWA space, and this is something that you're going to have to think about as builders, is right now there is a massive imbalance. This imbalance is what we like to call the elephant in the room. A bit about my background, I spent about 10 years on Wall Street creating products out here in APAC. I used to be at Morgan Stanley on the trading floor out here in Hong Kong, so across the river right now. And it was a very interesting dynamic, and the reason why was we always went down the process of how do you create something when there is not enough demand for it. That's the nature of a structured product, right? A structured product was very simple. 1 + 1 must equal to 10. Otherwise, don't create the product. And so that is the journey that we're right now on when it comes to RWAs. Right now, and I guess this is unpopular opinion on a comparative basis, right now, the whole world in RWA seems to be on this massive kick to tokenize stocks. This is probably not the right direction. The interesting thing is the most successful RWA right now in the market has actually been around for almost 10 years. The most successful RWA right now in crypto and Web3 is Tether, because it has an actual use case. It's an actual product. So the elephant in the room right now is that for now, all we seem to be able to do is create product after product after product, and it has nowhere to go. And the problem with this is the people creating the product, how you distribute it, is becoming more and more problematic. So what does it mean as a builder? What does it mean for chains like Solana? It's the same concept where right now, if you have too much stuff with nowhere to go, it sits idle. It sits idle and it starts to lose natural appeal. So what is the solution to this? The interesting thing right now, and this is probably the last time I'm going to have it here, so I'm going to stick on this one for a while, is how do you bridge the gap? Right now, the problem in Web3 is we're approaching it from a very Web3 native approach without understanding that the origination and distribution of real-world asset-based tokenization is actually a Web2 fundamental. How do you get it in the hands of the clients who actually need it? How do you create it in the hands of people who have a purpose for it? If we look at the banks being involved in this space, and every bank right now on the street is looking at real-world asset tokenization. Every single bank. I've been in Hong Kong since Sunday, and every single meeting with a financial institution has been, how can I tokenize the rest of this portfolio? If you want to go down that path, if you want to build something in this space, there's a few things that you should look at, okay? Right now, we're talking about the concept of distribution, but let's go even more basic than distribution. The first step is custody. How do you custodize these assets? What would you do with these custodized assets? The fact of the matter is that let's use tokenized stocks as an example. If I tokenize a stock right now, who am I tokenizing it for? We say we're tokenizing it for the Web3 user. We say we're tokenizing it fundamentally for retail. What we fail to understand is from a legality point of view, retail is not allowed to buy stocks in that form. So you're running into a conundrum. You're creating something that has zero use for people. So what we see as the next logical step forward is tokenization is about to play a massive part for the underlying infrastructure. But the infrastructure that is actually going to change is archaic banking infrastructure. Right now, the first wave of tokenization in RWAs is heading in the direction that it is going to replace a lot of the piping in our existing fundamentals. Is it going to replace Swift network outright? Probably not. Are we going to change some of the pipes that link them together? That is the direction that we're heading into. So it seems all doom and gloom. However, if you look at it, and if you look at the fundamentals of what we're heading towards right now, you have to create that back layer. And what does it mean for builders out there? Don't focus so much on saying that we could tokenize this asset, we can tokenize that asset. Think of the infrastructure you are putting in place and who can actually use this kind of infrastructure. That is where we are right now. This is where we're probably going to head towards. And from an RWA tokenization point of view, we strongly feel, even at GSR, that over the next 1 to 2 years, this is going to be the most salient topic going forwards. Thank you.
Thank you for this amazing sharing. And next, I'd love to welcome our friend from South Korea, Jo Sik, to share about the Korean STO strategy from DB Security. Welcome.
Good afternoon, everyone. This is the Digital and New Business team from DB Securities in South Korea. It is an honor to be here at this Solana event to present the outlook of the Korean STO market and our global partnership strategy with Solana. Let's start with the current status of the Korean market. Recently, Amendment to the Capital Markets Act and the Electronic Securities Act passed by the National Assembly. This means the debate over whether to adopt STOs is over. We are now in a transition phase where legal uncertainties have been cleared. We have entered a stage of fierce competition to secure market leadership ahead of the official institutional launch in January 2027. Korea's STOs model is unique. It prioritizes stability above all else. It is built on regulated infrastructure led by established securities firms and the Korea Securities Depository. On top of this, we are implementing a blockchain technology in the form of a permissioned ledger. This hybrid structure ensures investor protection comparable to traditional finance while leveraging blockchain for efficient settlement and rights management. Based on this structure, DB Securities is connecting finance with the real economy. We are currently collaborating with the central government and local municipalities to tokenize real assets, yes, such as RWA, local infrastructure, public utilities, and research equipment. However, the domestic market has a limit. The core advantage of digital asset is borderless liquidity. If Korea's attractive assets remain trapped solely within domestic regulation, their value cannot be fully realized. To capture global investment demand and connect with broader markets, integration with the public blockchain ecosystem is essential. This is exactly why we are here and why we have partnered with Solana, especially in Korea. We aim to build a bridge connecting Korea's institutional stability with Solana's high-speed, scalable public infrastructure. This is not just about adapting technology. We are co-designing issuance and circulation models that are compliant with local regulations while being interoperable globally. Our most anticipated use case is, of course, K-pop IP. With a massive global fandom, K-pop is a powerful global asset. On the Solana network, we can implement fandom-driven finance, where fans go beyond passive investment to actively participating in and benefiting from the ecosystem. This innovation is impossible within a closed domestic system. It requires a global network. In summary, DB Securities' strategy is clear. Locally, we secure stability through strict regulatory compliance. Globally, we add scalability through technical partnerships with Solana, combining local compliance with global tech. That is the future we envision. Two-track. We hope today marks the beginning of a practical business connection between Korea's and the very popular public blockchain of the Solana network, especially institutional finance and Solana's global blockchain ecosystem. I love it. Thank you very much for your attention.
Thank you so much for this sharing. And I know everyone in the Solana ecosystem must know about Jupiter. And they just hosted one very large event in Kuala Lumpur. And today we're very excited to have Xiao, the president of Jupiter, to be here to share the latest news come from Kuala Lumpur. Welcome, Xiao.
Hey everyone, my name is Xiao. I'm the president of Jupiter. So if you have used or transacted anything on-chain on Solana, you most likely have done so on one of Jupiter's products. So today, let me give you a quick tour of Jupiter, the only true super app on Solana and the home of on-chain finance. The team has been cooking in 2025, and there are even more exciting products coming in 2026. At the start of last year, Jupiter was Solana's largest trading venue already. By the end of last year, Jupiter became the most comprehensive on-chain financial platform, period. So let me give you a 2025 recap of the Jupiter product suite. Spoiler alert, it was a banger. And this is not a victory lap, it's actually a demonstration of what is possible in 12 months. So Jupiter's high-level product metrics for 2025. We had over 40 million of active wallets, which was an 80% year-on-year increase. We generated over $1 trillion of total transaction volume, about a 200% increase. And then newer side of the business, also like over 2.5 billion of TVL. So why do people keep saying nobody ships like Jupiter? It's a very simple reason. Because nobody does ship like Jupiter. I asked our team to put together a summary of everything that the product teams have shipped from January to December, and they couldn't even fit half of the things that we actually done on this page. So we started in January by launching the Trump coin, one of the largest onboarding events into Solana and crypto on the Jupiter product suite. We launched Jupiter Lend in Q3, and then in Q4, there's a ton of other things that you can see here as well. So the Jupiter stack has really evolved from a year ago, 8 essential products focused on on-chain trading, to today, over 18 and growing product suite that spans really across the entire financial activities that you can do on-chain on Solana today. So let me give you a very quick tour of where we are basically today. On the spot and terminal side, Joe is here with the #1 trading venue on Solana. Nearly 900 billion of annual spot volumes, over 100 liquidity sources integrated. Jupiter Z is for market maker business. We have 27 market makers onboarded in 2025. The business grew nearly 30x in 2025. Jupiter Perps the beloved perps product on Solana. We generated quarter a trillion of perps trading volume. JLP, one of the most traded tokens on Solana with 25 billion of annual trading volume and 2.5 billion of TVL. Jupiter Mobile, very important growth vector for us. The fastest, most feature-rich Solana wallet that we want to sort of grow very quickly into the hands to onboard even more normal users onto Solana with over 1 million of total installs and a fantastic growth rate. Jupiter Portfolio, I won't go through all of these. Developer platform, the easiest way to build on-chain with over 1,000 total integrations done. Validator, we're now also one of the top 3 validators on Solana. The first in a super minority to run Fire Dancer and powering essentially the best transactions across our product suite. Jupiter Lend, we launched about 4 months ago. It was the fastest growing money market on Solana. It went from 0 to 1 billion of TVL in 8 days alone. And we have a series of very exciting new integrations coming up with institutions across the space. Jupiter Studio, DTF, extension wallet, verified, and prediction markets, also very exciting. We were the first venue to bring Polymarket as well as Kalshi to Solana. We're the sort of fastest growing and the first prediction markets on-chain venue on Solana. Rewards Hub. What that essentially means is that Jupiter has become one of the most multifaceted on-chain businesses across crypto. And from a business perspective, 2025 was also the strongest year yet for Jupiter's business, right? What that actually means is we generated over 500 million of gross revenues, 30% increase year on year. This equated to about 180 million of gross profits. And this really comes from like 10 different revenue generating products across our product suite. What this essentially means is Jupiter is not only a trading venue anymore, it's an increasingly diversified business with like over 10 different product lines contributing to our growth, right? All at different stages. And we're actively working on more parts of the business. What I want you to take away is that Jupiter is now also become the default integration layer of Solana. We want to work with the best partners and the best ecosystem players and onboard like the biggest institutions also to Solana. So as the premier venue for on-chain finance with broad coverage across token data, price, and liquidity, Jupiter is the default first stop for anyone coming to Solana. So we had over 100 plus strategic partners onboarded in 2025. Here's a quick map across some of the biggest platforms in crypto and in Web2, right? Integrated to Jupiter like Coinbase or Robinhood, asset issuers like Xstocks, TradFi institutions like 21 Shares, ecosystem projects like 00, co-building products are close partners around Fluid, Kalshi, Athena, and Humidify, and then liquidity venues like some of the top market makers in the space as well, all integrated on Jupiter. So a few key product highlights going into 2025 we're very excited about for users and partners to kind of integrate it into and use. First and foremost, the JupUSD. We want to launch the first on-chain first stablecoin to really be deeply integrated across the product suite and with shared economics, passing the yield essentially to the users. Jupiter Global is our first payment stack to really bring everyday finance to on-chain. We've built the first ever on-chain QR pay with 0% fees across the APAC region. You can use to pay for anything with your on-chain assets. Polymarket, we brought to Jupiter. We're very excited to innovate and work with Polymarket to bring even more markets to the market and for people to experiment what is possible in predictions. Jupiter Academy to really make onboarding easier into DeFi for everyone. And Jupiter Offerbook, the money market for anything on-chain. So on to the next chapter. We also announced our first strategic partnership with an investor, historical first for Jupiter, who bootstrapped from day one a 35 million strategic investment into the Jup token from Parify Capital, settled entirely in the JupUSD stablecoin to accelerate on-chain financial infrastructure. So with that, I'll leave you with the 3 words that the team uses every day. Just use Jupiter.
Jill, for this amazing sharing. And next, I would love to bring the warm welcome to Brian. I know everyone know about Jito, but it's also the first time Jito team actually be in Hong Kong, and they will bring this sharing about building the market layer of Solana. Welcome, Brian.
Thank you, and thanks everyone for being here. I'm Brian, I'm president of the Jito Foundation, and excited to talk to you about how Jito is moving Solana from beyond the base protocol to become the home of internet capital markets. So, what is Jito in its role as the market layer? There's 3 core pillars. First is execution. Every single transaction on Solana needs to be processed reliably, compliantly, in the best way possible. That's happening with BAM. Second layer is capital. It is core to everything that happens on Solana. Jito has that role as the main provider with Jito Sol, the largest liquid staking token. And then lastly is the value flow. This happens through JTO, which is the core token of the Jito protocol. So on the execution layer, some of you guys may be familiar with BAM, but here's like a quick intro of what it does. It's the next generation of block building on Solana. And so it has a few key upgrades. First of all, is something called application controlled execution. In short, this just means putting apps and users first on Solana. Solana users are the lifeblood of the chain, and the whole protocol needs to be set up to give them the best possible experience. This happens through BAM's ACE features. Next is MEV protection. So this means that your transaction on Solana is not visible to anyone until it's actually processed. And I think a huge theme of this week is like institutional adoption of Solana. How do we get more people trading directly on Solana? A major blocker of that is actually concerns around their information getting disclosed to other parties before they transact. That is counter to what happens in TradFi, but is kind of involved in a lot of crypto protocols. BAM solves this by ensuring user transaction privacy so everyone can get the best execution possible. Lastly, decentralization. BAM will be run by hundreds of validators permissionlessly, fully open source around the world, and make Solana continue to serve as best-in-class decentralized smart contract network. So what's happening with adoption? It's going really fast, which is exciting for all of us. Today, there's over 300 validators running the BAM software. By validator count, this is roughly 40%. By stake, it is over 100 million SOL that is opted into BAM, which is over 25% of the Solana network now running BAM. More exciting is these numbers were only half that a month ago, and so it has doubled in the last 4 weeks. We see overwhelming demand by other parties in the ecosystem to continue to run the software and get the benefit for all Solana users. And so we're very excited to continue pushing adoption throughout Q1. Now, a lot of people in this room are probably like, oh, well, like, I don't run a validator, so what does BAM mean for me? And that's, again, anyone who uses Solana should benefit from BAM. So if you've sent a transaction on Solana or a trade on Solana in the last 6 months, that's probably gone through something called a prop AMM. They provide the vast majority of liquidity and volume on Solana. We are working with the majority of these prop AMM partners, names you may recognize like BisonFi, as well as names like SolFi that's done by the Ellipsis team, the prop AMMs done by big market makers Orgonia and Wintermute. Partnering with all of them, and what this product will do is enable them to provide deeper liquidity at tighter spreads. So anyone in this room who's going to trade Solana will benefit from that because you get better pricing, more volume, can trade any size, any time, without any stress. And so huge upgrade for all the users on Solana. Similarly, I think perpetual product is really key, that we have a best-in-class perpetual product on Solana. So I've been working with the Ellipsis team. They have something called Phoenix Perpetual. It is rolling out throughout this quarter. They've been working closely with them on how BAM, again, can have more liquidity to have the best possible user experience on Solana. Super excited for that product to come out. So in general, markets need sustainable liquidity in size, and that is what BAM is providing, and that you guys will benefit by using all of these applications. Next is Jito Sol. Think of that as the capital layer of Solana. It is powering institutional adoption through productive capital. What we see is it's been the leading LST in DeFi for a long time. Now with institutions coming on board, it is built institutional ready from day one. So this means universal acceptance with proprietary build-outs across custodians. For instance, we're here in Hong Kong. Yesterday, we announced a partnership with one of the biggest custodians in Hong Kong called Hex Trust. So it's just one-click staking with Jito Sol in your interface. Similar partnerships exist. Anchorage, BitGo, these other global custodians. And so anywhere you are, you can use Jito Sol. Also, off-chain liquidity, on-chain liquidity, has best in all of it. And so again, instantly go between yield-bearing Solana and whatever asset you're trading. So the kind of fastest growth area that we see in ETFs is, in Solana adoption is actually ETFs. Obviously, the US products launched in the second half of last year, wildly successful. Jito Sol is the logical asset for all of them to use, right? ETFs have this tension between daily liquidity and full yield-bearing nature. Jito Sol solves that by providing 100% liquidity and 100% yield. So we actually launched a product with 21 shares 2 weeks ago, rolling out very successfully. Similar conversations here in Hong Kong as well as in South Korea. And so hoping to, anywhere you are, brokerage account, DeFi, CeFi account, use Jito Sol. In sum, Jito is building the market layer of Solana. Solana is the home of internet capital markets, and Jito is what makes it work. Thanks for your time.
For this amazing sharing. And tokenization, I think you guys have heard a lot about it. But last year, we talked about US stock on-chain. And from US stock to Pokemon card, that's a lot of things can be tokenized. So next panel, let's talk about tokenize everything, moderated by Dave. Welcome, everyone.
Thank you. Thanks for being here. Appreciate sharing the stage with you guys. We're here to talk about tokenizing everything on Solana. So I figured we'd start with just like a general softball question. In one or two sentences, what asset or asset class are you most excited about over the next 2 years to see tokenized or see progression in that asset class as a tokenized asset? We'll start with you, Antonio.
Sure. Yeah, I would say private credit. In terms of RWAs, because Topknot is actually supporting a lot of tokenized assets. We have tokenized treasury bills, have tokenized stocks, we have tokenized money market funds, we have like tokenized gold. One thing we are exploring recently are tokenized private credits. Not only the tokenized part, but also the DeFi part. So we call it RWFi or RealFi. So tokenized private credit, which can be made as a collateral for potentially lending and other DeFi strategies, will be something that we are seeing great potential in the next 2 years.
Amir?
I think there are multiple ways to observe the tokenization. I believe that the intention of today's panel is mostly to talk about the tokenizing stuff that already exists off-chain, right? But crypto has shown to be very good at both doing tokenization of the stuff that already exists and also tokenizing everything of value and sometimes like creating the new markets that didn't exist before. And I think in the sense of the former group, I believe that tokenization has proven to be very competitive and powerful technology. And I think if you just look into the stablecoin, is a good showcase of what tokenization can enable. And if you compare stablecoin against fiat currency, you can see that in almost every category, it is just simply better. It's more portable, you can do more things, it's more efficient, it's more cost-effective. So I think you can extrapolate all of these advantages to any other asset class. Whether there is a demand for any other asset class to be tokenized immediately, I think this is a separate question, but obviously it does make sense to first go after the most obvious categories. So I think in that context, I believe that tokenizing public equities is the natural first step after the stablecoins itself. And I think even though this is an obvious thing, I think we are still far away from where this needs to be in order to be like as good as the experience of interacting with stablecoins.
Very good. Mark, I'm sure you like that answer for sure.
Totally agree. First, in order for tokenization of RWAs to work, there has to be liquid underlying markets. There has to be a market for it. I think part of why RWAs have mostly failed to date is the idea that you can tokenize anything and then suddenly a market will show up. I don't think that's true. Stablecoins, tokenizing money, that was the first step. Equities is probably the next liquid asset class that could really benefit from tokenization. I'm bullish for that over the next few years. There probably are others after that. I can tell you from firsthand experience, though, tokenizing equities already really hard. And as you start to get even less liquid classes of assets, I think it's going to be even harder to do right. So I'm bullish mostly on stablecoins. I think have already had their moment. That's an easy thing to project in the future. Equities is going to be next.
For sure. Yeah, I think sometimes people underestimate the difficulty of getting assets there first, getting distribution, and then making them liquid enough to, it's a chicken and egg problem. So to play off that, you know, Kraken has been responsible in a positive way for giving access to millions of people to cryptocurrencies and financial products. As we start to see the crypto space and the blockchain space to move beyond just crypto and more into, you know, the tokenization of different products, what is Kraken doing to position themselves to serve everyday users more effectively?
Yeah. Everything we take for granted in crypto trading has to come to more forms of trading over time. We take for granted the fact that you can buy 24/7, that you can self-custody it, that you can take it into this whole wide world of DeFi and do all sorts of amazing things with it. And why is that better on crypto than it is on equities? Why is it better on crypto than it is on all sorts of other asset classes, than fiat money and others? That's just because crypto was built later than all those things. And so we built all of it really well at first. I would say Kraken's mission, though, is not just on cryptocurrencies. It's about bringing those kinds of assets to as many people as possible. And so expect us to continue to invest in things like X stocks, in the kind of infrastructure that brings more asset classes to the same level of crypto, and continue to bring many more types of users, many more users into a broader ecosystem of tokenized equities, as well as crypto and stablecoins and fiat and all sorts of different types.
Very cool. So, Momir, for you, I know you've been investing since 2017 in this space. As you look at this space, where do you see gaps that need to be filled? And how does that affect your thesis or the way you view investing moving forward?
I think when it comes to VCs, there is always a tendency for us to talk about more frontier things, and then sometimes we just avoid talking about more obvious things. And I think the most obvious thing is that the stablecoin tokenization, the fiat tokenization itself, is only at the beginning. And I think in that sense, if you want to bet in the next few years that the stablecoin market cap would increase several times, I think there is also a good question of what needs to happen for this to be possible. And then if this is possible, what are some necessary things that need to be done, or what are the opportunities that could be won in this scenario. And I think going back to what I mentioned in the first comment, if you compare fiat and stable coins, there is actually one category where fiat is much better, and I think that is access to investment opportunities. With stable coins, it's still relatively limited to mostly crypto-related stuff, and I think in that sense, this is the also opportunity for RWA assets, because I feel like if we want to push stablecoin demand across 1 trillion mark, we actually need to have more exogenous assets on chain. And in order for this to be possible, you obviously need to solve the liquidity problem of some of these assets. And I think at this point, with all the great effort done by some industry participants, this is still far away from being actually liquid. So it's hard to say that this is enabling as diverse and as deep liquid exposure to other investment classes as you can have with fiat. So I think this is one of the opportunities that needs to be solved, and it's also a very, very big pie, right? But it is also critical for our industry in order to have a sustainable pathway for stablecoins growing across multiple trillion. And I think adjacent to these theses, there are also a few other things that could be discussed, I think if you expect stablecoins to break 1 trillion, this obviously implies that you would have like a shrinking of balance sheets for banks, right? Like you can also see how hard they are fighting against some of these stablecoin regulations. But I feel that the ones that are in the biggest dangers are probably like the outside of the US ecosystems, right? Like that once you have access to the digital dollar as easy as you have access to the information, there is actually very little reason for many local citizens of local smaller economies to actually stay in the local currency. So I think this is also potentially a trend where we could have like a lot of this liquidity being sucked on chain. And I think that this liquidity is not going to sit in non-custodial wallets, but in some of these products like neobanks that are very promising for different sort of user groups, from crypto native wealth, from the people in developing regions, to even like I even saw some interesting examples of neobank built with Gen Z in mind. Like there are many ways how you can optimize these experiences, but I believe that this is another category that will grow exponentially with more adoption in tokenization of the dollar and growth in the stablecoin.
Absolutely. And to play on that, or maybe provide an alternative perspective, Antonio, I know you're building a self-custody wallet experience. And so as the tokenization of things like equities and assets, I don't think we've ever seen anything like this in the world, where there's free access to things hypothetically could be considered securities. I don't think we agree with that maybe, but how do you think self-custody is meaningful, and how are you solving UX problems to I guess, provide services that haven't been so freely available before?
Mm-hmm. No offense here, but today's Web3 experience is terrible.
Yes.
Like that's when we compare that with what we built in Web2, we have built products that are used by over 1 billion users. What happened 20 years and 30 years ago in Web2? When we're trying to bring users onto the internet, there were IPv4, IPv6 protocols, there were DNS, there were gateways, there were all those things you need to do before you can dial onto the internet. And at the time, the experience was terrible. It was almost as terrible as it is today in Web3. So that's how we view the market. It's another cycle. Web2 was coming. There were infrastructure. People were building infrastructure. Then people are building applications on top of the infrastructure. Nowadays in Web3, I would say this is the industry that talks about infrastructure the most. However, I don't think there is a mature enough product in Web3 that could really attract massive users. Topnode is a non-custodial wallet, technically, but we are thinking things, I guess, very different from what Web3 non-custodial wallet thinks. So we have done several things, including like people are doing account abstraction. We're also doing account abstraction. We also do chain abstraction. We also do data abstraction. We also do gas abstraction. In a way that when real users come, they do not care about the infrastructure. You will never, it's meaningless. It lets Web2 users know what is Ethereum or even what is Solana. The best practice is actually we have applications, we have assets that are attractive enough for users, that are built on top of Solana. So when users come, they don't actually see Solana. They see assets. They see a yield-bearing assets that's better than what they can get in Web2. They see a product that provides them with additional functionality that they couldn't get in Web2. So that's the aim for Topnode. We have abstracted away a lot of different things. Like in Alipay, when you make a payment, you scan the QR code, and recently you can even tap on the surface to finish a payment without feeling the underlying, there are a lot of infrastructure going on. So the problem of today's Web3 product is we still love to talk about infrastructure. We talk about what technologies we have. However, users do not care about it. And that's the reason why normal, ordinary Web2 users still aren't able to get into Web3. I've talked to many founders in Web3, and estimatedly there are around 30 million, 40 million-ish, like native Web3 people. However, there are 8 billion people on the earth, and the rest are actually from Web2. So from our experiences, the UX has to follow it's not a Web2 UX, it's just human UX.
Yeah.
We're following human behaviors. So that's how we're designing the UX. We don't care about the technology. As long as we meet what users' requirements are, that's a meaningful UX. Then from a custodial versus non-custodial way, we are building a wallet that's non-custodial because we think that's a more open ecosystem. If it were a custodial wallet or a custodial application, then it's a relatively closed system because you have your own database, which isn't accessible to other databases. However, it is non-custodial. We're actually kind of a plug-in. We are actually plugged into all different systems. We can actually integrate with custodial solutions, centralized exchanges. We're actually working with some of them. We can actually integrate with chains, with other ecosystems, with DeFi projects. So I think that's also the power and the beauty of Web3 to make things interactable and composable. But that has to be built from a non-custodial way. So that's the reason why we chose this non-custodial wallet approach. That's the reason why we are designing a UX that actually follows more of a, well, Web2, but from my understanding, human behavior design.
Great. Maybe also like agree and disagree on some of the things being said. I feel like just to stand in the defense of the crypto UX, I think it's already much, much better than it used to be like 3 years ago, and abstraction has already went a long way. And you can just take the example of Polymarket, right? Like when you interact with Polymarket, I believe that most of the people that interact with Polymarket, they are not even aware of what is a Matic token or what is actually Polygon, and this is like at this point fully abstracted away from the end user. And some of this is possible because of a lot of the work on the cross-chain solutions and also deposit checkout addresses like FunXYZ, Glide, and on the custodial side maybe like zero hash Privy, right? Like all of these solutions are now making Web3, or like is Web3 even a term still, right? Like making crypto experiences much, much better and comparable to actually regular apps. And in that sense, I'm also quite bullish on some of these like deposit checkout addresses because they also control a lot of the flow, and the convenience is just 2-3 times better compared to the consumer products that are not using them. So I feel like this is also making it obvious that in 3 years, probably everybody is going to use these abstraction solutions. I assume that you are also providing one such abstraction solution, but I just wanted to share that for some that are utilizing these existing tooling very well, today you can already have like a very good experience UX with a crypto app, and you don't have to be behind like regular apps.
That's right, and if you think like bankings are the competition, I mean, banking websites, not necessarily the best experience either. Mark, question for you. From a regulatory standpoint, how are you seeing the appetite for institutional investors tiptoeing into the tokenization of asset space or being a part of it, owning it, holding it? How's that look for you from your perspective at Kraken?
I want to just chime in on this quickly,
okay,
and I'll
go
come
for
back to that. But basically, the great experiences, people will work hard on the UX side, to be honest. Like if it's something that people really want, UX is, people will deal with a lot of friction to make it happen. There's a lot of things out there in this world that are really bad UXs that people still do, banking being one of them. If you don't have a great product, you can put the best UX in the world on it, and it's not going to make any difference. And I think that's important for us to think about in this space, is like build great products and then build great UIs. Don't just think about UIs individually. Back to tokenized equities, because I don't think that's what we're supposed to be talking about at all. On tokenized equities, I've been outrageously impressed at how many institutional players, how many exchanges around the world, how many regulators have wanted to talk to us about X stocks. We just announced this week that we're partnering with Deutsche Börse, one of the largest traditional exchanges, to launch X stocks on 360X, which is one of their exchanges that they offer. And so I thought we would have a harder battle working with folks like NASDAQ and NYSE. I thought we'd have a harder time. Maybe we're the outsiders, maybe we're different, maybe we're not going to be a part of that ecosystem. I'd say today, pretty much every bank, every exchange, every traditional equity exchange, all of them are interested in partnering with us on Xdocs. They all see the value of 24/7 tokenized equities, and so looking forward to bringing them even deeper into that over time.
All right, final question, and it's kind of I would say, a wild card here because we didn't discuss it before, but given the ebbs and flows of this space over the last 4 or 5 years, 10 years, depending on how long you've been into it, we've seen a lot of stuff come and go, and with the growth of the tokenization of assets and stablecoins and the move towards fintech and fintech's move towards us, what exists today that is going to go away and it's not coming back? What's big today in this space, or what's a bubble? What's a hype factor here that we don't think is going to exist in the next 2 years?
I think the things that we talked about today, I think like definitely seems like much more fundamental reasoning why this is like a better technology and why there is like a multiple demand funnels for this sort of technology. I think previously like the mistake of our industry is that we were hyping up like many dreams that were more like a wishful thinking rather than like fundamental reasoning. And I think like this industry has been also through a period of reflection, and everybody needs to look themselves in the mirror and like give up on the bad narratives and focus on things that actually work. And I think we have like clear signals of what are the things that actually work. And this industry is also, even though like in historical context, still relatively young, but also not that young anymore, right? And we've been through like 15 years since Ethereum. There's been like 10 years plus. We've been through different experiments, and some things, even though didn't have like maybe great UXs to start with, but managed to survive multiple cycles, and I think that's for a reason. And building with this in mind and investing with this in mind, I think it's very important.
I'll leave on a spicy take on your question, which is I'm really bearish on most RWAs, especially RWAs of illiquid assets. So I think that's something that continues to come and go as a narrative that feels like, oh, if we just tokenize it, we'll suddenly have markets for it. Tokenized real estate, tokenized mines, tokenized, not really. I think those are the kind of things that'll probably be much less talked about in a few years.
Cool. All right, appreciate your time. Thank all our panelists here for giving some good feedback, and we'll take it from there.
Thanks so much.
Thank you.
All right, next we welcome Austin Federa, co-founder of 00. He's also a double OG for Solana. Let's welcome him.
Thanks, Vail. So I'm Austin Federa. I am one of the co-founders of 00. And what is 00? 00 at its core is an effort to rebuild the internet from first principles, to go faster than the internet lets us go today, and to enable Solana and blockchains like it to reach hundreds of thousands and millions of transactions per second. So what are we really talking about here? Internet capital markets is one of the main focuses of trading on Solana. It's been adopted by many other blockchains as well as a North Star to try and target. But the problem with internet capital markets is not the vision, it's not the mission behind it, it's the internet. And the internet today is too slow to meet the aspirations of what we hope Solana and other blockchains are able to get to. This is something that Wall Street figured out many, many years ago. Traditional finance does not run on the public internet. Your trades on Robinhood or NYSE or NASDAQ don't run across the public internet. They run on dedicated, purpose-built infrastructure designed just for this purpose. And we're bringing that to blockchain for the first time. So what does this actually look like? So this is a map of the world, and what you can see here is the actual fiber cables that are part of the 00 network. So this is a deeply physical infrastructure network. What we're talking about here are actual fiber cables running under the oceans and over mountains and under cities that power most of the internet today. The difference is the cables that the public internet use, they're overcrowded, they have indirect routing, there's all of this sort of noise and jitter in them. It's like being stuck in traffic. You may have a really high performance car like Solana, but it's limited by the speed of the public internet that's running on. So what if we could move everything off the public internet? What if we could move it on to dedicated high-performance networks that are run by multiple independent contributors? You can see here we have 10 different contributors to the 000 network. So you get censorship resistance. You get all these properties that we care about. And you can always fall back to the public internet. But if we want trading on-chain to compete with trading off-chain, we have to get serious about the physical infrastructure running these, not just the software systems that we're building on top of them. So we have a whole wide network that supports many different areas. One of the areas we've seen a lot of demand for is Hong Kong. And so some of our contributors have actually brought in dedicated fiber connecting out to Singapore and Tokyo. And so what does this mean? If a validator today is running on the 000 network, and 50% of Solana validators today are running on the 000 network, they're able to transmit data over a faster connection than they can get over the public internet. And this results in all sorts of good properties. State propagates more quickly, transactions process more quickly, traders can make more money because they're able to take advantage of economic opportunities that they wouldn't be able to without this. And so one of the cool things that we've seen over the last few months since we launched in October is not just more validators connecting into the 000 network, but RPC is joining as well. Traders, professional trading firms connecting their systems into 000, and they're still trading on Solana, they're still trading on chain, but all of that can start to move more quickly. Additionally, with optimizations that Anza and the FireDancer team are working on, as well as work that we're doing with Jito and Temporal, we're able to actually accelerate some of the clients, help how they share information move more quickly, and help advance Solana to actually be able to compete with traditional markets. There are these incredible things we've already seen on Solana, like pricing on prop AMMs that rivals the pricing you can get on centralized exchanges. What we don't have today is price discovery happening on chain. Price discovery, where the actual true price of an asset is determined, today is still largely in centralized trading venues. And if we want to move that onto blockchain, we have to have the systems be able to respond as quickly as other systems in traditional markets do. So how can you help us reach this goal of internet capital markets more quickly? Well, you can connect your validator to the 000 network. So if you go to 00.xyz, you can get all this information about this. The other piece here that goes on this is if you're a trader, if you run trading systems, if you trade on chain, come talk to us. This system is purpose-built to allow traders, validators, RPCs to have better experiences trading on chain. For market makers, this can result in better quoting and more determinism in landing transactions. In effect, we're helping make Solana and trading on Solana more similar to trading on centralized exchanges without the trade-offs of centralization that come with those venues. So we're really excited to help support the advancement and development of Solana and other fast blockchains. Thank you.
Thanks.
Ms. XYZ. He's going to talk about what Wall Street wants, metrics that matter. Welcome.
So today I'll be presenting metrics that matter for Solana. Crypto is dead. Solana is dead. Really? Maybe crypto is not dead. It's how we have been looking at crypto all along. So my name is DJ. I am working in Artemis right now, and Artemis is trusted by Fidelity, T-Rowe, VanEck, and Franklin Templeton. And the problem right now for Solana is Solana trades like oil and gas. Look at the charts. And if you want Solana to be traded like high-growth assets like NVIDIA, there is metrics that matters for them. So for NVIDIA, data center revenue grows 100% year on year. NVIDIA's share price grows 1,000% over the last 5 years. So prior to Artemis, I was working in TriFi, working in the small hedge fund, understanding about metrics that matter for public equities. So right now in Artemis, my main purpose here is to understand the metrics that matter for blockchain. Our team is built out with people from BlackRock, Ribbit Capital, and Citadel. And every day, we try to understand what are the metrics that matter for apps and chains. So learning from the last 4 years, we know that Solana doesn't trade on TVL, daily active addresses, developer activity, and transactions. So let's find out what metrics that matter for Solana today. So what works? We know that BNB revenue goes up, price goes up as well. We know that Hyperliquid revenue goes up, Hype price goes up as well. For Robinhood, the revenue goes up, Hood price goes up as well. So what is common in all of this? Revenue. In 2025 and 2026, there are only 3 tokens that actually made positive returns. And those are BNB, Tron, and Hyperliquid. And they are actually the 5 most profitable projects in the ecosystem right now. So yes, Solana is #1 in users, #1 in transactions, #1 in developer growth, #1 in ad fees, #1 in trading volume, #1 in fees. Yes, Solana is resilient as well. Solana hasn't been down for over 24 consecutive months. But yet, Solana still trades like oil and gas. So what does this mean? Nobody cares about all these KPIs. So at Artemis, our solution to how Solana can be valued much higher is imagine Solana as a marketplace. So what does that mean? Imagine Uber as a marketplace for drivers and riders. Drivers measure at gross bookings, and riders measure as monthly consumers. And that's how Uber generates their revenue. Imagine Airbnb as a marketplace for hosts and guests. Hosts measure as gross bookings, and guests measure as nights booked. And similarly for Solana. Solana could be a marketplace for financial apps and users. Apps measure as transfer volume, and users measure as AUM. And that is how Solana could be the internet capital markets. So imagine transfer volume as trading volume, payments volume, NFT payment volume, P2P, B2B, RWA volume. All these consist of the total transfer volume. In equities, we have this term called the gross merchandise value, which is GMV. In crypto, there should be something that is called gross transfer volume as well. So one of the biggest challenges that we face, and people always ask us, how can we model out Solana to be a $1,000 token? Merck actually challenged us on how we can actually model Solana to $1,000. So if you look at how we model it, it's actually not too crazy. If Solana were to capture 5% of the 9 trillion tokenization market, which is forecast by BCG in 2030, just 5% of the market could be about 450 billion in AUM. And by 2030, Solana can become a $1 trillion network if they were to capture 27 trillion in transfer volume, if we slap a 60 times velocity multiple, and a 10% take rate, that will be roughly around 27 billion in Solana revenue. And after you minus OPEX, it could be around 20 billion of net income. And at the valuation, with a 50 times PE, Solana could be valued at $1,000. So this is what Wall Street wants, metrics that matter. Transfer volume, AUM, and revenue. Wall Street loves the Solana model. Many people came inbound to ask us about, oh, could they have a glimpse of this Solana model from sell-side banks, large asset managers, hedge fund, liquid token funds. And there's 2 paths forward we see right now for blockchains and crypto. Blockchains can continue to trade on flows, like oil and gas, or fundamentals, where metrics actually matters for them. So at Wall Street needs fundamentals to invest in Solana. Artemis, we curate all these fundamentals to actually find out what are the metrics that matter for all this crypto, for the biggest asset managers out there, and for apps and chains. So crypto is not dead. Solana is not dead. According to our stablecoin team, Solana is the highest growth B2B payment volume by chain, by far. So if you guys want a glimpse of the Solana valuation model that we created, or you guys have any strong takes, or want to actually jam after this, feel free to scan this and you can email me. Thank you so much.
Next, we'll have the Hong Kong fireside chat for regulation. Who are speaking? Gary Tu from UOSL and Elizabeth Wong from SFC. Welcome.
Okay. So, hi everyone. So, since 2018, the Hong Kong digital asset landscape has been quite closely linked to what the SFC has actually been considering as the policy initiatives for the industry. So, in a nutshell, the Hong Kong regulated landscape is about 8 years old. Something about Liz. Liz has been with the SFC since 2009. So a few more years more than the Hong Kong regulatory landscape. But needless to say, Liz has been with the SFC since the beginning of pretty much the birth of sort of the regulatory framework in Hong Kong. And it also wasn't that long ago, in 2023, when we used to see Liz a lot on TV, for example, during the JPEX incident, poor Liz, but she actually represented the face of the good guys in Hong Kong. And last year was a big year for the SFC as well, and for Liz. Personally, I think involved together with Dr. Eric Yip to put together what we now know as the Aspire framework. And this week, a number of things, well, in the last week or so, a number of things happened. BTC, we saw one of the biggest drops since 2022. But also, on the good side, the SFC also held the third consultative panel with the industry last week to announce, to give us a heads up of some of the 3 announcements that we heard from Ms. Julia Leung this morning. So just to warm up a little bit, you've been in this sector for a while. Clearly, this is something you have a passion for. If we want to spend 30 to 60 seconds to share with us what's your proudest moment as a regulator in the crypto space. Liz?
Right. I think it was actually a concerted effort together with all the stakeholders, the Web3 industry, the virtual asset industry, and also the government together with us. I think the proudest moment was that we actually put Hong Kong back on the map. So there was a time, COVID and everything, everybody left Hong Kong. Somehow we managed to, put Hong Kong back on the map. And the reason for putting it back on the map was really the proudest moment was we rolled out regulations. So that's really counterintuitive. Normally, when we talk about regulations, we're talking about stifling market development, where, there's no business that can be done. But actually, when we rolled out the regulations, people started looking back at us and thinking, should we be coming back to Hong Kong? So I think that was a really, really big achievement.
Really put us on the map, right? Yeah. So this week, in fact, this morning, fresh off the press, Ms. Julia Leung, SFC's CEO, shared with us a few key initiatives for the sector in the coming 12 months. So first of all, rules for measures to enhance liquidity in the Hong Kong market. Number 2, rules for offering digital asset margin trading or financing. And number 3, additional guidance on launching exchange-traded crypto derivatives. So on global liquidity first. So SFC wants to allow platform operators to use their own affiliate entities to act as market makers in their own venues. Now, obviously, this is one of the pain points for the industry in the last few years. So in allowing operators and their affiliates to play in their own marketplaces, are you concerned about market misconduct in allowing this to happen?
Yes, so we've actually looked at this for some time. And it's an inherent conflict of interest, right? So as market makers, you want to make the most profit. But as an affiliate of the trading platform, you're actually, the counterparty to your clients. So how do you address this conflict of interest? I think that's what we've been studying, and that's what we've actually been focusing on to get the requirements right. So definitely we're concerned about conflicts. So what we've done is that we've set out additional safeguards to manage these conflicts. So as a very fundamental general principle, we require these affiliated market makers to be functionally independent from the platform operator. So this would involve, for example, implementing, effective data security measures, information barriers, so that, we can reduce, the information that gets passed to the affiliate.
So there's no squeezing in front of clients, right?
Yes, and that's another big requirement that we have is that you need to give clients priority. So client orders always take priority over an affiliated market maker order. So this is one of the safeguards that we've implemented. We've also, looked at disclosures. So how do we make it very transparent for those who are using the platform that they know that, affiliates are actually market makers. So you need to disclose the preferential treatment that you give to these market makers. For example, in pre-order transparency, and also, order execution and other kind of, preferential treatment that you actually give to the market makers. This needs to be disclosed to clients, and also the risks arising from such preferential treatment.
So increased focus on risk disclosure because of the change in the risk environment, so to speak. So if I can play a bit of devil's advocate, why do we think affiliate market maker idea, well, this affiliate market maker idea would bring more liquidity to the local trading scene when, for example, third-party market makers, which have been around for a while, when third-party market makers have had limited impact, why do we think this new initiative might potentially bring some improvement?
I think you're ultimately expanding the pool of market makers that are available, right? So now we're saying affiliates can also do this market making. So there's an additional source of liquidity, that's one. And also what we see is that we think for affiliate market makers, the liquidity will be consistent. So it's a little bit different from relying on, independent third-party market makers. Now you have, a more consistent kind of source of liquidity. And finally, even if, client orders take priority, there's still that backstop liquidity that is always there. So it is a measure that we think should, help with the liquidity in Hong Kong.
So potentially at least increase a bit more depth in the order book. Got it. Okay, so I think last year, we also remember last year there was also a lot of discussion about other ways to bring more liquidity into Hong Kong. So the idea of a global order book being run by Hong Kong licensed operators. And that, to be honest, as an operator, we saw that as quite a major initiative. Although, to be honest, I think now that we're in 2026, we haven't seen a lot of actual takers in the market being able to operate that yet. Now, do we think this idea of affiliate market makers, in comparison, feels a little bit less dramatic? So a bit more like a baby step rather than that huge initiative that we thought global order book was going to bring to Hong Kong.
Right, so first I encourage you to think about, using a shared order book model. But also I think we look at these two policies as being complementary in nature. So for the shared order book, we're talking about, sharing the liquidity that is overseas with Hong Kong. And it's also an affiliated platform, right? So it's that sharing of the liquidity. For the affiliated market maker, we're looking at bringing liquidity to Hong Kong. So you could, bring it from overseas back to Hong Kong as well. So it's two different ways of enhancing liquidity. So I would think they're complementary. And also the safeguards that we've asked of our platforms are different. So for the shared order book, we're looking at trading and settlement risks. We need to see the assets by day end in Hong Kong, so that they are properly safe custodied and the whole transaction is properly settled and clients have their assets in Hong Kong. Whereas for the affiliated market maker model, we're looking at conflicts of interest. So it's really up to how firms want to bring that liquidity to Hong Kong investors. Whether they want to use the shared order book model, which of course they would need to look at how they do the settlement part of the transaction, or the affiliated market maker role where they need to address the conflicts of interest. So two different pathways, both bringing liquidity, complementary, and also Doesn't sound dramatic, but it's just as dramatic.
So in the words of Dr. Yip, what was it? Sable fight. What was it? So small steps.
Yes.
So moving quickly forward, but in very, very small incremental steps. So I think that is actually something we are quite excited about. So on the second topic of potentially crypto margin financing or margin trading. So unlike the Global Liquidity Initiative, this one sounds more like an extension of the digital asset product or service offerings for the local market, and also potentially like a new revenue stream or revenue opportunities for operators in Hong Kong. So rather than just signaling a small change or an enhancement, this really could be something much bigger for the industry. So my question is this. So the SFC has generally maintained a more conservative attitude on VA platform operators and financial risk management. I don't think that's going to be disagreed too much. Do you think this is something that could introduce new and unforeseen material financial risk to platform operators? And I guess by extension, systemic risk for the Hong Kong market?
So we're taking baby steps again. So what we're starting off with right now is that we're allowing our securities brokers who already are engaged in virtual asset dealing to provide that margin financing. So what we're doing is that we're relying on TradFi, all the guardrails that we already have in place, and also because our brokers, they are used to providing margin financing. They have their own internal controls and systems. They also have all the policies in place already. We're just riding on what we already have in TradFi to extend this financing so that the clients of brokers can also use that margin to trade in virtual assets. And that's with partnering with platforms. So what we're looking at is that we're building on existing safeguards so that we already know, and even the brokers know the risk, the clients know the risk, because these have to be securities margin clients. So it can't be one that doesn't already have a margin financing account. So these investors are also those who actually know the risk. And what we've seen in the TradFi market is that, for example, in high volatility times, for example, last year in April, actually our equities market was fine. There were margin calls, but they were properly handled and executed. So what we're relying on is that the risk management that firms already have, and how do they extend this to margin financing for virtual assets.
That's quite a nice point. I think from the perspective of looking at, first of all, connectivity between the digital asset market and TradFi. Now, if I just stay on that point a little bit more. So the focus that you've placed on risk disclosure, and I think that this theme comes back again and again. Could this be signaling there is a sort of broader change or expansion of SFC's risk appetite for the Hong Kong market? Is this something that, or are we reading too much into it? Is this something we should expect? Maybe not just for digital assets, but the broader financial asset market?
I think, as I mentioned just now, we're actually relying on existing guardrails. We're relying on existing systems that are already in place in TradFi. So I wouldn't say that we've, taken on, a higher risk appetite. It's really, we trust our systems. We trust what the brokers are already doing. They know how to, manage the risk in relation to margin financing. Our investors also are aware. These are margin clients. They know what will happen when they need to, meet a margin call. So what we're doing is that we're just telling the industry that now you can actually do this margin financing for dealing in virtual assets. We've also, issued guidance on if you accept virtual assets as collateral, what do we expect? So for example, we do expect that the eligible collateral in virtual assets would only be Bitcoin and Ether, for example. And also, we would expect a haircut. So these are things that we think industry are also very familiar with, and it's something that's very implementable.
Okay, so since we are in a Web3 event, so I'll stay on the direction of expansion of risk. So crypto derivatives, some form of exchange-traded crypto derivatives. That one, I think most people would agree, does represent some form of expansion of risk-taking at least for the investors who are using the product in terms of leverage, in terms of a much more complex product, probably does represent a bit of an increase in risk environment for the operators as well, but also does represent a whole new revenue stream for operators. Now, to me, this last one is probably the clearest indication of a change in the risk spectrum in the Hong Kong market. But, so for a lot of international, well, even Hong Kong international investors, things like perpetual contracts over crypto is probably nothing new already. So in that sense, Hong Kong seems to be a little bit late to the scene. So in what way do you think the Hong Kong offering could become a superior or even a mildly more exciting product for Hong Kong and international investors who are already familiar with these products in the global market? Do we think we have some room to make it a superior product?
I think we're very open-minded as to how the product is structured. What we've issued today is a high-level framework. So we're actually asking for market participants to give us input as to how it is structured. I think what we've been seeing around the world is that actually there is no standard structure for these types of products. So you can, some are called perpetual futures, some are, perpetual contracts, some actually have expiry dates and all that. So everybody is, designing a, rather different products, although I think the economic outcome is probably the same. So for us in Hong Kong, we also need to look at how this contract is structured because there are, different regimes that they might hit. So if it's a futures contract, it will hit our futures regime. If it's a derivative product, then it will hit our OTCD regime. If it's structured so that it's leveraged spot, then maybe it would be under our spot regime. So it's really dependent on how industry wants to structure this and make it work. So we're open-minded, and I'm not sure if it's going to be a very innovative product, but it probably will be something different from what we see from overseas.
Great. So on one of the earlier points about whether there is a shift from avoidance or prevention of risk to now disclosure of risk. So going from avoidance to now disclosure. So as a market participant, I think this is quite exciting. Do you think there is room for this general shift from prevention to transparency to apply to more broadly across the Hong Kong financial product market?
I think for us right now, baby steps again. My boss loves baby steps. So what we're looking at, why we're so comfortable with this disclosure kind of regime is that in the initial stage, we're definitely looking at a professional investor-only product. So for these perpetual contracts, we're looking at only for professional investors who can trade in them. For professional investors, we think they would probably have more ability to understand the risks, so disclosure would be something that would work. And we're actually looking very closely at the different kinds of contracts that we've seen around the world. We do notice that there are conflicts of interest that arise in these offerings. So what we're looking at is to make sure that the transparency is crystal clear. Investors know where the conflicts of interest are, and it's really their choice if they want to trade. But they need to know that there is conflicts of interest in this product.
So read the fine prints.
Yes. Yes.
So has there been any particular markets that the SFC has been particularly paying attention to as a reference point or benchmark for coming up with the Hong Kong regime?
Honestly, yes and no. So we do look at around the world different regimes, how they do it. But I think we also look at our own, market and the landscape in Hong Kong. And also, as I said, there are technicalities as to, how you structure the product. So because our laws are different from, other regimes in the world, it will affect how that product is structured. And I think it's probably the reason why we've seen different product structures because of probably different laws in other jurisdictions. So we look at everything, but then again, we also look at locally what is best for Hong Kong.
Makes sense. So I guess we'll try to wrap up a little bit. So lastly, do you think, if I want to ask you to be your most optimistic self, so even more optimistic than Dr. Yip,
that's a bit difficult.
could we see 2026 as the year for digital asset derivatives in Hong Kong? Do you think that's a realistic and optimistic realistic?
I think it's realistic. But
Yay.
I really do think that industry needs to give us those, proposals, need to really think through the proposals and, be able to identify exactly where the conflicts are, how the mechanisms work to our satisfaction. So it really depends on how quick the industry is. And I think this morning, Dr. Eric Yip also mentioned that we have an accelerator program. So we're going to use that accelerator program and hopefully accelerate things in Hong Kong.
2026, here we come. So final. So 2025 was the year of the Aspire roadmap. How would you like 2026 to be labeled if we fast forward it?
So we used Aspire, we used Accelerator. I'll keep it with an A, so it's a year of action, I think, for the SFC at least. And hopefully because of our action, it's also a year of action for the Web3 industry.
I love that. And huge thank you to Elizabeth Wong, head of SFC's FinTech unit. Thank you for sharing your time with us. And ladies and gentlemen, big round for Liz.
Thank you.
Thank you, Liz.
Next, let's welcome Josh from Matrix Stock. He's going to talk about digital gold on Solana.
Hello. Hello, everybody. Thanks for your time. My name is Josh, and I'm the BD lead at Matrix Stock, which is the Outer Bay platform under Matrix Port Group. So as part of Matrix Port, we're very much focused on Outer Bay tokenization. And our mission here today is to build the reserve layer for on-chain finance. When we look at reserve layer and on-chain finance, we're looking at assets which are transparent, which you can reconcile with the underlying reserves, assets which you can trust, built on established standards within the TradFi domain, that's widely adopted across multiple jurisdictions. Assets which are intelligent, which can work natively on-chain, but also with different types of AI, agentic protocols. And last but not least, assets which are built for the next-gen user experience, one-click, seamless mint and redeem processes, and deep liquidity. So I think for today, with Solana, we are very much focused on deploying digital gold, bringing first-class LBMA-grade institutional gold onto Solana. Gold by itself is the largest standalone asset class across all domains. It's also one of the few where you have a standard fungible standard across different jurisdictions and accepted globally by different institutions, from governments to TradFi to high net worth and family offices. So let me introduce to you XAUM, Matrix Stock Gold. So XAUM is the only tokenized gold product with full LBMA integration as well as Asia physical redemption. So every XAUM represents 1 troy ounce of physical gold, integrated with LBMA. LBMA is London Bullion Market Association. It represents 70% of global spot volume, and it's by far the largest and most accepted gold standard across the globe. And beneath the XAUM stack, we work very closely with LBMA-accredited vaults, as well as refineries, such as Brinks, as well as Microamid, and the different Swiss, European, as well as Asian refinery brands. So we're not doing secondary brokerage trading. We source directly from primary markets, and we custodize in a bankruptcy mode structure under SPV. We're also the only issuer which allows physical redemption in Hong Kong as well as Singapore. So if you bring XAUM to us, you can actually pick it up from our vaults in the region. So we work very closely with the Hong Kong Gold Exchange. We're the first gold token issuer accepted by the Singapore bullion markets. And we're also licensed by the Hong Kong Customs for physical gold dealing. On the DeFi and on-chain finance side, we are also the most integrated across different blockchains natively. From EVM ecosystems like Ethereum, BSC, to move-based ecosystems like Sui, and most recently launched today on Solana. We're very excited to work across different ecosystems to bridge together gold native liquidity and make this asset accessible for everybody. So on the infrastructure side, we work with all the interop protocols such as Layer 0, Chainlink, and also have a price verified on Solana with PIF. So just a quick recap on the key figures for XAUM. We are among the top 4 for tokenized gold. We're the leading issuer from Asia and the only one allowing physical redemption in Hong Kong as well as Singapore. We're deployed across 40+ protocols, and within Solana, we're first deployed on Radium, and soon will be available on more wallets and as well as lending markets. Right now, there are 85,000 unique holders since our issuance, and we're available on most of the mainstream wallets such as Binance Wallet, Coinbase, OKX, BitGet, etc., etc. So XCOM here, we're very excited to work together with Solana, deployed natively. You can come to our website to experience already mint and redeem directly, deep liquidity with no slippage using Phantom, and soon across different DEXs and lending markets. Our goal here is to provide the leading gold asset for on-chain treasuries as well as different portfolios. Yep, and within our network, we're definitely looking to distribute more and build better liquidity. Within Hong Kong, we'll soon also be on Hashkey and OSL. And on the redemption side, we're working with different regional leaders within the gold space, such as Southeast Asia, and also parts of Europe, to enable physical redemption across more diverse jurisdictions. And yeah, most recently, you guys might know us from our collaboration with GMC. We're also the issuer or technology partner for TER, which is the first sovereign-backed gold token also deployed on Solana. So yeah, feel free to reach out to Matrix Stock or reach out to me if you're interested in tokenization or DeFi collaborations on Solana. Thank you.
Next up, we'll have Solana DeFi panel. That is hosted by the most stressful person on-chain, Ramsey. And then we'll have Chef Leo from PancakeSwap. We'll have Kevin from Drift, Silverstreet from Dune, and Connor from Humidify. Welcome.
Ramsey, glasses. Where are your glasses?
You want to put the glasses on? What's up, everyone?
I think you're here.
Thanks for coming out. Yeah. It's my honor, really, to be on stage here with these titans of DeFi. And honestly, I just want to kick things off by letting everyone introduce themselves. And yeah, why don't we start with you?
Thanks, Ramsey. So I'm Faz. I lead the growth for the Vaults product on Ranger.
Connor, veteran at Humidify.
Hey everyone, I'm Sly. I lead blockchain partnerships at Dune.
Hello, I'm Kevin, head of product at Drift.
Hey guys, I'm Shift and Leo from PancakeSwap.
Yeah, so I mean, as you guys can tell, it's a pretty diverse set of builders and operators in the space. And I want to kind of get the panel started just by setting the stage a little bit. You know, in January, I believe 6 of the top 10 DeFi kind of trading venues were prop AMMs. So I wanted to kind of kick things off with a general question. You know, do we think that permissionless liquidity provisioning is becoming an increasingly niche product on chain? Or is there a space for both permissioned and permissionless? Connor, why don't we start with you?
There's space for both.
Yeah.
I don't. Unless you're Wintermute, you probably don't want to hold like a 50 million inventory of shitters. So, long live Orca.
That makes sense. Makes sense. And Leo, I know you might have a very different opinion here, given that you've recently joined the ecosystem. Would love to get your perspective on how this market structure is evolving between prop AMMs and then traditional kind of AMM venues.
Yes, and happy to share my thought. I won't say the permissionless LP is getting niche. I would say it will be kind of different kind of road compared to before. Right now, the prop AMM it definitely contributes a pretty sizable volume on the core pair and some long tail assets, but not all of the long tail assets can be supported by the prop AMM. They still need a permissionless LP to support that. Like a launchpad, they need to have a pool to directly set up without a permission. If everything have to go for the permission, that means the efficiency is so low. So like a permission LP can satisfy this kind of intent and demand. When the token is more mature, liquidity is more enough in this market, secondary market, they can go for a prop AMM to go for another higher efficient trading experience. So at this point, I would say permissionless LP is now getting the only player in this town, but they will have a two-way to work together, like a permissionless LP plus the prop AMM to provide a much better the holder trading experience on chain. That would be my view.
Yeah. I think it would be, I'd be remiss not to talk about the notion that Solana is quickly evolving into the chain to trade all assets, regardless of whether that be through a prop AMM or a traditional concentrated liquidity venue. I wanted to get your guys' thoughts on what needs to be put in place such that on day one, Solana becomes the best venue to trade any new TGE. Kevin, why don't we start with you? I know perps are really central to that story, so I would love to get your thoughts.
Yeah, correct. Thanks for the question. I think at this point of time, we are very permissioned as well, but then we do have an interest to have wider number of tokens, including equity, including commodity token as well. I think two things that are really important for us. Number one is the oracles. We need to have the oracles. I think a lot of times we do work with this, the third-party oracles like Pith or all other Solana-based oracles, but it does take some time for them to also launch one of these oracles. So if you want to be like a first platform to launch those tokens ahead of other chains, there's a bit of a dependency on them. So one thing we're doing right now is to potentially think about, hey, can we find other sorts of oracles, or could we launch our own custom oracles so that we have less reliance on the third parties? The second thing is the liquidity. I think we briefly talked about the prop AMM. So one of the ways that prop AMM helps us is to help the Solana native market makers to have less technical operational overheads. So it gives them a lot more confidence to provide much bigger liquidity on major markets and all other assets.
Yeah. Connor, I know you guys are working pretty diligently to change the landscape of how prop AMMs interact with new token launches. Why don't you give the audience a little brief on what you're building with Aquarium?
Yes, Aquarium is a permissionless market making system where any project can loan USDC and their token and then pay a monthly fee and wet to get access to deepest liquidity, tightest spreads, tighter than Binance, all with no lawyers and legal contracts and shady market maker deals.
So you're really just trying to make that process as efficient as possible.
Yeah, we're waging a war on centralized exchanges.
Waging war on centralized exchanges. It's a ballsy statement, sir.
Yeah. But aren't you too?
Well,
are you more long Sol or Binance? Or BNB?
We're always long Sol here. We're always long Sol.
Are you short BNB?
No comment. Sly, I think while we're on the topic of kind of Solana becoming this kind of global center to trade all assets, would love to just get your thoughts. From your seat and from your position, you must have a pretty broad perspective of the evolution of the chain, and specifically as it pertains to its competitive landscape. Would love to just get the Dune kind of color here in terms of how you guys are thinking about things.
Yeah. So for us, I think the obvious is Solana has been one of our largest chain partners for years, and what we're seeing at Dune is, if maybe taking a step back, is
2024, I think Solana was looked at meme coins and this whole era, but now I think 2025, 2026 is more institution focused. And we're definitely seeing that. We're just seeing how the stablecoin in 2025 has doubled the activity. The DEX volume is pretty much also keeping up, and if not surpassing Ethereum. And when we look at even where you can build as a developer, it's obviously becoming the #1 place that you can build based on all of these products, obviously, everyone here today on stage. So that's what we're seeing, and that's where we've been seeing Solana headed.
Yeah, that's great to hear. And obviously, I love what you guys are building at Ranger, and I think it kind of goes hand in hand with this notion of making Solana the best place to trade any asset. Obviously, aggregation is a part of that, and we've seen that take place on the spot side. Would love to kind of understand what you guys are working towards, both on like the perps aggregation front, but also the new Vault product that you're bringing to market.
Yeah, I guess we see like recently a lot of like perp dexes are coming up. For the retail trader, they have like so many avenues to trade on. I think for us at Ranger, apart from like being able to like do smart order routing to give you like the best rates at any platform, what we want to provide also is like a unified trading terminal and give like tools and automations that like retail traders, they themselves don't have like the know-how or infrastructure to execute these trades, doing like maybe like cross-exchange, funding arbitrage, or doing like a DCA on like different platforms. We want to provide like these automations to users. And then I guess going back to the Ranger Earn product, the Vault side, we see on EVM, there are like so many Vault products that are doing so well, doing so successful. Basically providing like one-click access to like more complex yield strategies. So that's what we want to try and do at Ranger and for Solana as well, to work with like bring in top-notch hedge funds and asset managers and tokenize their strategies and give access to Solana.
Interesting. So that's a pretty new frontier for Ranger as a product, right?
Yeah.
Okay, awesome. Yeah, Connor, I wanted to get your thoughts here. As you guys are like pretty much the sole recipients in a lot of cases of aggregator flow, how do you see the aggregator space evolving? With new up-and-comers like Titan and DFlow?
I don't really know, but I wanted to ask you a question, Ramsey.
All right, go for it.
You have like one of the hardest jobs on Solana, professional politician. Every day people just yell at you, ask you for money. How do you sleep good at night?
How am I sleeping at night?
Yeah.
I don't know. My Whoop score has been pretty bad since I've gotten to Hong Kong, but generally pretty well. Yeah. And there's a lot of work to do. I think we're trying to onboard more assets every day. We're trying to build new primitives every day and ensure that builders and operators like yourselves have all the tools at your disposal to do that. But yeah, it's like it's a pretty challenging.
How do you equal the playing field and prevent picking favorites?
Equal the playing field within Solana?
Yeah, but you avoid
meritocracy. Yeah. It's a meritocracy. I mean, ultimately, the best product should win. And I think the foundation is uniquely positioned to enable anyone to build products that can achieve PMF.
Yeah. Long live Ramsey.
Yeah. Kevin, I'd love to get more thoughts from you on Drift's kind of next frontier. We talked a lot about perps aggregation, kind of what Ranger's building out with their Vaults product. But I realize V3 is a pretty massive change for Drift as a platform. So would love to just give you kind of some space to talk through how that that strategy is evolving and what that product could look like in a few months' time.
Yeah, sure. So we just launched Drift V3 about a couple of months ago. V3 was almost like a 6-month project where we focused heavily on trade execution, trade reliability, more liquidity in the platform. At the same time, focusing a lot more into our retail users of volume as well. So the project is still ongoing as well. The two things that we're still continue focusing on is, again, prop AMM. How do we generate more liquidity into the platform so that we can provide better fills, better executions to our traders? At the same time, we want to have more retail users coming into Drift. The latest data we looked at, about 40 to 60% of our users are trading on the UI, and most of them are retail as well. And then we want to further drill it down into it, because that's what we believe is the quick wins, more takeoff volume, and potentially then more market makers come in as well in the long run. So we're currently focusing on the mobile app, which is going to be the biggest biggest release happening in February, together with a lot of other onboarding experience that basically goes directly from your CFI to DeFi within just 1 or 2 button clicks. So those are the experiences we're trying to give to our retail users.
Awesome. Yeah, that's good to hear. I mean, I think obviously everyone's super excited about prop AMMs and what they're bringing to the landscape. But Leo, as kind of the newest entrant into the Solana ecosystem here, I'd love to just get a bit of color about your transition into the ecosystem. What went well, what didn't go well, and for everyone who may be watching in the audience or at home who's thinking about pivoting their product to Solana, what are some sage words of wisdom that you can offer in that process?
Okay, that would be a good question, but maybe I can share a little bit more is that when we decide to get into the Solana, we are thinking about what we can do the more thing to the Solana ecosystem, because we are natively from the EVM ecosystem, right? So if we cannot do the more thing on the Solana, we should not get inside, but we believe we can do more thing and contribute more the value back to the Solana ecosystem. So we decide to get into this new ecosystem, and we do see the lots of potential here. But we want to build something first instead of taking the resources coming from the Solana only. So like taking Earth as an example, we have a pretty solid EVM community on the base, on the BSC, on Arbitrum. So they are pretty familiar with our interface. They directly swap on our front end. So why don't we try to merge our community into the Solana? So we decide to directly integrate some aggregator so everybody can directly swap into the Solana instead of swap out of the Solana. So that will be the first thing. The second thing will be support more tokens to be launched on the Solana following the foundation's mission. So we are happy to bootstrap any kind of token liquidity as long as they are willing to launch on the Solana. We are happy to become their DEX partner because we know the Solana community is pretty diligent and pretty supportive, and we want to make it as a whole. So we just want to support this kind of mission so we get into the ecosystem. So my safe word is that you're trying to build something along with the community instead of you trying to take a resource out of the community. Yeah. That will be myself.
Yeah, we of course appreciate that, and it's been a pleasure to kind of work together in kind of building and growing the pie, so to speak. Yeah, I mean, I guess like generally to the group, would love to just get your guys' thoughts on the state of the market as it is today. Not talking about price, but from an application perspective, like what gaps do you think are currently on Solana, and where are each of you trying to kind of fill those holes? I mean, we can start here and move down.
Yeah. I think in terms of the state of the market, especially for like Solana DeFi, I'm still quite optimistic about it because like while we're trying to like onboard more vault managers and more like more curators, we've been speaking to like a few EVM hedge funds and asset managers who are looking to explore and access like Solana capital that they previously couldn't. So I think it's optimistic and it's good signs for Solana that EVM players are looking to come onto Solana to provide like the expertise, and then I guess for like the Solana community, they'll be able to like access products that they previously were more difficult to access.
Can you share any names there? Any interesting folks that are ready to kind of come to the fold?
I can share with you backstage.
Okay, all right. I'll talk later. I'll talk later. Connor.
I'm waiting for 00 to put microwave on.
Okay. Yeah. That could be interesting.
Yeah, I think. Well, yeah. For overall, I think Dune and just the market itself, there's a lot of misconceptions. I'm glad we've kind of overcome over the last few years, and I think we're at least from Dune's perspective, we have for the last two plus years been working a lot with enterprise and TradFi institutions using actually Dune's platform to export it through what we call data share. It's our tool, and it actually facilitates any institution to take data out into Snowflake, Databricks, or any other environment they would like. And I think it's about that. It's spreading across different, beyond just Dune itself for us. It's helping any builder, any institution be able to read data, make it more accessible. And that's what we've been focusing on, obviously working with Solana, a lot of the builders who are obviously using Solana, builders here today and other builders out there that are trying to make sure they can tell their story beyond just the narrative itself, but actually showing it with the activity they have going on. And that's what excites me, and I think doing as overall for us is looking, to your point, beyond the price. It's looking at what's happening in the ecosystem and how it's growing. I think that's what's exciting for us, and no matter what the price is today, it's about keep building.
Yeah. And is most of that demand coming from institutions directly, or is it a mix of like build? Okay.
It actually has been a lot. Institutions and exchanges are actually taking data out of Dune and doing a lot of these activities. Yeah.
Cool. Kevin.
Yeah, capital efficiency. That's a big topic for Drift. That's been a big core of our Drift as well. So,
Makes sense. Sorry, Connor, are we interrupting?
Don't mind me, I'm just quoting tighter than Binance.
Oh, you're quoting tighter than Binance. Okay, gotcha. No, carry on. This is important work, everyone.
Yeah.
This is very important work.
All right. So yeah, multi-asset collateral has been a big part of Drift as well. As Solana's ecosystem evolves further, it's much easier for us to have more assets into a multi-asset collateral in Drift. For instance, I think going forward, what we're trying to do is have, let's say, RWA assets or the stock tokens or even like commodity assets to be potentially used as a collateral. So those are the things that we're currently working towards.
Are we going to see equity perps anytime soon?
Pretty soon.
Oh, wow. That's big news. That's awesome.
Big news.
Very cool. And then I guess last but certainly not least, Leo.
Yes, to us, we're trying to partner with more partners, for sure. And at this point, I would say trying to survive and trying to partner with who can support you better. So Pancake is down to support as many as possible. So we are happy to explore any angle as long as you are willing to work with us. Yep.
Cool. Yeah, I mean, I guess we have time for one last question. And I think this is quite topical. Obviously, some of you may know, and perhaps some of you have submitted strategies to it, but Benedict and Dan have kicked off kind of this AI vibe coding hackathon to try and build a successful Prop AMM strategy. I'm wondering like how you guys think specifically like within your organizations about embracing AI and like is vibe coding kind of pejorative, or is it something that can lead to like better product iteration and kind of move faster? It's really up for grabs. Anyone can answer that.
Ship it to mainnet and see if it makes money.
Ship it to mainnet and make money. That makes sense. Yeah.
Yeah, I think overall, I think AI has been here for a few years. I mean, personally, I used to be on the AI and security team at GitHub. So I was early on with Copilot, and just seeing how it's evolved, I think for us at Dune, it's about being able to accept that it's here and making sure that the infrastructure is there to support all of this trading happening with AI.
I got to be honest, I've vibe coded a number of Dune dashboards, I think.
It's possible. It's possible. Definitely is possible, yeah.
Yeah. Cool. All right, well, guys. Well, yeah, appreciate you joining me here today.
Thank you, Ramsey.
It's been an absolute honor and a pleasure as always. And yeah,
thanks, Ramsey.
Thank you.
Thank you, Ramsey.
All right, guys.
Thanks.
That shit was hilarious.
Dude, good job.
Our audience enjoyed this DeFi panel so much online, and I hope you also enjoyed this. And next, I would love to welcome Gao from DeepBridge to talk about how we debridge the execution layer to make the infrastructure invisible. So welcome, Gao.
Hey guys. Awesome to be here back in Hong Kong. Guys, my name is Gao, leading BDN ecosystem at DeepBridge. And the Solana ecosystem has gone so far, and we're super proud. But in this presentation, we're going to discuss where it's heading and how we're going to tap into the billions. But let's go to the present moment. It's clear that Solana is where on-chain markets truly begin. It's stood the test of time. It's had some of the most successful launches, hosts some of the most successful DeFi primitives, and overall has an amazing user experience. And we're proud to be part of that journey. We've already facilitated more than 5 billion through the ecosystem and counting, and powering some of the leading Solana native wallets and apps. And the numbers don't lie. We're already impacting more than 1 million users, already 1.7 actually. And almost half of them are going through Solana. Really let that sink in. So where does that leave us? The vision for us at DeepBridge is to make Solana accessible to everyone. And I really mean everyone. How are we going to do that, though? We really need to elevate the user experience. First of all, We need to enable one click for any sort of on-chain behavior. Unlimited behaviors, starting with Solana. Secondly, not just trade anything on-chain instantly, but enable any behavior with instant finality. And then lastly, ensuring that there's the best execution and user experience for the end user. Back at Breakpoint, we announced bundles. This is the next level, and then what we've been focusing on at dBridge. It's one intent to enable unlimited actions through an atomic primitive where with one simple signature, the user can execute any desired action. All of this with all or none execution. So even before the execution happens, the outcome is deterministic. So there's nothing stuck and nothing partial. And then the whole experience with simplified, with gasless execution. So users only have to think about the input asset and the output asset, never gas tokens. And then lastly, all of this with a protected MEV experience, making sure that there's no reverted transactions and users are confident in their behavior. And the possibilities here are truly endless. To name some use cases, portfolio rebalancing. Let's say a user, they have multiple assets and multiple chains, and in one click, they want to instantly, atomically convert it to SOL. That is possible. Yield optimization. If the user has a vault on one chain and they want to convert it to another vault, in one click, that's possible. Payments. Let's say I'm a merchant. I want to accept payments on Solana, but still open global accessibility for my customers. That is possible. And the list goes on and on and on, from agentic payments, from DeFi trading, and also yield optimization. And really, the vision here is clear and simple. Any user, no matter where they are, has access to Solana in one click. And the process is simple. No matter where the user is, they just sign one signature, one intent, and dBridge Bundles handles the rest. Immediately, they achieve their desired outcome on Solana, and they're onboarded. And at times, they don't even have to realize they crossed the chain. And the vision here is very clear. Go from point A to point B without having to worry about any of the stuff in the middle and how it's done. That's how we're going to onboard the masses. Thank you so much.
Did you all say the Solflare like logo in the venue? And Solflare has been one of my favorite wallets. And I'm very excited to welcome Mihailo from Solflare to share about the full stack of Web3 payment. Welcome, Mihailo.
Hey, everybody. Good to be here. Love the energy as always. So my name is Mihailo. I lead payments at Solflare. And for those of you who don't know Solflare, we are the most powerful wallet on Solana, self-custodial, trusted by over 4 million users globally. Today, I'm just going to give you a quick update as to what we're building in the payment space, essentially how we're going to get to a full stack Web3 card proposition, first on Solana and probably wider. So before that, I guess I'll do this. So before that, just a quick overview as to how we think about building products at Solflare. We think that there are 5 core money capabilities, which are being able to hold money, to spend it, to borrow it when you need it, to grow it, and to earn it. And our goal really is to build products and features across these 5 capabilities. You know that in Solflare, you can hold your money self-custodial fashion. You can also spend it directly from your self-custody using your Solflare debit card. Still doesn't work. So currently, you can only spend USDC with our card, but we're happy to share that you're now going to be able to spend any SPL token that you hold. Want to spend USDT? Fine. Want to spend your Bong token or Fart coin? That's fine. You can be spending it in a matter of weeks. And if you want to spend something like XTOX or any other RWA assets, that's also going to be possible. So how does it work? Very simple. You just navigate to your card's dashboard within the Solflare app. You tap Settings, and you're going to be presented with a list of coins that you are holding and that you can spend. You basically choose which of the assets that you hold are going to contribute to your overall spendable balance, and you set the spending priority, toggling these little buttons. So in this example, you're first going to be spending USDC, then you're going to spend Trump, and then you're going to spend Bonk. You can also spend Sol, but you may not want to do that, and we've noticed a lot of our users actually borrowing against their Sol position to be able to spend. So this is exactly what we are going to be delivering to you. Instead of exiting your Sol position, you want to get some liquidity that is trapped. You basically will be able to borrow USDC, and it should come in handy in these market conditions until Sol goes back to 100 plus or 200 plus. We've done this in a very native fashion, so we've integrated it directly into the Solflare card experience, so you don't have to deal with the DeFi complexities of going to external dApps and kind of borrowing. It's basically very automated. So how it works, it's very simple. You first deposit Sol as collateral to deposit against, to choose to borrow against. Then you set some setting as to how you want to spend this new balance. There's a couple of things that we offer, but essentially you can choose to spend the borrowed amount first or the existing token amount first, or a combination of the two. You can track your borrow position in detail, including details such as the liquidation price or the API at which you've borrowed. You can pay back the borrowed amounts when you want to, and of course you can withdraw your Sol whenever you want to. Growing money or growing your net worth is pretty much everybody's goal. And so in addition to being able to buy meme coins in Solflare and other assets such as XTOX, you can also stake. But we're now going to be allowing you to earn yield on idle stablecoins. We've noticed hundreds of millions of stablecoins just kind of sitting there, not being productive, catching dust. So we're looking for ways into enabling you to get some yield on these stablecoins. So think of it as a savings account directly within your Solflare wallet. Everybody likes to earn money when they spend money. I think that's a no-brainer, and we've heard you, the most requested feature of our card product is to essentially be given cash back. So we're now going to be rewarding you for spending anywhere where MasterCard is accepted. So you're going to be rewarded with cash back. So stay put and make sure to kind of follow our socials to hear when this actually goes live. Finally, don't forget to enjoy a little. Crypto is quite hectic, moves fast. And we figured that once you are out there spending, investing, earning, growing your money, protecting it, you should also take some rest, travel the world. And we are going to be launching a travel portal, sort of a perk within the payments vertical of Solflare, where you can book your next long overdue vacation. So thank you, and get your Solflare wallet and the cards if you haven't already.
Thank you, Mihailo, for this amazing sharing. And next, let's talk about the infrastructure for internet capital market, which will be moderated by Ding, our favorite DevRel at Solana Foundation, also the founder of Blue Shift. By the way, Ding can speak Chinese very well. Welcome.
Was it out of order?
What a great intro. Thanks, Yao. Hey everyone, I'm Dean, one of the co-founders of Blue Shift, and today I'm joined by Nico, Tom, Robin, and Jay, and we're going to be talking about internet capital markets infrastructure. So let's just quickly go around and I'll let each of you guys just sort of introduce yourselves, your company, and sort of what you guys do. We'll start from Nico.
Sure. My name is Nico. I'm the CTO at Arcium. And yeah, Arcium is a privacy project on Solana, which basically allows you to build programs with encrypted states that are directly compatible with the rest of Solana as you know it.
Hi, my name is Tom. I am the head of Asia at 00. We are building a dedicated fiber network, a physical infrastructure layer for validators on Solana so that Solana can go faster. And so IBRL.
Hey guys, my name is Robin. I'm the founder and CEO of Raiku. At Raiku, we allow applications and developers to book or reserve block space ahead of time and also just in time to make things go faster.
Hi everyone, my name is Jay. I'm a business lead of Nodit. Nodit is a blockchain infrastructure platform providing RPC nodes and index data, primarily focusing on Solana network integrated with 00, but also supporting more than 3 other chains. We are built for institutions, so we power Upbit, which is the largest crypto exchanges in Korea, and we are SOC 2 Type 2 certified. We become the first blockchain infrastructure provider in Korea to achieve this. So I believe this is a very interesting conversation to have today, especially for internet capital market infrastructure in Solana.
Cool. And in case you guys haven't heard of Blue Shift, we do developer education and open source tooling. We're owned and operated by Solana core contributors. So I'm going to get right into it with a really fun question. We all noticed, I think it was last week, Vitalik posted a very spicy tweet saying that L2s, for the vast majority of them, are basically scams and we don't need them and everything can scale on the L1. I'd like to ask each of you, what do you think this validates and what does it miss?
Yeah, so for me, one thing that I think this really validates is how on Solana, I think as opposed to Ethereum, you have this mentality of saying, let's make things 1% better every day and have that compound, as opposed to having these, of course there's also long-term plans, but having the main scaling factor being, oh, we'll do all of these things, and then when all these things come true at some day in the future, then the chain's going to be 10 times faster. And that was the idea with L2s to say when they reach stage 3 or what it was, when they're all live, then our chain's going to be much better. Whereas with Solana, yeah. And I think the other thing that this validates as well is that for anyone that's been around Solana for a while, you always hear about composability, composability, composability. And that's one of the things that Vitalik also named inside his tweet, where he was like, for the longest time, we claimed, oh, at some point, L2's composability will be seamless, meaning you'll have an asset on Arbitrum and you'll have an asset on Optimism, for example, and then you'll be able to use those as if they were just on the same chain. But this never materialized, even though bridging improved a lot. And this, at the end of the day, really limits what you can do if you have to constantly switch back and forth between chains. So, yeah.
I mean, I'll try to keep my opinion pretty short, but I think it was, when I saw that tweet, I was like, finally, there's some admission there. And I remember the times when I was working at Solana Foundation, and we were talking about, or I guess like, explaining to a bunch of companies and projects about like the values of like Solana and Solana's composability. And anyways, to see that finally happen, that admission is pretty It's a lot of fun as well. I think what Vitalik does miss, however, is that Ethereum now needs to go back to the drawing board. Like they've done that now, and they are still focused on the execution layer. Whereas I think like Solana has been able to prove that they are the execution layer for internet capital markets, and I think that what Vitalik ultimately misses is now the network layer. For example, like 00 is helping to move that along for Solana. We are the internet and internet capital markets, right, in order to enable that. And so, yeah, I think they're a little behind the race. You know, wish them well, but you know, we'll see.
It definitely validates the efficient markets theory, because it's like you're not going to be able to facilitate meaningful markets that is fragmented across 100 different L2s. Like, I think that is now proven. And it validates being pragmatic. I think that is what Solana Foundation has been doing fantastically well with clear leadership, and that you can see the results of that now.
Yeah, I really agree with Tom and Nico already mentioned that it really validates the strength of Solana network, especially in the composability, and yeah.
Awesome. Yeah, for me, like when it comes to this topic, I think back to like a quote from Roger Ver, like all the way back during like the Bitcoin block size wars, where he said like, as big blockers, we don't preclude the possibility that we need to eventually scale in layers, but you don't get any advantage out of strangling the base layer, you know? So I think that's like a really good way to think about it. But yeah, so then I'll ask you another really cool question. So like, since we're talking more about like monolithic scaling as opposed to like scaling in layers now, right? Like as a broader ecosystem, and you know, a lot of that's to do with like what we've been doing for the past, I don't know, 5, 6 years sort of thing. And now, you know, Vitalik has changed his mind. And so it's like, seems like everything's going in that way. So then I'll ask like a question pertaining to that. What breaks first if Solana succeeds massively? Like, let's say we got like 1 trillion different type of asset classes tokenized on the chain. What do you think breaks first?
NASDAQ.
NASDAQ.
Yeah. Ethereum, NASDAQ, like, come on. Like, now we're competing with not the likes of Ethereum, Aptos, it is NASDAQ, and that will break. Easy.
Tom?
Wow, that's a pretty insightful.
I don't mind that answer, yeah.
I think, you know, since we're talking about infrastructure, for at least for, you know, the team at 00, I think that the way that we think about it is the physical network, not Solana as a network. I think that we need to, again, like tackle these challenges that we have. 00 kind of came about because when Trump was working on FireDancer, they realized that the optimizations on the software level were not enough, right? And so you needed to take a look at the layer below it and like actually improve the physical layer of the internet. And so, yeah, and that's kind of like how 00 started.
So you need more fiber.
Exactly, yeah.
Jay?
I think it will break validator communication and RPC first, definitely. And that's why we decided to integrate with 00 for a dedicated fiber network, for a better experience and stable infrastructure, especially for the institutions using our infrastructure.
Nico?
Yeah, I mean, for myself, I would say more generally, the limitations that you hit with the SPPF in general and just the SVM, in the sense that you know, you can execute lots of things, but there's a reason that we are building Archeum, in the sense that if you want to execute on private state, for example, which, you know, if we're speaking about massive success and Solana breaking, to me that means tons of new users coming, many of whom have never used Solana or blockchains in general. And I don't think I've ever met, you know, someone who hasn't used blockchains before who told me, oh, everything's public over there. I wish my normal bank account was like that as well. So yeah, I think the limitations that you get from the execution model at the moment, which is why we're building Archeum.
I would say, yeah, if I had to answer based upon today, the answer would be SIG verify. But yeah, so then the next question is, do you think the future is one global state or many specialized execution environments? And you can also say like a mix of both if you don't agree. It's not a dichotomy. And I'll probably start with Nico, because I think you probably have a good answer for this.
So I'll say a mix of both, in the sense that we saw with L2s that fragmenting states across a whole bunch of different networks and trying to say, okay, interop, we'll solve that later, is a lot more difficult than it sounds. And also when you think about how traditional finance, the traditional finance system works and why it's so slow, it is because when you have to synchronize state across different banks or different custodians or different whatever, things inherently become super inefficient, and that's ultimately what Solana initially solved with composability. But then, as I just said before, you are limited in the sense that certain types of computations cannot be executed on base layer Solana. So yeah, I think the future looks like a mix in the sense that you have Solana, you have some things, such as Archium, for example, that allow for specialized execution for things that Solana simply cannot execute due to its architecture. But those specific layers have an incredible focus on being as composable as possible and being, making programs using them a first-class citizen on Solana, just like any other program would.
Jay, what about you? Because I know you work across a bunch of chains.
Oh, yeah. I think still there will be a lot of different execution layers in the states for blockchain, because we have been watching a lot of blockchain evolving, from exciting experiment to something far more serious now. But still, they are trying to capture institutional use cases and case references for their business models. So I think there are going to be still a lot.
Do you think there'll be more specialization to different verticals, and so therefore there'll be multiple?
Right.
Yeah. Cool. Tom?
Yeah, I mean, I fully agree with that. I think we see this in traditional markets as well. Now, it is a little bit different in, I guess, a blockchain environment, but you don't just have the NASDAQ. You have the Hong Kong Exchange. You have a bunch of different regional offshoots as well. And so, yeah, I think I tend to agree with Jay.
Yeah. Robin?
Yeah, I think it's certainly proven that having one unified reference layer of information is the way to go. However, being able to control low-level scheduling is definitely the way to go, because that is the only way we can facilitate, I think, complex use cases that in such a way that you can essentially protect and make it a lot more viable for the business, right, to facilitate the business logic that they need. That is definitely required, where we're going, for sure.
Yeah, so you're sort of saying if things do converge down to more close to the single execution, that the only way that's really possible is if you have very good predictability over sequencing, right?
Yes.
Yeah. Cool. Yeah, I think that personally there will be many, but I think that over time there will be winners and losers, and that we will probably converge down to there being a few consensus bets. Solana 5-6 years ago, everyone laughed at it. Now I would argue it's it's Bitcoin, Ethereum, Solana, right? And they're the big three. But we'll see. I think it's a competition, and we need to continue to earn it. If we want to stay relevant. Now this is a good one. What is the most underappreciated piece of infrastructure that will define the next cycle? And I'll start maybe with Jay, if that's all right.
My view, I think the most underestimated piece is institutional compliance infrastructure. I think if you think about what institutions really require for their financial markets when they adopt blockchain, it's not going to be what kind of TPS they provide, or what kind of tools or functions are available for them. It will be rather about whether it can operate kind of like
in a way they're used to
it's
in
more
dealing
like
with
a
the
plumbing,
contract.
it's unseeable plumbing that already had traditional finance scalable. For example, in settlement, data, financial or market data, risk management, and audit trails that never fail. So I think the infrastructure, institution compliant infrastructure will be the one.
Right on. Tom, let me guess. Networks?
Networks, yeah. I mean, I think the way that I want to stress this is, if you think about like NASDAQ today, right? Yeah. Or even like internet capital markets, and like why I mentioned, we are the internet and internet capital markets, is that you can have wonderful markets, but if you are constrained by the physical layer, like if your trades are defined by the worst hop on the physical network, then that's a very bad scenario to be in. And so I think if you, again, like remove peering, like co-location and all this from NASDAQ, then like, is it really NASDAQ? Is I think like how I want people to think about why the physical layer is so important. Yeah.
Cool. Robin?
Any infrastructure that removes uncertainty, I think is going to be, important going forwards. So basically allowing for micro markets when it comes to block space, fee markets, I think is very important because you can facilitate many, many different use cases instead of like, one unified block space market. Yeah.
Yeah, I mean, if you want big institutions to come in, they're going to have some kind of guarantees. So yeah.
Exactly. Yeah. If you're a trader, if you're a market maker, like basically anyone that interacts with the market, you're already dealing with a lot of variables in which you can't control. So you're always going to be steering towards the environment in which you can control as many variables, right? So yeah.
And what do you think, Nico?
I think you know what I'm going to say. Privacy, of course.
Oh, wow.
But in line with, with the previous points about especially it being relevant for institutions, because this doesn't just go for, how you manage your money on-chain, but also if you're an institution and you have some type of customer data that you're processing on-chain or storing on-chain or whatnot, if you have to do this in plain text, it's basically a no-go for institutions. But, I'm kind of happy to see that, especially more recently, it's become a lot less underappreciated than it's been in the past. Like, I feel like we're kind of seeing a Cambrian explosion of privacy apps, especially on Solana lately. And yeah, it's cool to see a lot of them are using Archium too, so, yeah.
Nice. Yeah, the most underappreciated piece of infrastructure, probably RPCs. Okay, so our final question, we got about 2 minutes left here. So I'll ask you to keep your answer to 30 seconds. What belief about Solana infrastructure that most people in the audience hold today will turn out to be wrong in 2 years? And I'll start from you, Nico.
Yeah, so traditionally people had, I remember there used to be this thing called the blockchain trilemma, and I feel like there's a similar thing for privacy today, where people sort of have this idea of fast, secure, and cheap, pick two. But yeah, we with Archium, we find to prove that actually you don't have to choose two. You can have privacy that's fast, works well, is secure, and is affordable too. So yeah.
Nice. Tom?
I think for me, it's that thinking that validator clients and their evolution are going to be sufficient for execution in the future. I think we have like wonderful teams like Anza. You also have like Harmonic working on like block assembly and all that. And like this is not a dig on them. I think it's more that it needs to be a combination of both the physical infrastructure layer along with the block assembly stuff.
Right on. Robin?
Everyone is so hyped for MPCs. I'm not so sure how it will turn out. It's going to be interesting to see when we can get the final spec out. But yeah, I'm questioning MPCs.
Right on. And Jay?
I think it's resiliency of Solana network. It is fast and cost-effective for building products and projects on Solana, but they will see more use cases from high availability in terms of institutional use cases.
Right on. I'm going to have to agree with Robin. I'm like somewhat bearish MCP FBA. Yeah, but we'll see. All right, well, thank you, everyone. It's been a great panel. Give them all a round of applause, guys.
All right, we just finished talking about their infrastructure. Let's talk about digital assets. Everyone's talking about digital assets treasury last year, and today we're very excited to have three major DAT players of Solana and talking about why Solana is the OS for DATs. So welcome, Joseph will moderate this panel. Welcome.
Wow, we actually have a penguin on the panel. Yeah. I guess this is the afternoon crowd. I'm sort of hoping that we could sort of wake people up a bit and have some interesting conversation on this panel. I'm Joseph Chi, Executive Chairman of Solana Company, with this ticker HSDT, which I built together with Cosmo here. And with me on the right-hand side, just want to do a quick intro so we don't waste time doing personal intro. James is the, I'm not sure, is or was the CEO or co-founder of Jambo, and strategic advisor to Sharps Technology, ticker STSS, a NASDAQ-listed Solana DAT launched in August last year. James, versus me and Cosmo, he's a true Solana native entrepreneur. Unlike many of us who transitioned from TradFi, James grew up within this ecosystem and being a core member of the super team for Solana. James has an unparalleled bond with the community. I think most of you here probably know him personally. At STSS, he has pioneered a model where a public company doesn't have to hold doesn't just have to hold asset, right? It actively supports ecosystem through partnership with protocols like Bonk and Jupiter, for example, and I mean effectively integrating the Web3 culture with public company capital. Welcome, James.
Thank you. Appreciate it.
And I guess Cosmo, my partner in crime, he's a GP, a general partner at Pantera Capital, is one of Pantera, obviously, a lot of us know, one of the longest standing, one of the largest crypto asset manager in the US, and obviously a big fan, a big supporter, a big holder of Solana. He's also a director sitting on HSDT, and we call him a co-founder of Solana Company. I guess he doesn't need a lot of introduction in the US, but here maybe I owe him a short intro. He's widely recognized, I think, in the space as the engineer for this whole digital asset treasury sector. He's invested in many of them. He has sort of worked with all the founders of DATs to evolve the business model, which started with MicroStrategy, moving from like this digital gold to this other crypto, this active programmable treasury. He brought a lot of experience to HSDT. He was, frankly, my teacher when we were trying to put this thing together. And this is HSDT is the only DAT that Pantera obviously invested a lot, but this is the only company that Pantera sponsored with Cosmo driving it. It's an honor to have you with us today, Cosmo. I guess we should start with something. I think something interesting. I don't want to talk about academically what DAT does and everything else. I think most people know what it does, right? And I think the statement sometimes you hear in dinners and gatherings like, oh, DAT is dead, it's over, right? That doesn't work, it's money losing, we don't understand, it's not a valid business model, right? Well, I think maybe we start with Cosmo, right? Cosmo understand the business model, the logic behind it a lot more, right? And then I guess all of us here selected Solana to be the underlying crypto. Maybe I'll let Cosmo talk about how to look at DAT and should it evolve, for example, with this kind of market conditions, and what should DAT be doing during this period of time, right? Should we start with that?
Yeah, sure. Thank you, and thanks everyone for taking the time here. When I think back to what a DAT is, when we first started kicking this off, I thought it's effectively there's a few analogies I like to make. One is that it's the investor relations arm of a token, right? The most important job of a DAT is they believe in maximizing shareholder value by maximizing accumulation of the underlying token. That means you also have to have the underlying token be worthy of value. And so being the IR function for the underlying token is extremely important. I think another analogy I like to make is that DATs are like financial services businesses, right? They are a pile of Solana, and then they go out and try to generate yield on it, either through financial engineering on the liability side of the balance sheet, or generating yield through DeFi or other options on the asset side of the balance sheet. And by doing so, you can someone who holds a DAT can own more Solanas per share over time than owning just Solana. And so that's very exciting. There are a few ways to execute against that. I think historically it started with MicroStrategy. Really, they only innovated on the liability side of the balance sheet. They sold stock, they sold prefs, they sold converts in order to raise capital in a per share accretive way. But as you move on to something like Solana, you have the ability to really optimize the asset side of the balance sheet now. And so that's, we started with staking. At HSDT, we have industry-leading staking yields, 6% plus, well above benchmarks. And so that's a value add that we offer, to grow the Solana per share. Earlier, we launched a really innovative partnership with Camino and Anchorage, where we now have the first tri-party institutional custody version of interacting with DeFi. And so that'll help add a few points of yield as well. And then there are lots of other ways to look at it. Some people have decided that DATs are better as operating businesses, and they may go and buy operating businesses, kind of like a SPAC might go buy an operating business. Or they decide that perhaps the DAT should just continue to do DAT on DAT M&A. And so there are lots of ways to really innovate along that, and we're starting to see all that start to play out now that we're past the initial boom.
Maybe a quick follow-up. MicroStrategy announced they're going to do this anti-quantum, strategic initiative. What do you think of it?
Well, fortunately, Solana is an ecosystem that develops really fast, right? There are a lot of really innovative engineers here who care a lot. And so when I think about quantum, I have no concerns that Solana will be quantum-proof or can develop there in a very short amount of time, because everyone's so aligned, because everyone cares so much about being on the bleeding edge of technology. That is different than Bitcoin, which is notoriously slow to change. There are many people much smarter than me about the quantum risk to Bitcoin. My understanding is that there's a serious choice that they'll have to make at the end of the day of either letting their coins be hacked or hacking the coins or seizing the coins themselves. And so there will be a reckoning moment likely for Bitcoin, call it 10, 15 years from now, unless they can innovate fast enough. And fortunately, Solana is well positioned to do that well before that.
Okay. Well, James, your turn. So Sharps is led by Solana native founders, strong ties to the foundation. How do you leverage this knowledge, resources, the network you have to sort of help the ecosystem, also help SDSS?
For sure. We only have a few minutes left. It's the afternoon right after lunch, so I appreciate everyone staying awake. Let's take a step back, right? We're talking about Solana right now. If you're sitting in this seat listening to us here, you're a Solana bull, most likely. You're at Accelerate. We're here. We love digital asset treasury around it. Let's take a step back and look at what's not attracting the market right now and what we are in the places. What attracted people to Solana? Degen gambling. as a retail player, now you have your prediction markets. Directly from Phantom, you can just go trade prediction market sports, easy. If you believe in different currencies, crypto has lagged behind gold and most of the commodities in the last few months. You're most likely buying those currencies. If you believe in technology, who doesn't have a cloud bot and looked at some sort of AI form or used AI today, right? You're probably investing in AI. So if all of these three sectors that what brought people to speculate on Solana's price are gone, in my opinion, as of right now, this is the best time to build because nothing has changed other than the price. There has never been more bullish statements coming out, more product updates. You look at the Jupiter team, you look at the Bong team, you look at everyone that's been just nonstop shipping, but just price hasn't changed. And this is a function of us. And I say us, I mean, I think digital assets getting into a much larger asset class and addressable market in the world and with much larger forces behind it. So as a Solana ecosystem founder, to answer the question, the way I leverage it is honestly just working with a lot of the projects and not working with them. Honestly, they're helping me, right? Like just mentioned Camino. I think their vaults are great. Looping, getting a lot more yield than you can just generate, and you will get those earnings as a public company on your balance sheet. So super excited, honestly, even at this juncture.
Well, I think with that being said, all of us now in Hong Kong, right? And if you think about Solana in Asia, and then I guess both of us have Asian roots, what do you think the things that DAT should be doing in Asia together with Solana?
Great question. Let's look at Asia, right? I think Asia, let's split that into two, institutions and retail. I think as of today, institutions are actually building the plumbing for retail, for digital assets, right? You look at what's the hottest topic in everyone's mouth at the conference, stablecoins, right? In Europe, you have MiCA. In the US, you have Genius Clarity Act. Here in Hong Kong, you have stablecoin laws that passed last year in August as well. So it's just getting more compliant. Banks are adding it into their plumbing before I feel like you can have a full-on neobank experience of everyone be able to use. So I think here in Hong Kong, what most attracts investors is obviously a lot of public equities, US equities. You have brokerage firms such as Futu that Solana has partnered with and brought them here to provide more exposure and more Solana trading on their apps to a completely different crowd. So I think a big important part of being in Hong Kong, and what I know Joseph's schedule, I know Cosmo's schedule, extremely busy, literally back-to-backs, all with institutions. It takes the institutional piece, but then also the retail piece to honestly believe, because that's where the retail sort of right now for the price action is gone, and everyone's feeling some pain.
Anything you want to add to that?
Yeah, I mean, look, the number one thing that we want to do is help people understand why Solana is such a groundbreaking technology and why it's so important that our financial rails move on to blockchain rails and specifically Solana rails. And so we're really proud at HCCT to be engaging with institutions, not just financial institutions that buy and sell assets, but actual companies that are looking to evolve and advance their tech stack and showing them that Solana is probably the right way forward. And so I think that's the most important thing. Yes, you want people to understand. There's two types of adoption, right? There's tech adoption and there's capital adoption. You need both to happen. A lot of that has happened in the US, especially for Solana, and we like to make that more global because blockchains are global.
Okay. If you want to think about sort of like a killer feature or some sort of technological breakthrough in Solana, let's say for the next 12 months, that are important in your mind, not only for Solana, also important to generate excitement into the shares of our DATs. What would they be? James?
This might come off as cliche, but still, I think it's a very big UI UX issue for a lot of users to be coming in, and this directly targets retail. This will not be for institutions. For example, you open your Phantom wallet right now, you can directly place a bet on the Lakers, being the Knicks, winning a championship. You see it as a position right above your crypto asset holdings. Now that is a 100x UI improvement from previously when you have to open your Phantom, go to the browser, go to Polymarket or Kalshi, log in, enable trading, sign transactions, deposit, and then trade. So I think when you can start, and it's shown in the volume and valuations of these companies that are being built to consumer. So I think when you can shorten that gap of UI and what people want to do, I think it will help a lot in adoption.
Yeah, I mean, I think the most important thing is that'll help adoption is really around products that have breakout use cases. And And so, last year we saw the huge growth in stablecoins, but I think this year is going to be even more tremendous. We're seeing a lot of companies choose to use Solana rails for stablecoins. Right? Western Union is the largest remittance provider of stablecoins globally, and they've decided that they want to build their stablecoin on Solana. Robinhood has talked about their tokenized equities. They're planning to create their own stack and potentially put that on Solana. We're seeing companies like Ondo and others and Superstate really grow their tokenized equity issuance and volume and on Solana. And so we're really excited to see some of those start to hit product market fit and really take off. It'll take a combination of strong go-to-market and strong and better education. But the product itself is so game-changing. I think we're going to see a lot of. I hope that a lot of people are going to realize that this year, and usage is going to really grow, and that'll drive obviously Solana.
Terrific. I guess everyone here also knows that NASDAQ and NYSE sort of announced that you're going to go all in on tokenized stocks. I think a lot of innovation is happening. I think, like we said, US is leading the way. I think some of this innovation will come here very soon. Thank you for your time. Thank you for the two panelists. I'll come back and tell you more about what we're going to do with Asia.
Thank you, sir. Oh, thank you, brother.
Thank you, guys. Hope you enjoyed this panel moderated by Joseph. But if you still didn't get enough of him, he will come back to give us sharing about how Solana's super cycle comes from APAC. Welcome, Joseph.
Thank you. Thank you. To be honest, I think right now is a bit difficult for the sector. I mean, it's going through this once in 4-year down cycle. And I came from TradFi, and I never understand why there should be a 4-year cycle. But it is where it is, whatever. But to be honest, I ran capital markets for a long time. Markets goes up and down. And downtime sometimes is good, because I think I'm sure you heard Anthony Scaramucci this morning, right? And I think I'm also feeling the same. The downtime actually gives me more time to run the company properly, to think about strategically what you should be building, hire the right people, build it out, execute. Otherwise, if it's uptime, I'll be on conferences, roadshows, seeing investors all the time. And also, right now, I think it marks sort of a transition period, a turning point for blockchain, right? And I think it all started even last year, people realized it. And with a business model that used to work very well in the past, may still work in the future, but it's time to build new ones that's sustainable, real life use cases on Solana. And that's why I think for the next phase, and the next super cycle where you see Solana was like the hottest thing, the most important thing that happens for blockchain, for capital markets, for the world, it should start here. And let me tell you why. For a lot of you who came from this part of the world, some of the numbers are not new to you. There are 4.8 billion people here, 60% of global. And I mean, at the moment, if you look at most of the users of blockchain, Solana, it mostly concentrated in the West, right? And most of the major economies here are export-led economies. This is 60%, a lot of exports to the rest of the world. E-commerce, China is a big part of it, like all the small stores, SMEs, mom-and-pop store, all the way to big corporates. There's a lot of different kind of things, all the way down to high-tech stuff, down to the simple thing of like a spoon, and being exported globally. E-commerce market share is humongous. So it's not a surprise that global cross-border payments, a big chunk of it happen with counterparty in this part of the world. And the first billion user that on Solana, on whatever application altogether, will happen here, for sure, 100%. And the other thing that's important, Asia over the last 20 years has grown in wealth. There's a lot of wealthy people that became, accumulated wealth very fast in the last 20 years. And it's a big part of it right now. You can see it reflected in the equity market, bond markets, real estate, and everything else, right? A lot of this money came from what? All the exports of goods from this region to outside. It comes in. And there's one thing people don't realize. People keep asking, where is the buying power on the crypto side? When you do RWA, you have all sort of assets on chain. Who's going to buy them? This. Because a lot of your next few years, you will see a lot of your money coming back to this region in the form of stable coins, more and more so into the hands of corporate individuals, SME, everywhere. And there'll be a big stash of stable coins built up in Asia. And this is a good place to build tech companies because China, India, Vietnam, they produce the majority of the tech talents at the moment globally. And you just look at the numbers, it's just nothing to compare. And if you want to build here, right now, especially down cycle, now you're not going to be too excited about buying, selling all sort of cryptos. You want to build real business here, real businesses here, this is the place. There are a lot of talents now coming out of schools, you can hire them, train talents from Web 2. And many, many tech companies, they have 10,000, 20,000, 100,000, 150,000 IT people. Some are downsizing. We have these people that could be helpful to building our Solana. And don't be afraid of China, like I said in Abu Dhabi, right? Do not help any capital flight from the country. Do not help go and rip off mums and pops. They're happy for you to use their resources, use their people to build real-life use cases on blockchain. And as recent as 10 days ago, the CSRC, the securities regulator of China, has announced that using onshore asset in China to issue RWA, tokenized crypto offshore, is okay. All you have to do is pre-file with them, like issuing debt and equity using domestic assets. That's what they're telling you. They are supportive of building real businesses. Super apps, we all know this. I mean, the Asian, the Chinese are very good at this. KakaoTalk, Alibaba, TikTok, Rakuten, whatever, and all have tens of millions, hundreds of millions, even billion users. And Asian developers are very good at this. And if you are not here yet, I suggest that you think about using the talent here to start building. And the big population here is for you to grab. And I guess in the Web3 space, there's already some super app that you can see that's built out of here. And the other thing that's interesting about this part of the world, which as a Malaysian I still don't quite understand, because the old folks in China, in Taiwan, everywhere, everyone is so open to using new technology, to learn something new, to do it. As long as it's not too difficult, they would do it faster than any other Western countries. And this is I think if you get the right product and right apps out there, I think the conversion rate and growth will be a lot faster. And by the way, Southeast Asia, there are hundreds of millions of people. They are not even banked. They don't have a bank account. At the moment, they're using e-wallet from Gojek, for example. Places like Indonesia, 3,000 islands. They don't have bank branches there, right? And it's impossible. It's not economical to build bank branches. And you can reach out to them. These are the unbanked population, underbanked population that will skip a generation. Perhaps they will never, ever have a bank account in their lives, right? And this is also for you to grab. Crypto users, I mean, Asians like investments, like gambling. And it's not a surprise to me that we have a huge user base here, the majority of it globally. These are turning into users. If you build use cases that are useful to them, I mean, at the moment, because we invest in a lot of early stage ventures, even Chinese people in China now could pay for the subway using their crypto wallets. They could consume. You can't trade them, you can buy them, you can consume, right? So if you build real life use cases, you could convert these the buyers, investors, speculators, those people are having fun to become users, and also those that are not in here yet. This is the proof. Momentum is real. Asia has the highest growth on-chain value. Payment, remittances, gaming, hedging is all coming. It looks like a big number, 250 billion. This is nothing. We're talking about tens of trillions potentially. This is all coming. If you focus on this, I think the return on your effort is very high. So I always say this, Solana is low cost, high speed, scalable. It's perfect for Asians, especially for Chinese. It's what they do, that's their culture, that's their business model. And this will make it easy for you to grow your business here using Solana as your base protocol. And I guess, needless to say, I guess these are all the good reasons. We need more Solana builders here. I think there's a lot of, please get the news out. We're here to help. The foundation is here to help. Solana company is here to help. You don't know how to do it, come to us. You need any advice, come to us. If you don't know the counterparties you're dealing with, come to us. We'll be helpful. Thank you very much.
Thanks, Joseph, for sharing this about APAC. And next topic, let's talk about Bitcoin is a digital asset and Solana is an infrastructure. And this panel will be moderated by Jenny. Welcome.
There's no one here. I'm the four. No, I'm the last. Oh.
Good afternoon, everyone. Welcome to the panel. Bitcoin is the asset, Solana is the infrastructure. Solana had a very epic year with Bitcoin adoption in 2025. We crossed over $1 billion in TVL Bitcoin on Solana for the first time. We also have, about 800K fee payers of Bitcoin transactions on Solana, as well as the total transfer volume is approaching 100 billion. So we wanted to take this opportunity to introduce you guys some of the top builders on the ecosystem. So why don't we start with Theo?
Hi guys, Theo Chapman here on the BD side of Lombard. Lombard is an on-chain Bitcoin company. We're best known for issuing an asset called LBTC. LBTC is was the first yield-bearing version of Bitcoin to operate at scale, and actually the fastest yield-bearing token in crypto. We hit around $1 billion worth of TVL in just 92 days. And so we're continuing to build sort of like a financial suite of products on top of Bitcoin. And personally, the way I like to think about Lombard is like the Swiss Army knife for Bitcoin on-chain and also on Solana.
Hi, thanks for coming, everybody. My name is Sean Chung. I work at the blockchain partnerships team within Chainlink Labs. Chainlink provides reliability and security for the blockchain ecosystems through non-EVM and also EVM ecosystems, definitely including Solana. We provide data oracle, and also in the interoperability side, we connect all the blockchains in a very secure and reliable manner. And also there's a series of other product suites that we are launching. There's Chainlink runtime environment, there's advanced compliance engines, and so on. So thanks for coming.
Hi, everyone. My name is Cheryl. I head strategy at Camino. Camino is the largest borrowing protocol on Solana. We've done over $16 billion of assets originated. Currently have over 20 audits, have given out over 100 million interest revenue. We're very proud that to date we have had zero bad debt to lenders since inception. We work with a lot of the players here to really drive BTC-Fi on Solana. Really proud to work with a lot of our partners in enabling more capital efficiency for a lot of these Bitcoin assets on Solana.
Hi, I'm YC from WBTC. So WBTC is the largest and leading tokenized Bitcoin since 2019, with about 120,000 Bitcoin in custody. We process like 30 over chains and are on 720 protocols. Yeah, very happy to be here today to discuss more about Bitcoin.
Awesome. I guess the first question is, as we all know, Bitcoin is the largest crypto native asset. $1 trillion of value accrued to this asset. And yet, due to the limitation of the Bitcoin native network, it's been really hard to do DeFi. There has been a lot of attempts in the past, but many L2s have not really seen a lot of progress. So I guess my question for the panelists is, why do you guys think Solana is the best liquidity layer for Bitcoin?
Yeah, so I think with around 99% of Bitcoin being off-chain currently, and only out of the Bitcoin that is on-chain, only half of that, or 0.5% of that, being used to generate yield in DeFi today, I think it comes down to, firstly, inertia. I think that's the biggest competition that on-chain Bitcoin faces. But then secondly as well, I think that we haven't seen the best products built so far to date on Bitcoin DeFi. I think Solana can enable great UX, great apps, and sort of like, I think that the big unlock for Bitcoin on Solana comes down to integrating products which feel like you're not using Bitcoin DeFi. For example, like the Coinbase Morpho deal, for example, you just deposit Bitcoin and you don't know you're using DeFi on the back end. It's what they call the DeFi mullet. So I think that more products being built like this on top of Solana can enable a huge amount of liquidity unlock. And I think only 2 to 3% of Bitcoin being used on chain would unlock $100 billion worth of net new liquidity. So I think it all comes down to UX and just making Bitcoin feel trustless in DeFi.
Cheryl, do you want to say something?
Yeah, I think that, it's very clear that Bitcoin as a network isn't a programmable chain that really allows for successful BTC-Fi or composability. So Solana is the clear chain that is super quick, it's fast, handles the most TPS. It's very clear that DeFi should really thrive on a chain like Solana. I think that what really sets Solana apart is really also its emphasis on reaching Bitcoin holders all across the world. I think it's actually very prevalent in some place like Asia, wherein Solana Foundation really makes a huge effort in having roadshows in China, in different cities, and really talking to various stakeholders. So at Camino, we partner with a lot of the largest exchanges. For example, we work with OKX, Bybit for XBTC, FBTC. We really think that it comes down to execution, given what the chain has to offer.
Awesome.
Yeah, so I think if we are able to unlock BTC on a large scale into a composable DeFi, the impact would be very profound. Yeah, like first of all, we will be transforming Bitcoin from collateral into like active economic activity. And then second is BTC can also become the collateral base across all ecosystem. And last, if we're able to unlock that, which is like trillions of dollars endowment, the narrative for crypto will shift from speculative into a unified capital market. And I think Solana complements very well because of its high throughput and its low transaction costs. And on top of that, I think that the ecosystem on Solana is capable to come together to build a strong foundation for the BTC-Fi environment.
Awesome. 2025 was a very pivotal year for Bitcoin. We had multiple top Bitcoin projects launching on Solana, including XBTC, WBTC, LBTC, FBTC. The name goes on. I guess my question for you guys is, what was driving this sudden Bitcoin migration to Solana? And looking ahead, where do you see as the key growth drivers and catalysts for Bitcoin on Solana in 2026?
Yeah, I think from the Lombard perspective, I think it was super interesting to be able to offer a yield-bearing version of Bitcoin on Solana and have that used as composable collateral asset in protocols like Camino, for example. So that that naturally drew us towards Solana. And I think the key driver moving forward for Lombard is going to be this new Bitcoin Connect product we've launched, which has an SDK inside of it. And this is going to enable the best developer experience for the developers inside of Solana, being able to offer Lombard's production-ready tooling to their users. And actually, we've just been speaking with a large fintech / neobank inside of Solana who issue a credit card product. And this is like a good way for them, this SDK, to be able to provide Bitcoin products that feel native to their users.
One interesting trend is that I think to your point about Lombard looking for yield for Bitcoin, it is becoming a trend that more issuers are actually working with curators in order to run strategies behind, which is all backed by proof of reserves, in which there are basically strategies underlying it, aided by Camino, to help with getting yield on Bitcoin. The next thing that I will talk about is Camino also launched off-chain collateral just at Breakpoint. And in this setup, you can basically have Bitcoin at a qualified custodian. And we would work with the borrower, the custodian, to have a tri-party agreement. Essentially what happens is that that token in qualified custody gets mirrored on Camino. So the borrower can still have their funds and BTC in qualified custody while still being able to access on-chain yields. So I think we're constantly innovating, and there's a lot of interesting things happening on Solana for BTC5.
Awesome. This question is for Chainlink. Coinbase recently selected you guys, CCIP, as the exclusive bridging partner for their CBBTC asset. In your view, how does Chainlink influence the growth of Bitcoin on Solana? And how do you see interoperability protocols like yourself impact institutional adoption?
Yes, thanks for bringing that up. We've partnered with the Base team and also the Coinbase side as well. We have built a bridge from the Base and also Solana networks just to make sure that we provide the institutional-grade interoperability. And at the same time, as you mentioned, Chainlink is the exclusive interoperability provider bridge for the Coinbase assets, including CBBTC and whatnot. I think there's increasing interest in terms of, again, I mentioned institutional grade. When there's an inflow of institutional attention, there's heavy emphasis on security and reliability. And I believe that because, as I think you've already mentioned, Solana is known for high throughput and low transaction costs. So Solana had already been a very active ecosystem throughout. And because of the adoption, and also I believe that because of the swift and nimble approaches that your team actually is making, is gaining more attention from the institutional side. So I would say what Chainlink provides is the level of security guarantee that what Web3 was not actually heavily focusing on, that when you have banks, like you said, like neobanks and traditional banks, asset management companies, and these type of players that come in, they would want these type of guarantees. So Chainlink does provide this level of guarantee for more institutional adoption and more, I would say, attention from the traditional financial sector where the actual money is flowing in.
Awesome. What is one thing that you guys are all shipping in the next 3 months that the audience should be aware of? And I guess the next question is, give us one actionable tip for someone who wants to get involved with Bitcoin on Solana. What would you do?
So on the Lombard side, we actually recently acquired a new Bitcoin wrapper, which is called BTCB. And we acquired that from the Avalanche Foundation. And it was a first of its kind transaction. It has roughly $500 million worth of TVL. And we're bringing that to other chains and launching on Solana soon, which is super exciting. And with this specific wrapper, we're actually packaging like a product which can serve institutions sitting inside of qualified custody setups. So with this new product, essentially, Bitcoin holders will be able to lock Bitcoin via the Bitcoin L1 while retaining title of the Bitcoin. And then on the other side, on Solana, they'll be able to mint BTCB and then borrow stables against that at the LTV they desire on something like Camino again. So I think this is going to be super interesting and like a big unlock, given that there's around $41 billion worth of on-chain loans today, and around $31 or $33 billion worth of off-chain loans, according to the recent Galaxy report. So I think this product in particular kind of addresses both markets. And then regarding the actionable tip for anyone looking to get involved in Solana with Bitcoin, I think you should develop with the Lombard SDK. I think this is going to give users the best experience. It's going to feel like native Bitcoin. And if you're looking to build with the Lombard SDK, we'd love to speak to you.
On the Chainlink side, we have a few ideas that we're deploying in the years to come, and also within this year in a few quarters. Just want to make sure that in order for us to make sure that the Bitcoin asset on Solana and also other chains are not used as a passive asset, but more to increase on the usability and composability. I would say, again, I'm trying to funnel down again into the institutional narrative, is that Chainlink will be, we have already announced that we're going to be deploying the automated compliance engine. We call it the ACE. And again, like as more the blockchain space becomes legitimized, and also we see more legitimate and also institutional players coming in, there's got to be several layers of policies and decisions that needs to be made prior to the actual assets being sent over from one account to another. So the compliance engine that Chainlink is building will be able to manage all the different policies that each country, each regulator, or each of the financial institutions would require in order to make legitimate transactions.
I think we are most excited about two products that we announced at Breakpoint that are really targeted for more institutional audiences. Number one is fixed rates, in which many of the institutional borrowers that are coming on chain really need predictable cost of capital. And so we are piloting that with the largest prime broker in the space, FalconX. The second product that we're really proud of is actually the off-chain collateral that I alluded to before. And for that, we will be piloting with Solana Company, which is the digital asset treasury run by Pantera Capital and Summer Capital as well.
I think for WBTC in 2026, there are two parts. On the general, we will be revisiting how WBTC is mined and burned, and the whole process. And then we're trying to, we got native on Solana like in 2025. And so in 2026, we'll be very focused on allowing native WBTC to cross chains, right? And on Solana, we're trying to work with the CEX and the protocols on Solana to actually expand our market share. Yeah.
Awesome. With that, I'd like to conclude the panel. Thank you, everyone, for your time.
Thank you.
Thank you.
Next, let's welcome David from Blockworks. He's going to talk about Lightspeed, the Solana IR panel portal.
Awesome. Good afternoon, everyone. Hopefully everyone's doing well. 2 months ago at Breakpoint, in collaboration with the Solana Foundation, Blockworks announced Lightspeed, the industry's first investor relations platform built and designed for institutional Solana investors. Today, I will be reintroducing Lightspeed for those of you that missed that announcement. And I also have my own special announcement towards the end of my talk. So why does the industry need Lightspeed as a platform? We think it's important to provide some context on the evolution of the crypto industry. And my clicker will not work. Sorry, guys, give me 1 second. Oh, it all happened at once. All right, so the evolution of the crypto industry. We like to bucket this into 3 distinct phases. One being the bootstrap era. This is hallmarked by the 2017 ICO boom. It was the Wild West of capital formation. As a founder, all you needed was a white paper and a dream to get funded. And as an investor, you largely sprayed and prayed in hoping that you didn't invest in vaporware. By and large, the asset class was uninvestable to institutions. A few years later, we call this the scaling phase, the industry started to mature a little bit. VC capital entered in mass. Critical financial infrastructure, like exchanges and custodians, started to professionalize, and DeFi offered its first glimpse of finding product market fit. This was a step in the right direction, but institutions were still not ready to invest in mass. The infrastructure wasn't ready, neither was the regulatory environment. But as we know, this is largely changing pretty rapidly. Crypto's on the cusp of its institutional era. Major enterprises are launching chains. Stablecoins are being issued by all the major financial institutions out there. Major enterprises are launching chains. All the major financial institutions are thinking about launching stablecoins. Off-chain assets are being issued on-chain to the tune of tens of billions of dollars. And on-chain app revenue, in aggregate, is very meaningful, on the orders of billions of dollars annually. Because of this, the marginal token buyer is largely shifting into institutions. It's no longer retail. It's liquid token funds. It's multi-asset hedge funds. It's family offices, and so on and so forth. They're largely looking to gain exposure into high-quality network assets like Sol, and the on-chain business is built on top. Unfortunately, their adoption is still being hindered today because of fragmented information, incorrect data sets, and material that's largely built to be consumed by crypto natives and not by these institutions. Lightspeed was built directly to bridge this gap. It offers a unified professional environment for rigorous due diligence and capital allocation decisions. Lightspeed pretty much offers anything that an institutional investor can need. It offers 1, high-fidelity on-chain data powered by Blockworks' proprietary data infrastructure. 2, institutional-grade research. And 3, a news and events aggregator so that capital allocators can stay on top of all major announcements and any events that they want to attend, like Solana Accelerate. Let's jump into our data coverage. So not only does Blockworks already have the most comprehensive coverage on Solana, the network, and Sol, the asset, and we will continue to iterate on that coverage, we also have a planned roadmap of over 45 different companies of significance building on the Solana ecosystem that we'll have full end-to-end coverage of. This includes multi-product apps like Jupiter and Camino. This includes the growing list of prop AMMs and traditional AMMs like BisonFi, Humidify, Radium. This also includes category-defining DePIN leaders like GeoNet and Helium, and much more. But it's not just important to have the data, it's also important to be able to contextualize that data so that investors can actually do something with it. To create IC-ready memos, to have coherent narratives that actually traditional investors can grok. This is where our written content comes into play. In addition to having monthly Solana notes dedicated to Sol, the asset, and Solana, the network, we're also going to have, again, institutional-grade research on the many companies of significance I already mentioned. Last but not least, we're also going to have quarterly token holder letters that mimic some of the investor relation material that a lot of these investors already are familiar with in TradFi world. And as a side note, last week, we published our latest quarterly token holder letter in partnership with Helium. I'm biased, I think it's a banger. But in addition to distributing that token holder letter to all the major Blockworks distribution channels, we also distributed that to over 350,000 Bloomberg terminals, not just to maximize awareness, but ultimately to meet these investors where they're at. For investors, Lightspeed should be the information gateway for Solana. For builders in the building in the Solana ecosystem, we want this to be the central investor hub where you communicate to your token holder base. This industry is full of noise, but we're hoping that Lightspeed will be the signal. Now, with that being said, I'm happy to announce that next week, February 17th, US time, Lightspeed will go live. If you are a liquid token fund, institutional capital allocator, asset issuer, family office, you name it, I encourage you to apply at lightspeed.vip/getaccess. Additionally, if you have any questions, feel free to reach out to me at david.rodriguez@blockworks.co, and my Telegram is @capital. Thank you. Have a good day.
Cheryl from Camino. Let's welcome her.
My name is Cheryl. I head strategy here at Camino. Today I wanted to talk about next generation DeFi infrastructure. As many of you might know, Solana is the largest borrowing protocol on Solana. We've originated over $16 billion worth of loans, given out more than 100 million of interest revenue, and to date, there hasn't been any bad debt since inception. This is something that all of us are extremely proud about. Because of our safety record of having no bad debt since inception, many audits, formally verified, fully open source, we work with a lot of the leading, respectable, and leading players in this space. For example, we worked with licensed exchanges like OKX, Bybit, regulated custodians such as Anchorage, prime brokers such as FalconX, and many fintech players such as PayPal. The list really goes on. So what are we here to really talk about today? As many of you know, everything is coming on chain. This means that new assets are coming on chain, and more importantly, there are new borrowers and new players that are coming on chain. Many of these are heavily institutional. Some of these could be regulated funds, some of these could be publicly listed companies. Do they have different needs? We definitely think so. Number one, many of these institutions require fixed rates. Why is that so? A lot of these institutions require predictable cost of capital. This way they can do RWA looping. They might have fixed duration assets or liabilities, and they need to mix that fixed term, fixed duration exposure. Number two, a lot of these regulated entities or publicly listed companies might need to have their assets sitting in qualified custody, as opposed to just plainly sitting on chain. There are many, many things that we need to tackle for institutions to come online, and Camino is really starting to do that with a lot of our new products. We think the old world of DeFi was only for prior crypto-native assets, prior crypto-native players. Therefore, we are coming up with all of these new solutions. Let's start with fixed rates. For fixed rates, traditionally, most DeFi lending on-chain is really variable rates. What that means is that the borrowers and the lenders are usually takers. All of these rates are determined by the utilization curve, in which the moment you have large-scale deployments, whether it's on the supply or demand side, this usually leads to a huge spike in rates. It's super volatile, it's unpredictable. Most institutions do not like this. Because of this, we are coming up with fixed rates wherein borrowers and lenders can submit intents. They basically say, okay, this is the rate that I want to get. It is a duration for, say, 3 months, and I would be borrowing, say, USDC. My collateral would pretty much be the same. So we are piloting this with FalconX, one of the largest prime brokers in the space. We think this is really important because right now, borrowers and lenders are no longer just takers. Instead, there is better price discovery for all of the participants across the chain, and you can essentially have a yield curve on chain. The second product that I really wanted to talk about was the off-chain collateral that I alluded to before. We are piloting this with a publicly listed company, which is one of the digital asset treasury companies, the Solana company, which is the DAT managed by Pantera and Summit Capital. In this construct, the borrower, i.e. Solana company, would deposit their funds in our partner Anchorage, a qualified custodian. We work with Chainlink to build this, in which there would essentially be an API for us to see how much collateral is locked in that smart collateral management system, for us to mint a mirror token that then the borrower can use to deposit on Camino as collateral, borrow stables, increase capital efficiency, and access on-chain yields. In this way, while having funds in qualified custody, they can still get access to on-chain yields and on-chain liquidity. Just wanted to give a little bit more information because many institutions have been asking about this. We are piloting the launch with a USDC loan at a 3-month duration. Interested parties can feel free to reach out. it would be at a 70% liquidation LTV. All of the capital would really sit in Anchorage, and we would be having a tri-party agreement. Happy to chat about this a lot more. I know my time is up, but excited to talk about fixed rates and off-chain collateral. Looking forward to more to come. Thank you.
Thank you, Cheryl, for their sharing. And next, let's talk about the next generation of global payments, moderated by Tracy. Welcome, Tracy, and the speakers. Welcome.
Do I just? Oh. Hi. Good afternoon, everyone. Yeah, welcome for the next generation of global payment happening on Solana panel. So I'll be the moderator today. I'm Tracy from Drift, and I'll let everyone just introduce yourself here.
Hi, everyone. My name is Kevin. I'm one of the co-founders here at Reap. We are a global financial payments infrastructure company powered by stablecoins, operating out of Hong Kong, Singapore, and providing services to the world.
So hello, everyone. I'm Duke from Solana Labs, and I'm technical research and core contributor for Solana Labs. We are building hardware accelerating the chain and also providing like the main infrastructure for like the retails and payment, everything. So love to share about our experience. Yeah, so thank you.
Yeah, I'm Chloe from United Labs. We are the yield as services layer, providing our yields and to our institutional clients and also on-chain protocol clients. So yeah, always providing the yields.
Hi, everyone. I'm Sheena from Perena, and Perena puts your stable coins at work. We have our flagship product, USD Star, that generates 9 to 15% of yield annually. So we have a basket of different strategies. We make sure that we diversify risk for you so you can generate stable yield and passive income with USD Star.
Hi, everyone. My name is Tayo Vyosu. I'm the founder of Paga. We are a payments infrastructure business in Nigeria and serving the broader African market. We've cut our teeth on the fiat side of things, where we offer our infrastructure to other companies to build on top of, and now leaning in strongly on stable coins and to offer on-ramp, off-ramps, and payments orchestration. Happy to be here.
Hi, my name is Jessica. I'm an APAC CEO for Huma Finance. We're the largest payment financing network to power stablecoin in the real-life use cases. And we power cross-border payment, trade finance, and merchant settlement. For the past 4.5 years, we already power $10 billion of stablecoin transaction payment, and happy to be here.
Yep, thank you, everyone. So I have a question for everyone to start off with. So in one sentence, what's the biggest way Solana is redefining global payments right now in 2026?
I would say it's an extension of existing financial services and capabilities. For us as an infrastructure provider, we're taking things that we see here in financial hubs of the world and providing it to the rest of the world.
Okay.
Yeah, so definitely like this year, like the immersing like the year between like the TradFi and DeFi and also crypto and real world asset. So definitely like it is like I believe the new era is already started. And so definitely like many like the player, they hope to using like the crypto and blockchain infrastructure, but also the TradFi people, they have no idea like what's going on this technology. But also crypto people, they have no idea about more TradFi and more advanced like the financial term. So we also try to like supporting more bridge as like the infrastructure provider.
Yeah, I totally agree with that. So I think Solana is moving the payment systems from the cost center onto the financial rails. So where the money can flow instantly. settle globally, and also have it also itself productively by default. So that's kind of really a great movements for us, really innovative things happens on the payment systems.
I think Solana really makes micro payment possible with how fast and how cheap the chain is performing and how effective we're seeing the different assets being able to be more composable between each other, and the fact that we have amazing teams working on neobanks, on stablecoin, and we're able to integrate each other fast and effectively through Solana's chain. I think that's really the breaking point of Solana as compared to the other chains.
Don't think I have much to add to what everybody has said. But I totally agree. But look, I think for me, the big thing is really about, especially since I'm coming from the fiat side of the world, right, is that now we can really democratize access to finance, right? And that's like what's super exciting to think about. And you know, I was saying to someone earlier that my Nigeria bank account details don't work here in Hong Kong, right? I can't use my payment details, but we can now offer full-on banking services, leveraging stable coins, right? And bringing that on-chain, and that's really exciting to do.
For our use cases, because we're generally interested in the stablecoin downstream use cases, last year we grew 3.4 times. It's not possible without the actual use cases that stablecoin is able to perform on Solana with what Solana has been offered to the entire ecosystem. I just conclude here.
Yeah, right. Yeah, on that note, yeah, so Jessica, we saw that Huma just crossed 10 billion in PayFi volume, so that's a huge milestone. Congratulations. So yeah, let's round of applause. Yeah, so how is that real-world payment flow turning into sustainable yield for you guys?
Yeah, I think for us, when we generate yield for our DeFi users, we are looking at an uncorrelated return to how the crypto world is currently performing. And in the world where payment alone, stablecoin payment alone in Asia is 350 billion as of 2025. That's only 0.02% of the overall stablecoin usage in Asia across the trading venue. So it's still in the baby stage. And we are riding the wave, and we are betting on this is going to proliferate on Solana and across the entire ecosystem. So we're able to actually power the remittance company, the payment service company, the trade finance platform, the supply chain platform, and the merchant that actually can daily be able to use stablecoin in their daily life. I think that's the vision we have, and it's perfectly aligned with, I think, what Solana is power, everyone on the chain to do. Yeah.
You mentioned Asia, so is most of your clients in Asia, would you say, the flow?
I think we have a right balance of client globally, and we generally follow the trend of stablecoin adoption. For example, the trade finance flow are probably most popular across Asia and Latin America, Europe and Africa. We are not generating those trends. We follow where the stablecoin adoption is, and we actually do see that growing magnificently and riding on the wave to growth 3.4 times last year.
Okay. Yeah, Teo, so from your perspective in emerging markets, what's the #1 barrier that is still holding back stablecoin payments adoption today?
Yeah, I mean, look, there's a number of things on the regulatory side. Regulators are trying to understand, learn, and fashion out, but they're actually making progress towards it, albeit a bit slow in some cases. But beyond that, I think people are now waiting for regulators, right? So now, at least in Nigeria, there's now some openness to digital assets, et cetera. And foreign companies can offer services in ways that are regulatory compliant, right? And so I think that's one of the things we're leaning in on, is that we have to make sure we're always compliant with the regulators, and that we're doing things that they would actually like, which is bringing dollars into the market, right? But stablecoins has a huge opportunity to integrate and make it easy for cross-border flows. But the end customer today doesn't really know about stablecoins, right? And I don't think they care, actually. That's my hot take. But they care about the service and the capabilities that it can actually give. So we just need to deliver that. And we're going to see a series of companies do that. I think it's the next phase of money movement. So I think you'll see that from all the payment companies starting to build that out. So I'm looking forward to when we can say, last year we did $11 billion of transactions on the fiat side. I'm looking forward to when I can say, we did 10 billion in stablecoin volumes, right? Which I think will happen faster than how long it took us to get to 11 billion on the fiat side.
All right. Yes, Sheena, so how does Perena's USD model make yield practical for everyday global user beyond DeFi?
Yeah, that's a very good question. I think when we think about DeFi, we think about how do we maximize value, increment value, and we think about like 20%, 50% of yield generation from all kinds of strategies, but without a good due diligence of where the strategy is coming from, whether they're safe and secure. And when we talk to a lot of real serious DeFi users, they are actually very risk averse, right? Like, okay, I need to know where your yield is coming from. I need to know who are you working with, yada, yada. So what USD Star is really providing is we do the due diligence. We make sure that all the strategies where we're curating are market neutral as much as possible. We diversify them to different baskets so that in total, the aggregation of the yield you're getting here from 10 to 15% is something that's really safe. It's really, really easy for you to manage. All you need to do is just to mint us, and you're having access to all the different kind of yields. And we're talking about payment here, is that we're also making payment more efficient. A lot of the opportunity costs we're seeing here in payment is that once you transfer the money, you're losing like the 3 to 5% from the payment issuers to the payment issuers or the payment process. What we're doing here is with that extra yield, you're actually saving up or you're actually redeeming more through paying if you put your idle stablecoin with a yield-generating engine like us.
Yeah. Okay. Just curious, what's the yield right now for your stablecoin?
Let me check. It's like 9.9 something.
Wow, in this market.
Yeah, it's performing pretty well in the market. The highest we've been was like, there was this time that our strategy performed so well, it showed up to 25%, and we're so shocked. And we're like, oh shit, this is too high. But usually we do around like 9 to 15%. The longest we had was like 12, 13%. But nothing less than 8%.
Okay. Yeah. So Chloe. So for Unitas, you guys focus on yield-bearing stable assets around chains, across chains. So how does that enable seamless global flows?
Yeah, I think it's the first I want to mention that I think payments not only care about the cost and also the timing for the efficiency, but also care about the capital efficiency. So a lot of money, and right now, is if you're doing the business, like if you're doing the cross-border transactions, a lot of money just staying with the adults, and then also that's a lot of money just staying with the crucial accounts or just staying with the bank balance on the yields. So it definitely help for those companies as a business to earn the cross-border yields, and also providing institutional clients to expanding their portfolios balance for the real business investment and also crypto balance, the investment as well. So yes, I believe I'll share the big point. So we're gonna launch our first legal fund in Hong Kong this year, and it was the financial the companies and then issuing using our the yields and the strategies as the underlyings, the source of the yield, to providing the fund can sell into more PIs and also more broker dealers that care about the digital assets exposures and care about how the cryptos works.
Yeah. All right. Duke, so many projects are doing payment products these days. So for Sol Layer, is the card the end product for you guys, or is it just a distribution layer for something deeper in the Solana ecosystem?
Oh, I really like this question. So, yeah. So the reason why, also we have the crypto card service, the Sol Layer Pay, but we believe it is not our product. It is one of our interface, because we are building the main infrastructure for the institution and also dev for the hardware accelerated the chain, the Infinity SVM. But we realized everybody think about more like the user experience and also reward and more attractive like the function for the retail user. But I think we realize everybody they easily want to use like their crypto asset for real world. They really care about like the user experience. So because though our loyalty user, they don't care about the reward itself. They really care about their problem. So that's why we realized definitely we need like the crypto payment service for our end user because they are thinking about also like the capital productive. So they want to use their like the crypto everywhere, but definitely we need like the interface. So that's why we launched our crypto card as a service. But I think also the RIF is here to create like the card provider for crypto card industry. But we realize still like we rely on the many like the Visa Master infrastructure. It is also really good because they already dominant like the payment industry. But I believe like some days we can also make more better version for payment. So I don't want to make die for the Master and Visa, but definitely we can find a better version because now there are lots of the problem like the payment settlement is like the T+1, and there are lots of the problem for like the merchant side. So that's why also we try to figure out how we can solve this problem directly. So that's why we are building more high performance chain. So we realize the latency is like the key, like the hurdle for this kind of the payment. So that's why nowadays the global like the financial like the transaction, they rely on like the T+1 too, but it is because of the latency and also network the problem. So that's why we are building, still also there are lots of the problem like the current blockchain industry because some chain is hard and this is really critical for financial like the connectivity. So that's why we want to make more better infrastructure and interface. So this is like our vision of the crypto world.
Okay. How many users do you guys have now for the card?
So we have 100K plus user over the world. And also we have many users from Nigeria. Yeah, very, yes. So yeah, also I travel like to Nigeria and I realized, I'm super surprised, also 70 years old grandmother used the DeFi. So she asked about like how she can use like our crypto card service. I'm super surprised about that. Yeah. But the dominant of our user base is based in America and also in Japan and Singapore and also Nigeria and also Latin America. So this is like what's going on nowadays.
Just curious, do you guys do KYC?
Yes, we do.
And Americans can use?
Yes, but it depends on like the state.
Okay.
So not everyone from America, but some states we allowed. So we also try to follow like the high level compliance. So this is like the most also important for us. Yeah.
Okay. Yep. So Kevin, so how has RIP been solving the treasury on spending pain for businesses? And what's an early win for you guys on Solana?
So I think the way that we've been thinking about it is that the finance capabilities is not just flows alone or store alone. It's about how do we bring these two things together and programmably make sure that we're accurately moving funds to the right places or putting it into yield-bearing assets. For businesses specifically, they want to automate and have their systems talk to each other. I think part of being part of the blockchain technology is leveraging the programmability of it and allowing us to be able to smartly route certain transactions, certain payment methods. So it's not just limited to what the treasury does or what the card does or what the payment rails do. It's about bringing it all together and being able to essentially keep that in one centralized system. And we're seeing a lot of adoption, especially from mainstream use cases on treasury, corporate finance, that's moving over from traditional systems, which are typically a lot slower and harder to reconcile with each other. And working with a partner like Solana has been tremendously helpful on that because of all the other value-added services that come with the ecosystem and the ability to build with other partners, such as the folks on the panel here today, and create that business solution around treasury, around cards, and payments.
Okay. Yep. Thank you, everyone. So now I have a question for everyone. So it's an open question. So what do you guys think is like the major hurdle for Solana that we have to solve in the next 12 months? Any takers? or like one thing that your project is doing to like solve the payment issues that we have in Solana currently?
Yeah, I can go first. So I believe the network effect of the payment is the most of the key things, because I want to pay this like the asset to someone through this infrastructure, but everybody should use same infrastructure, same asset. So for example, so nowadays the Visa and Master is dominant over the world, so that's why everybody accept. But if I just go some other country, they don't accept those kind of infrastructure. So that's why I think the crypto is like accepted like everywhere for every country, but still it is like the minor like the infrastructure for like every user. So that's why we should, I believe, we should increasing more user, and also the regulation and tax and compliance is the most important keys. So some crypto player, they mentioned, let's just do everything decentralized and just like ignore like the compliance, but I think that is the most dangerous things, because the financial, we should build the trust for everyone. So that's why I think the compliance and also network event like the most key for, and also it's a big hurdle for us. Yeah.
As probably the newest person to the stablecoin space on this stage, for me, when I look at it, I think the interoperability still needs to be solved, right? And be obfuscated to the user. And I think actually when we do that, it's going to help all chains, right? Because as the user, I care for certain things. I care for speed, I care for reliability, I care for liquidity, etc. But you know, if you're on a different chain, I want to also be able to. And so you mentioned Visa, MasterCard, right? It's the same way. Like now they actually did cooperate to be able to, for people to be able to accept both things, right? So I think we need to figure that out. It's something that's been in the back of my mind, like, yeah, as a question.
I guess in that vein, I think what I think we should all work towards is kind of this level of standard, such that interoperability can actually happen.
Yeah.
So in traditional payments and the payments that we do here today, there's a lot of communication back and forth about what is needed around KYC, what is needed around compliance, identity, around the payment information itself that we're sending through various different networks, including Visa and MasterCard. If we can find a way to find some kind of universal standard or a way to communicate with each other that translates well between chains, networks, banking rails, as well as other financial services, I think that would be able to allow us to build a lot faster across multiple different geographies and multiple different ecosystems.
I agree. I agree.
I would call adoption. I think interoperability is extremely important. But if you think about the overall adoption of the assets on-chain, I think firstly it's attracted by the volatility of it. And when the crypto assets are start to lack in the volatility, there are new volatility included across the commodity space or equity space. But volatility is only the start of getting people to interested in the space. It's not the end. The end is that how people can involve their everyday use cases into this case. Like echo with what you mentioned, user doesn't care whether they're using stablecoin or using fiat. They want it to be safer, cheaper, and reliable. So I think adoption in assets turning cycle is extremely important. What we actually observe is that I think stablecoin coming to space generally stay in the space because of the friction of on-off ramp. And the stablecoin stay in the space need to find place to generate yield, to generate daily use cases. That's where I think infrastructure player on the stage is extremely important with carrying you, and that actually helping people with adoption.
I want to piggyback on that point, what Jess said about helping people adoption. I think trust, the element of trust is very important, and people need to trust Solana for Solana to scale to the consumers, to really the retailers, and to convince a lot of the institutions, be it banks or be it payment infrastructures, to really adopt and accept Solana. What I'm hearing a lot in the space, and I love to be proven wrong, and I think I'm very, very new to the space too, is that people associate trading, speculation with Solana a lot, because we have this huge meme coin boom, which is great. But at the same time, it leaves the impression like, oh, Solana is just a space for traders, not really for the serious people. But the panelists here is trying to prove everyone wrong. Like, Solana is the place for payments. Solana should be the place for institutions too. Solana should be the place where neobanks to be built on, payment rails to be built on. I think the Lindy effect really has to kick in for the next year. And I do see that Solana is institutionalizing. A lot of the super team from different countries are putting in the effort to introduce more institutions and onboard more institutions. So I'm really, really bullish on that point. I think time will solve this, but at the same time, I think builders like us, we need to also be more convincing to let the world understand that Solana can be trusted.
So would you say that Solana is better than other chains in terms of payments?
Well, I'm at Solana Accelerate. I can't say no. But so far, Solana has been performing really, really well. And I think Solana will continue to outperform. We have so many different builders, not just building Solana, but building on Solana, and we'll always give feedback on how to improve Solana together. So yeah, I still believe that Solana will be one of the best chains.
Definitely, yeah. Just sometimes it's gonna do up, but yeah, just a little bit as well for a lot of the sharings, and I totally agree for a lot of the options. And so it's super important for onboarding outside of the users, outside of the capitals, inside of on DeFi's. So I mean, that's the sense like 2020 DeFi summers, and I'm saying like there's really huge walls between like DeFi's outside of DeFi's. And everyone's outside of DeFi not knowing anything about DeFi. So what's the decentralized finance? Like kind of that's the like we keep building wallets, we're building chains, and we're building a lot of the infras upon that for letting other people knowing what happens inside. So I mean that's I think Solana right now is doing the great things. It's like they're letting educate more outsiders knowing. So what's the really on blockchains means to payments? What's the all of infras matters? So yeah, I think so. We definitely looking forward to how the Solana going to be building more.
Yep. Yeah, I think that's the end of the session. Thank you, everyone. Yeah.
Yeah.
Thank you.
Thank you. Thank you.
All right, so this year, what are people talking most is about AI and how AI is going to cooperate with blockchain. That's the next topic we're going to discuss here. So how we can use blockchain as an infrastructure for AI. Let's welcome our speakers, and this panel will be moderated by Mabel. Welcome.
All right. So I guess like people are probably very tired, so I'm gonna make this like super interesting. I'll try to, since these people are like all doing some form of AI related stuff. I guess first question, let's kick it off. Like, what do you do? Well, a bit of introduction and what do you do? And just like brief introduction about the company.
Okay. Hi everyone, my name's Chris. I run a company called Dona AI, and Dona started out building crypto browsers for agents. So we allowed agents to interact directly with on-chain protocols, DeFi, do staking, such and so forth, with their own browsers. And then later on, we kind of expanded our product offerings to allow for mostly trading purposes, directly within your, for example, your OpenClaw bots, or any other bots that you're using. So building an agentic trading framework or a layer underneath that. There's a lot of other things that we do, but mostly serving that purpose. So we want everybody to have their own agent quant fund that you can use multi-agent frameworks to build.
Andrea?
I'm Andrea. I'm the CEO and co-founder of MagicBlock. MagicBlock is a real-time engine for Solana applications. What we do is we enable Solana developers to get real-time transactions and private transaction without moving away from Solana. The typical use case would be gaming or trading application, consumer applications, and more recently, private payments and AI inference.
Hello, my name is Yuan Gao. I'm the co-founder of Gradient Network. So basically, we are a distributed AI infra research lab and also a product company. Right now, we are focusing on two products. The first one is a reinforcement learning platform. Basically, we want to simplify the whole post-training process. Researchers, enterprise, they can post-train their model with a simple API access. So you don't need to worry about spinning up the whole training stack yourself. And secondly, we are building a marketplace for model access. So basically, one API for all the open source, closed source models, whatever you want to use, simple access. Yeah, that's what we do.
Hello, everyone. Wiki here, co-founder at Virtuals. We build infrastructure to bring revenue and funding to AI agents and the teams.
Oh, wow, that's very brief. Let's actually go in to talk about some of the challenges that you guys have met in the past last year. Because we all know like LM actually went up quite a bit last year for the whole year. Since 2023, like you guys probably seen like some videos about like Will Smith eating spaghetti like in 2023, and then now it's like much better. So I'm actually curious, like what's the biggest challenge for you guys in the past 1 year growing the company and finding the real PMF?
Right. So there's a lot. I'll narrow down to, I guess, 3 major ones. The first one's actually organizational more than anything else. How do we adjust as a whole team to actually fit our workflow to the AI era? We are producing much more content, much more Git repos. How do we actually allow that context to be read by the AI? So that's actually number one. The second, aside from organizational, is actually business model challenges. Now, a lot of what we do are different from, for example, last year when we're building an application. A lot of the interactions happen directly within GPT, within Claude, and within Qwen, for example. So we're almost like one layer underneath the surface application. So how does our business model change in that case? For example, Databricks, Cloudflare, making a lot of money because the AI can just call their endpoints. So we have to kind of adapt to that by building our more so like developer tooling, right? And then the third, which is also very challenging, is how do we interact with the chain and decrease latency when it's like trading scenario related. So we want the interaction between the bot or the AI and Solana to be extremely fast. So there's a lot of optimization there without going into too much details.
So for us, I think the most challenging aspect this year has been balancing out the different features that our applications need. Because we are so horizontal across different category of apps, everyone needs their own features, and we have to be able to prioritize correctly while at the same time serving our customers. And we have a team of 16 people, 13 of which are engineers. I'm incredibly proud of my team, and in terms of sheer number of features that we shipped this year, I think we did a great job. But at the same time, when you have a private AI inference app that wants to go to market and you need to support them with our TE technology versus trading protocol that instead leads to focus on custom sequencing or first come, first serve ordering. These are very different use cases, and so you need to be able to prioritize correctly while at the same time keeping a certain uptime and a certain reliability in the infrastructure. So these kind of trade-off between number of features that we needed to ship versus reliability has been probably the biggest trade-off that we had to deal with this year. But again, I'm super proud of the sheer number of features that we were able to serve. And ultimately, everybody seems to be happy right now, so that's good.
So yeah, I think it's a very fast-paced, very quickly evolved space. So you see new release model every month. The agentic framework is improving. Sandboxes, OpenClaw is occupying your whole timeline. So basically, it's very hard to keep focused. So for us, we always discuss internally. We need to have very strong conviction and stick to our thesis. So basically, we have 2 main theses, right? So first, we believe in the future it's going to be a multi-model universe. There's not going to be one model dominate all. So on any kind of workload, there will be some domain-specific model taking the efficient frontier. So that's one thing. And secondly, we think the token consumption, the AI consumption, will be the single biggest commodity market going forward, right? If not commodity, but something like a semi-commodity market going forward. So that's the main two theses we are focusing on, like model creation and also model access. So in terms of tactics, there's no PMF at the very beginning. You need to iterate very fast. The team need to be integrated into this whole like AI workflow, as mentioned before. So yeah, just iterate very quickly. So that's my view. Yeah.
Yeah, I mean, we are basically like the Amazon and Wall Street for AI agents. Like that's what we're trying to do, which is, agents can sell stuff to each other on Amazon, and they can maybe raise money on Wall Street, right? The problem for us, obviously, is that there's no agents. There was no good agents, to be honest, in the past year. It's crazy how the tech has stalled for so long, and maybe in the last 2 weeks, something has come up. So it's very exciting for us, and yeah, we'll see.
Yeah, why don't we just like kind of double click on this and talk about, I think both for Chris and for you, but you can go first. Some of the use cases and actually the agent cases on virtuals. Probably you guys have the biggest market cap.
Yeah, so for the past 12 months, collectively the agents have generated roughly $1 million of revenue for themselves. Main services, it's all focusing on trading. So swapping tokens from Base to Solana, for example, perp trading, yield farming, etc., etc. But I think it's not enough. With OpenClaw introduction, we are excited to see that going into, let's say, exactly what you say about Quen, right? Like, imagine I could then get my Jarvis or my OpenClaw to book an Uber for me, right? That would be an Amazon equivalent service that's on our marketplace. But yeah.
For us, I think there are two distinct routes that we're still picking between. Very hard to make up my mind right now. One route is that we build an agent trading hedge fund, where you can imagine the flow of a hedge fund where there's discovery, there's alpha finding, there's management, there's incentives, doing that with multi-agent frameworks. For example, we're doing 2 experiments right now, one on prediction markets and the other directly on chain, to find arbitrage opportunities. But instead of me hiring 50 analysts to do that, I have 50 agents that are simultaneously going through that. So we think these type of new hedge funds will occur. Actually, one of the YC calls for startups this year. And we think that will occur for one other reason, which is in the last 2 weeks or so, XAI, OpenAI have all put out hirings for finance PhDs to label data, MEV data, DeFi data as well. So we think the chain itself will be the perfect place for that type of financial activity to happen. And the model, Grok specifically, will get so good at financial data that it will find alpha and design strategies. So the second route is all of the things around that. Once the model itself improves, you would have audit capabilities, trust layer, control panel. OpenClaw, for example, has a terrible UI where you have no idea what the memory is, what the skills are, and what the bot is doing right now. So for financial activities, that's even more important. I have to know exactly what my portfolio looks like whenever I want to, and what the opportunities running at the current moment is. So these 2 routes we're exploring at the same time, and hopefully they play into each other.
For Andrea, for real-time apps, usually you have to trade off composability or decentralization, like basically what you said earlier. So what kind of optimization you've been doing for that?
Yeah, so our system works with native Solana instruction that essentially allow developers to opt in real-time transaction while staying on Solana. For AI specifically is relevant in a few ways. There are apps that can implement this flow where you're essentially calling an LLM and then you listen to the callback and then you feed through CPI into another smart contract. So you can create this more sophisticated flow, which basically resembles the flow of an oracle. You get the response and then you do something else. You update an account or you trigger a swap, you do something with an app that is technically still fully on chain and therefore fully verifiable. So that's one of the things that we can enable. More generally speaking, MagicBlock is designed to enable any application that really require high throughput and low latency on par with Web2 infrastructure. So the kind of apps that are using this flow are very, very broad.
And Yuan, you were mentioning that you guys are aggregating all the models, LLMs. Maybe can you talk about your supply and demand side?
Yeah, so basically, on the supply side, so there's a bunch of data center compute aggregator out there. So we don't want to do that again because there's plenty of choice if you want to do it. So basically what we do is we want to build an orchestration layer on top. So we can eliminate all the complexity of building up like a training or inference stack, right? But basically, you can use an API to quickly spin up your service without any kind of technical difficulties. So basically, in one sentence, what we do is we want to render a compute into very elastic services. So that's on the supply side. On demand side, basically, we are serving a bunch of research institutes, startups, and individual developers, because I think AI are actually empowering those groups, right? Like a very small team has strong agency to create things. So what we want to do is we want to grow with this cohort.
Cool.
Yeah.
Let's go into the last question. What's the most exciting upcoming feature or ship for you guys?
Right. So we're launching a product called Dona Zero. It's a self-hosted OpenClaw-like bot just for trading. It takes into account everything that we just talked about, the low latency for trading, the CLIs on the bottom layer, the interaction with Solana so you can have full visibility of your portfolio balances strategy, and a control panel that allows you to see all of those interactions. So instead of asking your bot to design a strategy and then just losing that strategy forever, we have basically an exchange built just for these agents so we can see that interaction and veto them if necessary. And that's going to come out just on Friday, and we'll have internal betas for that in the next couple months.
For MagicBlock, we're working on a bunch of different things, but the most exciting one is probably a set of APIs for private payments, which are very relevant for agents. I think the next step after all the attention that OpenClaw got is for normal people, for my brother, my mother, to simply one-click install something on their devices, whether it's an app or some other form factor we'll have to see. And then from there, just being able to purchase a white T-shirt with certain parameters, size M, give me the top 5, brand that I usually buy, and then go ahead and just ship it to my house or book a hotel for this period of time. And that connectivity to happen needs, I think, stablecoin, privacy, really high throughput. So that last part, or the connectivity to the merchant, from the agent to the merchant through a private stablecoin rail, I think it's where a lot of opportunities will emerge.
So for Gradient, the most exciting thing for me is we're launching our post-training platform in early April. Actually, tonight we'll be releasing a technical report to highlight some of the features of the platform. So one of the main features is that to render the same service to train post-train a model with the same spec, our cost is 20% of what is available in Web2 space. Some of the new AI clouds and also something like Tinker. So if you are interested, you can sign up on our website. We have an early waitlist open.
Yeah, for us, we just launched today. We are giving free money to Jarvises, and so if you sell something on our marketplace, the more revenue you generate on our marketplace, the more free money we'll give it to you. Obviously, the money comes from our trading taxes. That it's sort of our bread and butter cash flow. yeah, it's free money. So let's come.
Cool. Yeah. Thank you very much, guys. Have a good one.
Thank you.
Thank you.
Thank you, everyone. Wish you enjoyed this AI panel. And I'm very delighted to welcome the last year product lightning talk of today. Let's welcome Chris from Titan to give a talk about how Titan is advancing the spot trading.
Yeah. So hey everybody, thanks for having me here. It's always a pleasure being back in Hong Kong. So, Titan's well known as being the place where traders go if they want the best prices every single time through full connectivity to the entire liquidity network, as well as offering some of the most advanced routing engines out there today. Now, it's important to realize that Titan has only been live for around 4 months so far. Our North Star, our reason to exist is really to provide users that extra trading edge that they deserve. So we've saved users over $10.5 million so far over 4 months from a combination of trading fees as well as outperformance versus other platforms. With over $11 billion in volume, 120,000 plus unique traders, and 100 plus API integrations and partners using us, the future is bright as we will continue to keep bringing more of the features that you expect from an equity brokerage on chain, along with more features that are only possible on Solana. Now, one of these features that is only possible on Solana is really that composability between primary markets and secondary markets. The main job of an aggregator is to connect every single piece of liquidity together to find you the best prices. That's why Titan has really spearheaded the development of indirectly integrating direct mint and redeem integrations into the routing platform there. We've been working with top projects such as Henri, Reflect, and Hilo to really enable this. But why is this important, right? So a lot of these projects have some of the most interesting products out there right now, from structured products to RWAs, which are really prevalent in this type of market stage right now. But the issue with these type of assets is that they're very thinly traded on the secondary market. For example, if I want to trade GTO-SOL to XSOL, there only exists around $40,000 in secondary market liquidity today. But what if I want to trade $100,000, $200,000, right? You would take a big haircut. You could, of course, directly mint on Hilo, but you wouldn't get the ideal price. And that's why we've taken the time and effort to directly integrate it into the routing engine itself, so we can find that optimal split between the secondary market and primary markets to get you the best prices. That's why Titan is trusted by top traders as well as the top borrow-lend protocols to really power their trading on that side. And this is really what makes us the gateway to internet capital markets. Now, not only do you need full connectivity, but traders need that full order suite in order to properly manage their portfolio. We took a first stab at this with launching our limit order product in mid-January, where searchers, professional market makers like Oros, fill users' orders directly on that side. It's been a great success so far with us reducing costs for users dramatically, as well as being able to fill limit orders far more efficiently on-chain than ever before. We've seen hundreds of examples where Titan limit orders fill hundreds to thousands, literally thousands of blocks faster than existing alternatives on-chain right now. We've just recently launched Sol USDC pairs with more trading pairs to come on this side. We'll also be launching private swaps for users. We're in the final stages of testing, and this should be released very soon. This will give traders the option to execute private trade transactions if they so wish, all with those strong inbuilt compliance rails that are really necessary to maintain the integrity of the network on that side. We're partnering with Vanish to offer this product because we think they're a great team. They won #1 in Coliseum, and they're backed by both Coliseum and Solana Ventures on that side. Now, what order type out there right now is severely underrepresented in on-chain trading? It's DCA. And there is a reason why there is very low adoption in DeFi for DCA right now as compared to every other market out there. The reason is when you place an on-chain DCA, all your information is available immediately on-chain for everybody to see. That information leakage really leads to your trade being taken advantage of, no matter what trade size it is, $10, $1 million, $10 million. It doesn't really matter because people can take advantage of that. We'll be launching Titan's DCA product very, very soon, within the next month or two on that side. All your order information will be held private, with timings really randomized to reduce that information leakage. So, we really try and stop this information being taken advantage of. And this will allow both you traders as well as companies to properly manage their portfolios and treasuries. It will also be available for all trading pairs on there. The other product that we'll also be offering very soon are Titan trigger orders. Now, there's a common misconception between trigger orders and limit orders. A trigger order will try and execute an order when a trigger is reached, usually a price on that side, but it's no guarantee of execution unless it is a market order on that side. It has its own place in the stack with stop losses, take profit, trailing stop losses, all being examples of trigger orders on that side. We'll be launching trigger orders very soon as well with a couple order types. We'll be adding more and more as we go along, but it'll also be available for all trading types as well as on the API very soon too. Now, our objective is to really provide that full suite of trading tools available for all traders in order to really maximize their portfolio and trading strategies on here. Basically, we want to bring on-chain brokerage to everybody, and we'll also be developing a couple more new liquidity primitives in 2026 to further increase the prices, to provide better prices for all users on that side. The greatest feedback that we hear from our users is that we actively try and find them the best prices, and we do provide those best prices for them, and we'll continue to do this as we keep going forwards. Thank you.
All right, let's welcome the last panel of the day. It's the consumer app and creator economy on Solana. It's going to be moderated by Sunny from PA News, joined by Selena from Zhihu, Aaron from Pudgy Penguins, Vesper from America.Fun, Gary from Moonbird, and Kiko from Chomp. Let's welcome.
So, hello everyone, this is Sunny, CEO of PA News. So I'm so happy to be here and then to have all speakers and then to talk about consumer application and apps. So maybe we can just start with the intro. So briefly introduce yourself and your company and projects, yeah?
I can start. Hi, everyone. My name is Kiko, or you might know me as KZ. I've been a builder on Solana since May of 21. I was the MC this morning. But I'm here now as the CEO of Chomp. Chomp is there's a consumer front end. It has a prediction market element, but really is a gamified entertainment social product where for every single piece of content, you get to share what you think and what you think everyone else thinks. And then we give you a closer to reality version of the answer. And someone wins some money, or not. But then on a longer term, we're actually building a belief graph that captures real-time sentiment and opinions about what people really think for reinforcement learning purposes so that your agents actually understands you. So that's me.
Yeah, my name is Gary. I'm old and
co-founder of Orange Cap Games. So what we are is a vertically integrated collectibles company. So we design, manufacture, and distribute and make basically IP come to life. So most recently, we started out as actually manufacturing the Pudgy Penguins kind of trading card game. That became quite a hit for everyone involved. We used the cash from that business in 2025 to acquire the Moonbirds project. So this was, for those that remember, have PTSD over in 2022, Kevin Rose started this NFT project. We acquired it, kind of wanted to revive the community from a lot of the learnings actually from Pudgy Penguins. And yeah, basically we're on the march to kind of, again, like live by our motto and bring IP to life.
Hi, I'm Vesper from America.Fun. America.Fun is a USD1 launchpad on Solana. Yeah, it's kind of very, very similar to any of your other launchpads, but instead of tokens being paired to Sol, they're paired against USD1, which makes them a little bit more stable.
Yeah, I'm Aaron. I run a parallel team to the US team in APAC. So essentially, our team is leaner, but we do a lot of cool stuff in APAC, right? From retail to partnership to community building to marketing to also all the Web3 partnership side. Pudgy started as like an NFT project, but I think right now we are probably considered by many as like a global IP brand. And yeah, looking forward to really build cool stuff in APAC, together with partners like Gary from Orange Cap.
Hi everyone, Selena. I'm from Zhihu. I'm the CMO of Zhihu. In short, Zhihu is more like China's Reddit. So actually, we just celebrated our 5th year anniversary. So compared to the peers, kind of old. But actually, Zhihu is a knowledge sharing platform. So we have all kinds of media, like Q&A, long-form articles, live broadcasting, and all kinds of new media thing. We are still trying a lot of things for our creators, and we also call it the maker and builders. So one thing I need to mention is there's a lot of AI creators on our platform. So we have many audiences who is very has a lot of enthusiasm on AI and Web3. So we like to cooperate with all our peers who is also interested in AI as well. Thank you.
Okay.
I just want to say, Zhihu was one of the inspirations for my product, so I'm like so honored to be sharing the stage with you.
So honored.
Yeah. So I still use Zhihu every day since
thanks
discovering
so
it 15 years ago. So.
Okay. So based on your product experiences, so what are the fundamental differences between Web3 consumer application and Web2 to C products? Maybe we can start with Kiko to share some insights.
Yeah, so the last version of our product was completely Web3, so users had to use either a Phantom or Solflare, like a wallet login, because in order for you to participate in this quiz game, you had to burn bonk or purchase credits using Solana. So initially we thought, okay, there's this burn bonk mechanism, people are coming for the money, which that's our understanding of crypto users in a nutshell. There needs to be a financial incentive for you to participate. But what we end up realizing is users were losing money, but they kept using it anyways. But the users that we captured were not the typical Web3 users. Many of them did not use launchpads. They did not know what a prediction market was, even though we had predictive elements. The users were using it as conversation starters with their spouse, with their friends, and understand what people are thinking in the world. So one example is there was a couple in Australia. One of them was chomping every single day. And the questions would be like the examples I gave, like if there's $100 on the street and no one's watching, would you pick it up or not? So he would just like read it out to his girlfriend when they're like hanging out, and she would be like, I think they would, I would choose 80% of people would not do this. And then he was like, get your own Chomp app. I don't want you to tamper with my answer. So that was how he onboarded his girlfriend, and we saw like many such cases. And that made us realize, and at the same time, we didn't have users who wanted the 100x, like wanted the gambling, like the sensation of like excitement from gambling. Their sensation came from discovering something, seeing that other people agreed or disagree with them, understanding who they are as a part of a collective. And we thought that that type of user, they don't all live in crypto, which is why the next version of our product will actually be very much abstracting crypto away, users will Apple Pay and maybe they will like WeChat Pay to buy in-game credits to participate. And only when they redeem the credits back into cash will they discover that this is a crypto product. So to summarize, I would say there's a clear incentive usually for crypto users that ties with monetization, financial incentive, but that also makes it easier to build because you know what they want. They want to get rich. But there is a lot more complexity when it comes to building for consumer apps in Web 2. They want social status, they want to be famous, they want to be validated, they want to get rid of their boredom, they're lonely. These elements exist in Web 3, but once you throw money in there in Web 3, you can solve the distribution problem a lot easier. But in Web 2, I think there's almost a reluctance to get too close to money. At least that's what I'm observing right now.
So how about Gary?
Yeah, I think that one of the biggest, differences in my observation between like Web 2 and Web 3 was that even though I think oftentimes people say like Web 3 is like a speculative kind of industry, I'd like to kind of maybe rebrand it a bit. I would say there's a great willingness to help or want to be a part of the ground floor of something.
Yeah.
And so when people say the words like building in public, when people use the moniker like GM, good morning, right? It basically means that we have this like, as a community, the ever yearning to be early to something. And so what that means is that compared to Web 2, let's say if I came out with like a new IP, a new like animal character, I think it'd be very hard to convince thousands of people around the world to kind of grow this together. But for some reason, like at the end of the day, these are just like animal pictures online, but suddenly you have thousands of people who are literally asking like, how do I help? It's kind of crazy. And like, I think that in this general, when we think about the ethos of blockchain, people say things like public good, collective action, permissionlessness, where like, yeah, I love NVIDIA, I love Apple, but like I don't feel like I'm an employee of there. Like I don't feel like I have any role in growing it. I'm like waiting for the CEO to do cool stuff and grow the business, so like my stocks go higher. But like with Moonbirds or with Pudgies or like any of these kind of NFT projects I've been a part of, we feel like it's a collective response. There's this weird, like, we don't tell them to do this. Like the community is actually naturally thinks it's their responsibility to kind of grow it together alongside us. And so I think that, the responsibility of these projects is not to be like, almost like a one-man team. It's not like, oh, the CEO and the executive team is responsible to drag everybody to riches. But it's like, how do you harness the power of community to not even take responsibility, it's like wield the responsibility they want to take on to grow this together. And like that, I think is like the biggest, most inspirational part, right, of the difference between the two.
So how about Aaron?
Yeah, I think my answer is a combination of Kiko's and Gary's answer. I think TLDR, I think in Web 2, users actually consume, but in Web 3, users actually are owners, right? They're stakeholder of the upside of the brand. Pudgy has so many products, right? We have games, we have content, we have toy plush, physical toys. So I think what I realized is that really the secret of building a Web3 product is really aligning people, right? Aligning the community to the vision, to the mission. So like in Pudgy Penguins, every single month, we do like almost like a shareholder meeting with the core community in Discord. So if you're an NFT holder, you get to attend, you get to ask questions, you get to, in fact, you get to get ideas from people. Fun fact, everyone knows the Walmart story of Pudgy Penguins. I believe, I think the origin story of the Walmart story is that one of the committee member, a holder, they actually deal flow that deal to us, right? So I think these are things that you don't see very common in Web 2. Like you don't see, Web 2 companies getting so close to the community, to the customer base, because they are customer, they aren't community, they aren't your stakeholders. So I think that would be the biggest difference in terms of Web 3 product and Web 2 product. So yeah.
Okay. So we all know that like AI tools is lowering operation costs, and then you change the game, right? You change the competition, and also it changed the productive boundaries. So maybe we want to know how can we incentivize quality over quantity, and then how we can set up the mechanism to identifying the high quality content and how to incentivize them. Yeah, maybe we can start with Selena.
Oh, that's a very good question. Actually, Since AI came deeply into people's lives, so it seems to be all the content is going to be explored every day. And we all know what has happened in the past months or even the past week. In last year, we call it a DS moment, so it's a DeepSeek moment. And this year, we call it SD moment because it's C-dance. So everyone is using C-dance. Like, in our platform, a lot of people upload their, video is, you cannot recognize it's a real one or it's a fake one. No, so actually last year, for our annual review, we just named a topic, is it real or fake? And this topic has been very welcomed by our audiences and our clients. So because it's very hard to recognize, and it will become more and more harder to recognize which is real, which is fake. I'm not sure if everyone has watched the video by Xpeng, Xiaopeng, the CEO of Xiaopeng, Xpeng. When he was on stage, they has a new product, a robot, but the robot is like a humanoid robot. So actually, it is a real robot, but all the audiences, some of the audiences online, some say it's fake. It's a real people, not robot. So actually, they cut the trousers of the humanoid robot to let people see it's a robot. It's not a people. It's not a human being. So it's a kind of iconic at the moment. So what is you said to let the quality over quantity? I think actually it's right. The quantity we can see it every day, but the quality it's hard to find a way. But I think it's a process. So everyone everyone is seeking for the reliable information and the real from the real people. That's a real topic we should all face today.
Okay, Rasper.
Yeah, I mean, there's so much AI slop out there, to be honest, and that is a question that we're constantly contending with at America.fun. You look at Pump Fund, there are thousands of coins launched a day, and a lot of them just have the same AI kind of generated images. It's slop, it's boring. There's a lack of creativity, and if anything, there's just so much information that is out there that it makes it even harder for the average consumer to figure out what isn't slop, what isn't trash. And so at America.fun, one of the things that we have is we just have a higher barrier to entry. If you want to launch a coin, you got to pay a $200 fee, and it's not so significant that people are dissuaded, but at the same time, it stops people who just want to churn and burn and just launch whatever AI slop that comes out. So I don't know. I mean, I think AI can be a really powerful tool, and I'm definitely a big fan of it. But at the same time, I don't want to see on Twitter, and I think if Twitter could do something about this, I don't want to see all this AI content. I don't want to see all the comment sections that's just the same AI kind of imagery. It would be a little bit more exciting, I think, if that wasn't the case. And that's definitely what we're trying to build, obviously, as a launch pad.
So anyone would like to add more? Gary?
I mean, I think that one thing, going back to also link it back to the question of Web 2, Web 3. Is that, especially for these Web3 communities, like I said, the number one thing I hear from our communities is, I want to help, but how do I help? And I think that on the positive side with AI, it empowers people to feel like they can start to build content or kind of put out into the world things that might actually help a project, right? So, whereas, let's say, 5 years ago, people would be so intimidated, I don't know, After Effects, I don't know Final Cut Pro, I can't put out quality content. And in a way, because they care about the brands they want to support, they don't do anything because they're intimidated. But now it's that barrier is lowering, and I think it's getting to the point now of where the challenge is attribution on both sides. It's how do I know the content you're putting in is really creating benefit? Is there some conversion funnel, when I used to work in mobile gaming, do I know a click leads to an install, leads to a conversion? And that's going to be a real game changer, I think, for projects to, again, I mean, probably my employees won't like to hear this, but if a community member is creating content that is outdoing my marketing team, I'm going to comp them way better than my own team. And I would love to see a day when the infrastructure actually can prove this, right? And so this is, I think, also the beauty, the permissionlessness of Web3. It's kind of like an all-out war, like best talent, best contributor wins, right? And my job as the company is to incentivize the people who are putting out the best quality stuff.
Yeah, I definitely agree with that. I think AI is just a tool, right?
Yeah.
You can create slop, you can create great stuff. I think what's missing is a infrastructure to validate and set a standard for the quality of stuff that AI can create. And I think quality is also like a pretty broad term. So like how do you dissect quality and put it into different types of scoring so that there is a way to score and say, this is quality AI content and this is not. So for Chomp, we explicitly incentivize something that we think is more human-like, but maybe AI can replicate. We incentivize honesty. So we have an incentive structure that explicitly asks you to give your honest opinion, and it's okay if what you think is different from what consensus is. And we incentivize that explicitly. So we hope that by doing that, we can tease out more honest opinions. And we think that in a more AI-enabled world, people want to see more honest takes from people instead of like, you know, those that follow the crowd and like those that are agreeing with you just to appease you, which is what sometimes AI are doing now. But maybe with a different incentive structure, they can change that.
So in consumer projects, so what type of application do you believe are the most likely to achieve phenomenal user scale? And then what do you think like are the driving factors behind this? Let's start with Aaron.
Yeah, I think I just want to add on the previous question as well.
Okay,
Yeah, I think
sure.
it's like, you know, I always tell my team that, you know, don't fight the AI. Really use the AI to help in your job. Because I think before, we always want our internal team, our in-house team to create the best content, right? The best idea, the best campaign. But, you know, since we are a very community-first project, we always tell my in-house team that, hey, why not you create framework, you create the prompt library, you help the community to create great UGC, right? And that is how we measure success. Because what we do have is that we have internally come up with a brand Bible of the characters. I think the character, the penguin character, is really well recognized. It has to be constant every single time it's applied to any product or any events. So, you know, this year we sort of do a revision of the brand Bible. We have like a 300 pages long brand Bible. So I think, you know, moving forward, I think the challenge is that how can we work with a lot of the AI tools out there to integrate this brand Bible so that, again, that will amplify content production at scale, right? And it's only going to benefit the character. And when the character has been proliferated at a cost near zero, then, you know, we can have all the free time to think of funnels, right? How do we convert this attention into, you know, monetizable products? So, yeah, and I think, you know, next challenge is how do we create products, right, to really capture this mass consumer market. I don't really have the answer. I think we are still experimenting, but I think fundamentally there's a few first principles that we have to adhere. First, that humans, we have to design for human psychology. So I think we are living in this world where the power is to the people, right? Like just like how when Instagram started, everyone became a photographer, right? Now everyone can become an entrepreneur because you can basically vibe code your way to a product without a dev team. And, you know, I think the pressure now is how do you market? How do you go to market? So, and basically, you know, if there's any mass consumer app that really empower the average person to, you know, go to market, to feel a sense of belonging, to enforce their identity, right? Whether you're a creator or you're an entrepreneur. So all these things are really up for grab. I don't know who's gonna be the winner. I think for us, you know, we are, in the next couple of weeks, we are launching like Pudgy World, which is like an internet hangout place where people can hang out online, talk to different people. It's a very community-focused product, and we have high hopes on that. Hopefully, that could bring in, you know, our tens and millions of users. So again, you know, we'll let you know end of the year how well we do. But I do believe that as a Pudgy Penguins brand, we have to come up with community-first product, and we already have a great funnel online, right? We just need to figure out that middle funnel.
Selena.
I might skip this question.
Okay. Rasper.
What was your question again?
So I mean, like, what do you think? Maybe you can share, like, what's the like consumer application that you like the most?
Oh, I mean, America.fun. That's the easy
Sure,
question.
you can share a little bit about your project too. Like, you really share.
Yeah, I mean, America.fun, I think what is really interesting about it is, obviously, I think on face value, people look at us and they're like, okay, you're just a launch pad. You're just like riding the America hype, which is going on right now. And I think to a certain degree, yes and no, but at the same time, if you think about what we're actually trying to build, we're trying to build a better, safer product than a pump fund or some other crypto launch pad that exists in the space. We want to create a space where people are able to ape tokens and for those tokens to not go to completely zero, right? And if you're able to create a space which is a little bit more curated, and that's kind of what our goal is, to create something that's more curated, then there are naturally going to be less tokens launched, which means there's less choice, and it means that if you look at it, you have less of a chance of your choice going to zero, I guess. So that's kind of what we build, and that's what I'm excited about. That's what I wake up every single day and I'm like, okay, how can we make it a better place for users? How can we improve on what already exists and make it less gambling and more kind of decision making? Yeah, that's why America.fun. Let's go.
Kiko?
The question is, what will make a consumer product scale?
Yeah.
I definitely think sense of belonging is super important. I'm afraid that I painted too bleak of a picture about Web3 and about money driving everything. I still believe that, but I feel like money has created camaraderie in Web3. But maybe in other pockets, maybe for America, right? Loving or hating Trump has created camaraderie. There's always this need to associate or disassociate yourself with something. So if you can create a sense of belonging, either by building a enemy, like a 假想敌, right? Or by building some kind of allegiance, I think that's what will make something go viral. So I think a non-product example is K-pop idols. These people who I was talking to, I used to work at IDEO as a design consultancy, and I was talking to my old boss when I was in Shanghai, and then he was telling me, he was like, by the time a K-pop group launches an album, people are not buying that album because they like the songs. They're buying the album because they love the experience and they think they made this team, right? So how can we create a K-pop idol scale product, and how can we build that sense of camaraderie and belonging in a product? I think that's probably the big topic, the big idea that we should be all thinking about. So having a mascot, right? Having a character people love. We also have a mascot I was showing Gary earlier. That creates endearment right away, and I think that's a easy mode. Well, one of the easy modes, but I think there's many other ways to create brand association, and foster belonging.
Okay, last question, and then, so what advice will you give to the people who is planning to enter Web3 consumer application space? I maybe give to Gary, so he would like to answer this question.
So I would say my one sentence, you have to, if you want to build in the consumer space, you have to enjoy being in pain for a very, very, very long time. Enjoy crying every day and wondering if anyone values you at all.
True.
And but the reality is that what I would say about consumer is that it's simultaneously the most uninvestable category in Web3, but also if you take this space seriously at all, you have to invest in it, because it's uninvestable in the sense that so many of these projects die, right? But then the truth is, if you look at every single cycle, if you look at anything from StepN, Axie Infinity, CryptoKitties, Pudgy Penguins, the legends, always every cycle come from a consumer product, because the one thing, especially this cycle, everyone's like, oh my God, where's the new users or no user? They always come because of consumer applications. But it's kind of there's art and then there's function to it. And so it's you can't just be oh, I just copy some idea I saw that 50 other people did and suddenly a bunch of new people come in. You need to try something very dangerous, very risky, something that every VC is going to reject you over. And then when you're successful, every VC is going to find the 50 copies of you, right, that's going to come after you. And so, like I said, if you want to be a legend, if you want to be a part of the narrative of crypto as it grows, you have to build in consumer, right? So just prepare to cry a lot. Yeah.
Okay, yeah, you and Ho. Thank you, everyone. Thank you.
Thank you.
Thank you.
I've cried a lot.
Hello, everyone. My name is Kevin, and it's a great honor for me to moderate the following session. I think after this, we will have some amazing team from the Solana Accelerator showcasing their projects, and also have the DevRel from Solana Foundation to introduce the recent Solana Bootcamp. So it's my great honor to introduce Mike and Sharon from the Solana Foundation to introduce the recent Solana APAC Bootcamp. Yeah.
Oh, sorry. Can I see the screen? So, but I couldn't see any script. Is it?
The real world assets, gold and silver, to be traded.
Oh, okay. Yeah, it's okay. Sorry.
You can get started if you want.
Oh, okay. Okay, let's get started. Hello, I'm Charing Kim from Solana Foundation. So we will introduce like a bootcamp and incubator guides for the APAC builders today. So I'm Charing Kim from the foundation, and Mike is also from the foundation. So we will cover the how can we get more details about the bootcamp incubator program from the APAC region. So first of all, so most people ask me about in Asia, what channels or approaches can I use to promote my project? So every project needs visibility. So first of all, we have our hackathons and incubators and other programs in the Solana ecosystem. But most of the program are focusing on the outside of the APAC because of the time zone problem and other problems. So currently we have global hackathons and APAC bootcamp at the same time. And I would like to introduce our global hackathons and APAC bootcamp, which is launched on the recently launched. So first one is hackathons. So we have a CoSem agent hackathon. It is CoSem is the official Solana hackathon provider in the Solana ecosystem. So CoSem recently launched the agent hackathon, treating with AI, for making some of the projects in the Solana ecosystem. So you can join via link for the agent hackathon here. And also we have a monolithic mobile hackathon. It's running by license DAO from the Solana mobile team. So it's more than the Solana mobile project hackathon. So you can register via this link, and you can register the concept agent hackathon and the monolithic mobile hackathon at the same time. So you can use AI freely, and you can submit mobile hackathon project to the monolithic mobile hackathon, and you can build everything on Solana using AI with the concept agent hackathon. It's the key major hackathon happening these days. And I would like to introduce our APAC bootcamp. So why APAC bootcamp? Why APAC? So for the APAC builders, there's just 3 barriers for the building something on Solana. First one is time zone. So usually when you register specific hackathon, you have to listen specific lectures in the after the 2 a.m. It is so challenging for us, and it is so challenging getting more detailed feedback and getting more people from the APAC region. So there's just 3 advantages for the APAC bootcamp. First one is time zone. Second one is more detailed feedback, and third one is local communities. So from one-way to two-way moving, and from passive to proactive. The first picture shows when we register for the tropical bootcamp, and second one is we will more focus on the live AMA and with Solana Foundation or the key stakeholders in the ecosystem and the key builders in the ecosystem. So that's the reason why we launched the APAC bootcamp with One Piece Labs, which is a key incubator, which launched the key incubator program in the Solana ecosystem and have a good background in the Solana ecosystem. So this is our page for the Solana APAC bootcamp. So you can register now, and it will be kicked off February 23rd. So you can register right now, and they will cover the 9 languages for the subtitles. And you can join the Discord, and you can get some live feedbacks and live AMA. So we will run 12 live sessions and the AM session. So you can feel free to join, and you can talk with other Solana founders and the Deborah members and other foundation members. So we already invited a bunch of the good people in the Solana ecosystem. So APAC builders can do everything with the Solana APAC bootcamp. So not only engineering, tech. So we will cover the blockchain 101 and Solana 101 and lots of the growth flyer hole. So the reason why we built 3 courses with blockchain 101, Solana 101, and get started as a Solana project and growth flow for the founders is we want to incubate a specific project for a long time. Not introducing how to build on Solana from the tech perspective. We would like to support builders more. Oh, you have to do this if you want to do X on Solana, and you have to do more more incubation thing outside of the tech, and we want to cover everything for the APAC builders. If you're interested in the Solana bootcamp, you can join the Solana bootcamp via this link. And yeah, thank you so much. And next one is Mike, my colleague from the foundation. He will introduce more the Greater China Market incubator program and hackathon. Thank you, Mike.
GM, everyone. I'm Mike. So I cover Greater China region for dev side and tech side. So if you open DeFi Llama or any dashboard you have, that if you rank the application by the revenue, 30-day revenue, you will see that actually half of the top 30 projects are built by Chinese-speaking founders. So we should be confident in ourselves, and we should be proud of ourselves, actually. So no matter it's Hong Kong or Greater China, mainland China, or Singapore, actually, there are lots of very good builders and founders and developers in China. And Solana has seen it all. It's we got the best engineers, we got the smartest founders, and we are pushing it forward. So actually, just as Sherry mentioned, here, our main goal is to further push it forward to help our Chinese-speaking founders or developers or projects to move further. So together with Solar, lots of you already heard of Solar, right? Which is a Chinese-speaking community for Solana. It's by everyone, right? So we designed 3 kind of stuff to help with the founders and builders and developers to grow. So first is a bootcamp. We just finished the series 1 of our Solar Developer Bootcamp, which is a Chinese-speaking bootcamp. I say lots of the graduates are also coming here. So thank you for coming here. And also, very soon will got Solana Bootcamp APAC, which is just Sherry mentioned. And also we have a bunch of hackathons. It's all it's including both global hackathon, which is Colosseum hackathon, right? We also have a bunch of hacker house in different places. This year we got Singapore, Hangzhou, Guangzhou, and Shanghai, and a bunch of places, 6 places. So this year will be in April we also got a bunch of hacker house, and also we got a Chinese-speaking hackathon, an incubator. I will introduce more. This is actually why we are here, right? It's a bunch of a pitch day. So for bootcamp, we just finished the season 1. There are 3 season bootcamp actually. Together we collaborate with 21 developer communities. Some of them are in Web 2, some of them in Web 3, and also thanks to our very big top-tier developer platform to house our content. And also together we collaborate with 21 universities in mainland China and also in Hong Kong and Singapore. And we designed 3 season bootcamps. So one is for about basics. We help to train everybody who are interested in crypto, but maybe they are from Web 2, they may only have basic knowledge about technology, right? So we help to train them to get solid Solana engineering skill set. And also we try to cover the full stack, for them to be qualified to get a job. A second is that we also season 2 is for application building. So it's not just technical, it's also for founders and builders. So we will invite a bunch of top-tier founders from different tracks in the ecosystem, to introduce what their domains and what the latest trend is and how they can, what they are building. So that we help to share, invite them to share some domain knowledge to this maybe product-oriented participants. And also definitely we have technical staff to help to train. So we will hands by hands to teach everyone to build maybe prediction markets or whatever hard is right now. A third is for institutions. That will be a little bit tricky because we will talk about the solutions and challenge facing by institutions these days. And also introduce what the Solana solution is in compliance side, security side, and also the production-ready architecture to help them. Yeah, so if you are interested, you can come here. So actually we just finished season 1. We got 4,000 participants in session 1. And we also got 400 honored graduates from this bootcamp in session 1. So in total, I think there will be a bunch of very good engineers coming out. Some of them will be building a project, some of them will join a company. Yeah, and there are also a bunch of benefits for the honored graduates. You will get direct, exclusive hiring opportunities from our 20 high-quality selected top-tier projects, which are Chinese-speaking. And also we got referral for these participants, graduates, who wanted to apply a job in our Solana job board. And also you can scan the code to see the job opportunity and also the general job opportunity in the internationally, right? So also they got a hardware, lots of things, NFT for airdrop. And we just finished a hackathon with Trends.fun, it's a web coding Chinese-speaking hackathon. We got 150 projects built in public together. And this is our first attempt to help builders to build in public in Twitter. And it went very well. It means that beginners, when they, maybe they know nothing about crypto, but when they got enough training from our bootcamps, they can able to build a good project. Yeah, there's a Twitter link actually. There are a bunch of the projects built. You can see there in the Twitter. And also we host a bunch of hacker house in different places. Usually it's different cities. Each year we got twice. So this year probably in April. So starting from April to May, we got different cities, both in mainland and also Singapore and Hong Kong. And also we got Accelerator Startup Village, which is actually by HackQuest together. This is more general for founders. And also we got Founder House to invite some VC or some big tech, big projects to maybe share some insights about the latest industry. Yeah, and the most important thing is Solana Accelerator. I will let them speak for themselves, and also we will have Kevin to introduce more about this Accelerate. All right, thank you very much for you guys. See ya.
So now I think it's a session for all the amazing startups from Solana Accelerator to pitch. But before that start, I will just do a brief introduction of the Solana Accelerator and some of the partnership between HackerOS and Solana together over the past three years. So our partnership with Solana started back in 2023 when the market was really bare. But we started a lot of new dev initiative here in APAC. So because we really believe APAC is a house of a lot talented developers. We hosted over 20 events together. There were more than 3,000 developers graduated from HackerOS Solana learning track. And we hosted a lot of founders program together, including this one we're hosting right now, Solana Accelerator Cohort 2. And we gained a lot of success from the past cohort as well. So I just want to briefly go over of the past tractions. Yeah, so HackerOS, we started back in 2021 as a developer education platform and hackathon platform. And Solana has been one of our most important partners along the way. And we designed and curated a lot of developer initiative together, including the one that Mike just introduced. Yeah, and we not only developer program, but we also focus on the founders as well, because we truly believe like APAC is a huge market, and we need to curate special programs specifically for the APAC founders. So back in 2025, we launched the first cohort of Solana Accelerator. There were 5 teams admitted into the Solana Accelerator Cohort 1. And they gained a lot of tractions. Like, for example, Unitas, they recently announced their partnership with Binance Wallet, and they will do their TG on Binance Wallet. And also, Typex, they won one of the major prize in the Colosseum Hackathon consumer track. And Polarity, they reached a partnership with Wormhole, and they become one of the Wormhole's most important partner in the APAC area. Yeah, so without further ado, I do want to introduce the 7 teams from the Solana Accelerator Cohort 2. The first one is called XStable. They are a trading platform focusing on precious metal and also RWA. So I want to introduce the team from the XStable team to introduce their projects. Yeah, can we have XStable team to come up? Yeah. While the team is joining, also want to give more info about this cohort as well. So we had a lot of amazing mentors from the ecosystem. For example, like the president of Solana Foundation, Lily, joined as a mentor. We have the growth at Solana Foundation, Yao, and we have the founder of Sonic SVM, Chris, and also founder of Infinite Christian. So we have a lot of people in the Solana ecosystem joined the accelerator as mentor, because I think at Solana, we really believe founders can help founders, and only founders can help founders. So they are mentoring all the future founders in the Solana ecosystem. And actually, the graduates from our last cohort also become a mentor of this cohort as well. So it's really great to see the founders community and founders network is keep expanding here in the APAC, especially in the Mandarin-speaking areas. Yeah. So XStable, if you are ready, let's.
Okay. All right. Hello, everyone. My name is Eddie, and I'm community lead at XStable. Well, before I start, I want to take a brief moment to express our gratitude, me and my team, because we have been working very hard to be here today. So we're feeling so proud to be surrounded by beautiful people like you, and because we've been working very hard to get to here. So thank you so much. Now, over the past few days, we have heard a lot of discussions, conversations about market predictions, stable coins, pay-fi. Well, all of these things are important, but I want to shift the focus slightly and talk about something that Solana is very good at, but almost no one has done well yet. What I'm talking about is bringing the real world assets, including gold and silver, with instant execution, with a very professional trading skill and low barriers to entry. So to understand this matter, trade over than $9 trillion. I can think about it because $9 trillion means that money moves everywhere, trillions moves every day. And not only the big players in this market, not only the big players, not only the hedge funds or asset managers or private equities or managers or private equities or banks. There are more than 5 million traders, individual traders, you and me, retail traders, trade in a range between $700 to $800 billion every day. And importantly, including 30 million retail traders in the speaking Chinese market, putting them among the top tier performing because of their performance. Now, well, before I move to the problems, over the past year, real world assets like gold and silver have increased by 70%. And when I'm talking about gold and silver, we're talking about the most safe and secure world assets. Well, beside the size of the markets and its volume, this market has serious problems. First, the access. 90% of the retail traders, they are effectively shut out of the market because simply they don't meet the licensing or accreditation requirements. So they are automatically forced to trade on other 100, if not 1,000 other centralized platforms. Centralized platforms. And when they are forced automatically to trade in these centralized platforms, that leads us to the second problem, which is the security, the risk. In this centralized platform, there's a lot of risk. For example, fund freezes, a misuse of the user funds, scams. People got their funds stolen, and this is happening every single day in this industry. Okay, well, now you might be asking, why hasn't the centralization solved this? Well, to be honest, there is still no solution for the centralization to solve this problem in the market. Not because the demand is weak, but because to be trading the commodity requires a high risk control. Okay. Beside the problems, this is where Xstable comes in. We built Xstable as a decentralized trading platform focused on rebuilding the on-chain trading ecosystem for precious metals and multi-assets, real-world assets. Okay, real world assets. Now, there are 4 things that describe XStable. First thing, the coverage. In XStable, you can trade the financial instruments, including Forex and spot markets and other financial instruments with low barriers to entry. Secondly, the security. The security, the security, the security. At this point, me and my team, we've put a huge work to this section because we believe that the most important thing in the financial world in general is the security. So in XStable, you are...
The time is up. Yeah.
The time is up? Well, okay, sorry, buddy. I will just introduce the...
yeah, maybe it's 10 seconds, yeah.
Okay, 10 seconds? Okay, ladies and gentlemen, this is the products. I will just have a quick, brief introduction to the products. In XStable, you can have real-time charts, P&L, position, long and short, leverage, and all that. This is just an example of we have selected a gold contract. We have instead execution, and we also get the position get updated immediately.
You have to
so
cut it. Yeah.
Okay, I will just.
No. You have to. Yeah, we have to cut it. Sorry.
Ladies and gentlemen, if you have any questions, you can find our ambassadors at the entrance wearing our uniform. So feel free to stop by, and if you have any questions, we would love to talk to you. That's all. Thank you so much.
Yeah, thanks, XStable team. Next, we'll have Gus from Orbit AI to introduce. It's the first orbital AI cloud on Solana. Yeah, so I want to introduce Gus to introduce their projects.
May I? May I? Yeah, sure. Cannot duplicate? Okay. Hello, everyone. This is Orbit AI team. I'm Gus.
And I'm Suri. So on the December 10th, 2025, we have launched our first AI satellite.
Yeah, with NVIDIA chip inside, and we launched this to build the world's first decentralized orbital AI cloud. We already launched 1 satellite in last year, December, and there will be 3 more satellites this year. And why we are doing this? Yeah. Why we are doing this? Because the Earth is facing very 2 problems. The first one is that the energy war. This is exactly what Elon Musk is doing. So the Earth is resource constrained, and space is resource infinite. So we need to put the AI data centers into the space. And the second one is related with Solana and with crypto, because even decentralized networks also run on centralized cloud providers like AWS. So they are subject to kill switches and the physical damage. That's what we are doing. We are doing the decentralized AI cloud in space. So the first satellite already carried a NVIDIA Jetson Orion into space. And what is solving? Yeah, very simple. So traditional mode, the satellite take very huge photos of videos, and if it's downloaded to the Earth, that it consumes a lot of time. But with AI in the cloud, AI in the satellite, it can compute everything and just give the result to the ground. So it's very cheap and also efficient. And what we are doing in the near future, we will sell the AI computing power to AI giants, to AI labs. And also, we can sell the AI results, like how many Tesla deliveries in Q1 to this year, we can sell all these results to the poly-market or prediction market traders or to hedge funds. So what we are doing right now also for the layer 1 foundations is that we can put a lot of validators or nodes to the space. That's because Earth-based validators are centralized and vulnerable to regulation. And the L1 chains are desperate for geography diversity. So we can run what we call as sky nodes. They will be on our orbit satellites. This is our potential partnership with Solana. We can build the first SVM-powered orbital deeping layer. The main focus is that we can deploy the first Solana Light client on our satellite. And powered by infinite solar energy, it validates block headers and state transitions directly from orbit. This was the reason, because a physical root of trust that operates independently of terrestrial power grids or jurisdictions. Even if ground nodes go offline, the Spacelight node keeps the ledger alive. And how can we do this? Well, that's because our team. We converge aerospace, AI, and capital markets. So I'm Gus. I'm also the chairman of Starlink AI Acquisition Corporation, which is a US-listed SPAC company. And we got over 100 million acquisition fund, focusing in space tech, computing power. And also, we have a lot of scientists and PhDs in related fields. So let's together build the decentralized orbital AI cloud, and together with Solana Foundation. Thank you, guys.
Cool. Thanks so much for the Orbit AI team. And next, want to introduce AI Mode Networks. They are the decentralized version of Open Router and built on Solana. Yeah, so I want to introduce Arthur from AI Mode Network. Yeah, if you want to join. Yeah.
Hello, everyone. I'm Archer, the co-founder and CTO of AMO. We build permissionless access to trustless AI. Think about the most popular AI agent, OpenCloud, recently. How does it access, pay, and trust APIs for all services it needs and build this trust? Current infra is not built for native agents, resulting in two major problems. One is permission problem, who can access, and another is trust problem, can you verify? If you look at this landscape, we categorize current AI infra into 4. Mainstream AI is trusted and permissioned. But we are seeing AI products like open source AI and local LLMs, which moves us towards trustless, and API aggregators moves us towards permissionless. Agentic web requires both. So we must merge these two. So we built the permissionless and trustless AI service. This is where AMO comes in. We bring access trustless AI permissionlessly via our middleware. First, we ensure trustless AI through a decentralized Oracle network. We use the ERC 8004 standard for on-chain reputation and agent identity registry. Second, we enable permissionless access through X402 protocol. Agents use stablecoins in their wallets directly to pay for their services. Finally, we built a unified interface for AI agents. The unified API is built natively for intelligent components to integrate with native agents. Here's our go-to-market strategy. We start from the crypto plus AI market. There are a lot of very fantastic projects like AI, like crypto trading AI agents. But they face some problems like their wallets can't pay APIs and smart contracts can't KYC, or their wallets can't swipe credit cards. From there, we move to uncensored AI, the uncensored AI requirement from Web2 world. They face some problems like DOS bans. These bans kill products, and some models are geo-logged. Then we move on to the agentic web. The agentic web currently cannot perform macro payments, and agents cannot pay agents. So permissionless plus trustless API is the only option. Our goal is to provide B-tensor-level decentralization plus open router level user experience. On one side, we have cloud-native services like Open Router. They have very low latency and have like billions of tokens generated every day. On the other side, we have B-tensor. They are totally decentralized, but they are complex and high friction. So we choose pragmatic decentralization. We bring both the smooth user experience from Open Router and the decentralization from B-tensor. We are already live. We just launched our early beta on Base and Solana in a single node version. We've already integrated a lot of decentralized AI providers, and we are onboarding early customers. We have about more than 3 billion monthly token usage. I'm Archer, the co-founder and CTO. I built this project from scratch, and this is my co-founder and CEO, Kelson. He's based in New York. We founded this project when we were 20. We firmly believe in the agentic future and dedicated to building this layer for the next decade. Thank you for your time. Please check our website and X account.
Yeah, thank you so much, Archer. And thanks, MO Network team. I still remember joining our hackathon back in 2023. So yeah, time is really fast. And next we'll have Pumping Trade. They are a perp trading platform building on top of Solana. So I want to invite Sona to do the presentation.
Okay, hi guys. Yeah, this is Sona from Pumping Exchange, and we want to be pump fund on per track, and this exchange is built for traders and projects. Let's see some data first. This is something about market landscape, and perp DAX actually went viral in 2027, but there is no perp DAX like Solana, like with the high potential TGE, right? So attention and liquidity actually go to some perp DAX on other ecosystem like Hyperliquid and Oster. So that's Bumping want to do. And here are some key challenges faced with us. Like we have custody risk and low liquidity on DEX. And the cost is quite high for retail users and actually not user-friendly. So what are Bumping's innovative solution? And to facilitate capital efficiency, we just developed our portfolio margin system. Users can stake their assets on our platform. Besides, staking assets can be tradable, so users can trade and while earning up to 40% APR. And to satisfy different users' needs, we support 2 trading modes with up to 1,000 leverage. By the way, we offer API service and other service too. And our alpha module is about AI trading. We just analyze the real-time trading indicators and strategies, and we offer pump-up order placements for our users. And our innovative pool design is quite scalable. You can imagine that RW projects can be onboarded with the 0 listing fee, and even they enjoy 30% commission just for their own sustainable self-development. And how Bumping differentiate with the other perp DEX, like we offer high leverage, no rent fee, and no gas fee. We have a scalable liquidity pool framework, and everything is on-chain, so quite transparent. And here are like some milestones we achieved in December. We already achieved around 5 million TVL and over 400 million trading volume. And here are some data from different regions on other world. And why Bumping come here? We are incubated by USA Fund, and we got support from Solana Foundation. And we have quite solid tech team and marketing strategies, both for branding KOLs and trading KOLs. In summary, Bumping is a mass adoption trading engine for users and projects on Solana. Like we have solid tech and product team, which already gets recognized by trading teams all over the world. And we target at permissionless spot and futures trading. Both Web2 and Web3 users are our target audience, and our core team already with the successful co-building projects. So guys, don't forget to follow our Twitter and DM us if you have any questions. And thanks for joining us today. Let's stay tuned with the Bumping.
Thank you so much, Sona from Bumping. So next, I want to introduce RC from Poly Insider Bots. So they are a Poly market aggregator. So I want to introduce RC and his team. Okay. RC. Oh, okay.
我很快。Okay. Hello, everyone. I'm Sean. I'm the founder of Unfun, and I am serial entrepreneur, and I'm always contrarian by nature. So I'm super excited to have the chance to meet all of you in Solana Accelerator. And before my demonstrate and my speech, I just want to talk a small story of myself. This is why I built Unfun Wallet. So about 4 years ago, I'm building another project, and that is non-fungible token trading platform. And while building this platform, fortunately, just for fun and for study, I bought some non-fungible token such as CropPunk and apes. And also, because I am a generative artist, so I became the largest collector, one of the largest collectors in blocks. And I almost have about 200 pieces of blocks. And the total value is about hundreds of Ethereums. This is in 4 years ago. And I can remember the very specifically that about in the summer of the 2021, one day I think I received many offers from other collectors, and almost I accept offer, but I really don't list all my NFTs at that time. And the result is that I have never the chance to sell them after that. Why? I always think that time again and again, because at the time I was busy on moving my room. I was packing my cushions, my sofas, my beds, and all of my items. So I think life is fulfilling with opportunities, but I think it's very hard to say them because I think time is full with haphazard and routine things. So I think we need some assist, co-pilot, to help them to really seize the opportunity of our asset. So this is the reason I built Unfun. Unfun is the first AI native digital wallet in the world. So I just want to show some of the features in our product. This is our product. If you want to send some raw pocket for some people, you can use your chat. You can type send up raw pocket in chat, and our AI-powered terminal will recognize your type and execute the blockchain transaction automatically. And this is another transaction. I can type some buy one Solana of AX, which is our another token, and the AI will automatically to proceed the transaction that you ask AI to execute. So this is our product. This is a digital wallet, the AI by nature. So This is something about our program goals, because the product is just built for the user, just something like myself. I am not a trader, I'm a founder, I'm busy, so I don't really have time to trade. But when I want to buy some assets, when I am work, I will always use the product, something like amplify, because that is an AI native product. So that is why I recommend that product to all of you to try this. Okay, this is all of my speech. Thank you very much.
Okay, thank you, Sean, for the intro of the projects. So now actually we have the Insider Boats team to come up. They are an aggregator for Poly Market, and it's built on Solana. So I want to welcome RC and his team.
School! Yo! Hello. GM everyone, we are insiders.bot, and we are all-in-one prediction market aggregator. So, how is this not working? Oh, it's okay. It works? Okay, yeah. Sure. Yeah. So, prediction market is growing quickly. In the past 4 months, the prediction market size grew for 6 times. The volume is now at $6 billion in weekly. It's going huge, and you can easily tell why. Because first, prediction market is a simple way to trade options. Second, it provides a more flexible way to hedge anything. And thirdly, it's just so easy to be as a touch point for anyone to enter Web3. Fun fact, when I was back in the States, when I asked how anyone, like this freshman, how to get in Web3, the answer is through Poly Market. So prediction market is where people onboard to Web3. But the problem is here. Apparently, around 13 million of visitors towards Poly Market's website, only 95% actually trade. Beyond that, only 70% of people are making money with prediction markets. Furthermore, only 63% of the market have really low liquidity. So there's the value that we failed to capture. And if we quantify it with actual number, is huge. It's a huge value gap that we are here to fill. First, 12 million of users are not trading. Second, 21 million of traders are losing every day. Thirdly, there's 14,000 markets that have low liquidity that are yet to be filled. And we're here to fill that. So how do we do it? We don't make hypotheses. We don't just make up a demand. Instead, we ask. We asked more than 100 people who visit prediction markets, who follow Kalshi and Poly Market on Instagram and X, and who never traded before on why you are not trading. And here is the answer. Onboarding is hard. Different KYC, different platform, different trades. I don't know which platform should I use, what's the best platforms, where I can get the best on. Onboarding is hard, first of all. In a long KYC process, I don't want to go through that. Second thing, getting started is even harder. There are so many markets out there. The current choice available for them to filter, to follow their own strategy is super hard. I cannot find a winning strategy for myself. I go there, I put a trade, I gamble, I lose. And then there's no retention. And that's why 95% of people are not trading. So we need to help people to get that aha moment as soon as possible and help them form their strategy to win easily on prediction market as their aggregator layer. And the solution is aggregation because of 3 things. First, onboarding. You have 1 account right now, and you can trade all markets. Kalshi, Poly Market, Opinion Labs, Limitless, Purple, Predicted, all prediction markets will be supported on our platform very soon. Secondly, in terms of trading, we offer a really flexible solution for you to discover the market you like. You can check smart money.
Insiders in the crowd. Okay, I see a lot of. That's very good. Up, guys. The main thing about this is insiders is the 2 engines that we have. So launching tokens is easy. Launching NFTs is easy. But when you build systems that handle terabytes of data with less than a millisecond worth of injection and filtering and indexing, that's something hard. And that's what we created in insiders.bot. So the first thing is our wallet tracker. Right now, we track around 775,000 wallets with close to 1 billion transactions. All of that, the injection of that data and also filtering is real-time instantly. The second is our transaction APIs. So let's go a little back and discuss why. Why are we doing and what are we doing, right? We started with signals. So we were doing some data analysis, and we were thinking people want to know where the money flows, where the smart money goes towards. Then later on, the users demanded for a copy trading bot. Now we could not use the Polymarket's CLOP client because you are rate limited. So we made our own APIs reading the entire blockchain. That's when we realized there's a minimum delay of 5 seconds and then a maximum of 20 seconds. For a trader, I think so that's a lot. So you can see our product right now. Onboarding made super simple. Instant execution. You can deposit your funds, put some filters, find the signals, look at it, and then go ahead. These are our smart signals also. So you can look at any smart signal and then buy directly from there also. If that was not enough, we have a copy trading bot also. And if the copy trading was not enough, if the speed is not enough, this is our advanced analyzer. So you can check your previous patterns based on whichever wallet you're following and see what is the P&L based on that. Check it wise, category wise. And you can also do paper trading based on if you followed this wallet, how much money could you have made? I think so this is something that not about thinking, but we realize is revolutionary, and that's where most of our users are impressed. A very pressing demand is this. People want to copy trade, but after 1 week, how do you decide did you make money or not? How do you know? Where's the analysis tool? Here it is. Of course. So a couple of people, not naming who, got hacked. So we got very much concerned and then make it secure. Quarter. OK, everything is done. Dropping alpha, go. Cheers. I guess.
Cheers. If you're not yet making money on prediction market,
and you want something juicy,
strong,
scrumptious,
long-lasting profit,
you come to insiders.bot.
Insiders.
Bye-bye.
Cheers. Bye-bye.
Yes, thanks everyone. I just want to wrap up the whole day. I really love the great energy from the audience and also from the insider team. Yeah, so people fly from everywhere from the APAC to join the event, so really thankful. And yeah, really thankful for everyone to stay to the latest part of our event. So yeah, and if you are a builder, welcome to build on Solana and make something only possible on Solana. Yeah, thank you everyone.
Thank you so much for joining us at Solana Accelerate APAC. Next up, Miami. Hope to see you there.